It's only natural to want to relax, unwind, and encourage everyone else on the planet to just fuck right off. It's only natural. Hemptown Naturals. Get yours at hemptownusa.com.
Almost 10 years ago, a novel idea enabled by digital technology offered a new kind of accommodation for travelers.
Realpha's mission is to empower people to invest in real people, real assets, and real moments. The whole tagline, invest in real, really stems from kind of this current moment in time where you have people investing in extremely intangible assets, cryptocurrency and meme stocks.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. Normal, ordinary folks have now access to all the same information as institutional organized capital.
But they're not investing in real assets. Property and real estate is something that people have aspired to own since the beginning of time. And there's this new model, Airbnb and short-term rentals, that's completely disrupting that.
The short-term rental market is a $1.2 trillion global industry. And what we're seeing is the demand is outpacing the supply.
Real estate has been a slow adopter of technology. What we are doing is bringing in futuristic technologies today to a market which is saturated with old technologies.
So we'd like you to join our community and invest with us as a shareholder.
Come and join us at the ground floor in our journey of democratizing real estate asset investment around the world.
Welcome to Going Public. On this season of Going Public, we've uncovered 3 American companies.
You guys have something your competitors don't.
That are putting it all on the line.
This only happens if you get money.
No turning back now.
They need to raise serious capital.
It's go time for everybody.
To take their companies to the next level.
That's a thing to watch for.
We went from 0 to 1 million users. This has been a huge hit.
Yes! We've decided to bypass the venture capitalists and the institutional investors.
To partner with and reward our customers.
We're not into making the richest people in the world even richer.
We are coming directly to retail investors with our Regulation A+ offering.
Giving you the chance to get in on the ground floor.
You want to go fast?
Yeah.
You'll see firsthand what it takes to get their companies ready.
You ready to do this?
There's a lot of work to do. Get our audit done. Get our Reg A application into the SEC.
We believe we set the record from date of filing to date of qualification.
With the help of mentors who've been there.
Working with you on messaging is something I'm really excited about. Taking complicated concepts and turning them into a t-shirt.
The right celebrity partner will change the face of your brand overnight.
What has been Proven's PR strategy? It sounds like we need one.
Then it's time to pitch.
I'm a little nervous.
Are you?
Yes!
Everybody likes to talk about AI, but this is truly unique.
The way that math works out, we think that's going to achieve billion-dollar valuation. You're a hell of a salesman.
And make their case to investors like you.
What can we do with 10 to 25 million when in our past 10 years we've only had 2?
Will Proven's custom skincare tech revolutionize the $155 billion beauty market?
Click to invest.
Will Treble beat the streaming competition and save music for the masses?
Click to invest.
Will Hammett's commitment to quality craftsmanship beat fast fashion?
Click to invest.
It's their journey, but ultimately your decision.
They think we're going to be the next Spotify.
Going Public premieres on entrepreneur.com
October 19th.
Are you an everyday person who loves our community but feels like you can't make an impact simply because you don't have a lot of money? Are you interested in building wealth? To build wealth in our community, we must first build up our Black entrepreneurs. One of the most underestimated investment opportunities is the Black business owner. In traditional markets, most of us are unable to invest in early-stage companies like wealthy families do. Wealthy people buy shares early in a business and participate in the profits if and when the company gains traction. As early investors, they make most of the investment returns. Now, we can do the same. At the 10K Project, we have created an ecosystem where everyday people can invest in Black-owned businesses. Here's how it works. Entrepreneurs from various industries come to our community and pitch their business ideas to us. This is done through what we call a Bet on Black pitch. Investors within the community can listen to the pitch, and each individual person decides if he or she wants to fund that company. And product and service providers can add themselves to our expert directory. Examples include attorneys, accountants, web developers, construction professionals, and others. Individuals with consumer products are also encouraged to add themselves to the directory. If a business or community member is looking for your products or services, they are encouraged to search the directory and reach out to you directly. This is how we circulate the Black dollar longer in our community and how we build wealth together. We want to invite you to become a member of the 10K Project. As a member, you can attend our Bet on Black pitches, enter your business information into our expert directory, access our expert directory to find Black-owned businesses, receive Equity Crowdfunding investor training and resources, learn more about alternative investments during our members-only wealth-building webinars, participate in peer-to-peer wealth-building conversations, and enjoy exclusive content within our Knowledge Center. We have the power to create jobs, profit from our own innovation, circulate the Black dollar in the community through group economics, elevate Black business growth, and build generational wealth. If you want to make a major impact as an investor, then become a member of the 10K Project and join our movement.
Hello, my name is Jose Barrera, and I am the co-founder and CEO of Startup Starter.
And I'm Laurel Scott. I am the co-founder and COO of Startup Starter.
Startup Starter is for people that want to start a business but don't know how. Startup Starter is for the individual that dreams of someday owning something but doesn't have the courage because he doesn't understand that he's capable of.
Startup Starter is opportunity. It's a place where you can get what you need, whether you are a kid that dropped out of high school, college. With Startup Starter, you can come and learn all the things from marketing, from finance. You can learn them at your own pace and actually become your own expert in them because we're providing you with the experts to do it.
I think the pandemic really showed us a lot of, and opened our eyes to a lot of the nuances out there in the world, a lot of things that we're missing.
When the pandemic hit and suddenly business is online and you have to go find the stuff, that's when really the light bulb went up, because it's like, if everything's online and I have to navigate the whole web to figure out what I need, then you suddenly realize that why can't I go to one place? You should have just a single brand to go to that is going to take care of you, no matter what it is that you're trying to build and whatever business you're trying to create. Startup Starter is the most complete resource that we can bring to people when it comes to starting a business. It's the best-in-class education that is affordable and designed for the digital age, cinematic, and watch people that look like you, that feel like you, that are charismatic, that know their stuff, that are teaching you stuff that you actually want to know.
It's the stuff that you not only want to learn, but you need to learn. We're building the next phase of business education to make it accessible to the world.
It's been built from the ground up with people that needed help and with people that were eager and willing to help.
This started all from us saying, how can we bring people together? Because every business is becoming an online business. How can we be a good online business to connect other online businesses in one place?
I've always loved helping people. I got into business not because I wanted to be in business, because people were asking me for help. That's what I like, and at the core, that's what brings me joy. I don't see it as work, I don't see it as business, it's just what I like to do. Startup helps us do that at scale.
I love the idea of helping people while also being able to make a lot of money, writing your own ticket.
We're building it for the dreamers and for the everyday individual that just wants a better life.
Oh, we're just getting started. You're gonna wanna be a part of this. From the ground up, it's something we're proud of, and nothing anybody says can stop us. Yeah, with your help we can grow, and with your help we can go where we've never been before. So dare to dream big, you can only win. Dare to dream bigger, yeah. Dare to dream big, you can only win. Dare to dream bigger, dare to dream bigger. Defying all the odds, don't matter what once was. I'm hustling because I know the future is bright, though I can barely see the steps in front of me. I've got my community and I'm ready for the ride. With your help we can grow, yeah, with your help we can go where we've never been before. So dare to dream big, you can only win. Dare to dream bigger, yeah. Dare to dream big, you can only win. Dare to dream bigger, dare to dream bigger. Plenty of room there at the table, so everybody eats, everybody eats. Plenty of room there at the table, so everybody eats, everybody feasts. Yeah, with your help we can grow. With your help we can go where we've never been before. So dare to dream big, you can only win. Dare to dream bigger, oh. Dare to dream big, you can only win. Dare to dream bigger, dare to dream bigger. Dare to dream bigger. Dare to dream bigger.
Live from Los Angeles, welcome to Day 4 of Equity Crowdfunding Week 2021. I'm Jesla Moyer.
And I'm co-host Darren Marble. And today we have a big topic for you: real estate. It's a $1 trillion opportunity. And in fact, it's one of the most popular categories in the online capital raising industry. It's estimated that of about the $3 billion that will be raised by the end of the year under Reg A+, that almost 70% of that will have gone to real estate issuers. So today you're going to hear from executives including Calvin Cooper, Sarah Hanks, Eitan Butler, and Aaron Mendez.
You had me at trillion, Darren. You're also going to hear from companies like Rialpha, Title III Funds, Issuance, Republic, Rev, and the Dalmar Group.
So don't go anywhere, because it is a $1 trillion day here at Equity Crowdfunding Week. Get ready.
The new era of dreams is upon us. Dreams that defy the constraints of the past and change what we thought possible. Dreams of a bigger future, one that levels the playing field, brings bigger opportunities and better rules. Dreams that redefine the power of community, push the human race forward, and push us to dream bigger. That era is now. Equity Crowdfunding Week. Dare to dream bigger.
Hi everyone, my name is Giri Devanur. I'm the founder and CEO of Rialpha. I want to start by thanking the team of Startup Starter for putting this equity crowdfunding conference. It is very important that the thought leaders and guides in this space, new one like equity crowdfunding, to come together and express their opinions and share their knowledge as we democratize investing and create an equitable future. I came to US in 1991 with just $65 in my pocket. I landed in LA. Obviously, inflation doesn't adjust to that. Over the next 2 decades or so, I have learned how to build companies and scale them, and finally taking it to even NASDAQ. So I took my previous company as CEO of NASDAQ. I took it to NASDAQ in under 3.5 years, starting from May of 2014, ending on listing on NASDAQ in November of 2017. During that period, I learned a lot of things about how do you grow a company, and how do you make sure that people participate in that. During that period, the journey of 0 to 50 million revenue in under 4 years, I got a lot of guidance from my mentor and friend, Dr. Art Langer, from my alma mater, Columbia University, where I did my master's in technology. We came up with a radically different new framework which will help companies, startups to think of how do you get onto NASDAQ. So during the next half an hour to 20 to 30 minutes or so, I will walk you through that framework, how a company which is going through Reg A or like a startup to get onto NASDAQ in the shortest possible period of time. So we did it in under 4. I'm sure a lot of you are smarter than I am. So like you guys can take it faster than me, and probably I will learn from you as well. So when Jobs Act was passed in 2015, Regulation A, and then like over a period of time, last few years, it has become Regulation A plus. That's what the new name, Reg A plus. It has helped regular people to invest, even though if they are non-accredited investors, to get into companies at a very early stage, almost at the ground floor level, to ride the wave. Otherwise, till now, what had happened was investing in high growth companies, whether it is Airbnb itself or Coinbase or Stripe, etc. All these companies, only if you are an ultra rich guy in Silicon Valley, only they had the opportunity to invest in that. And then even the SPAC wave that we have seen has been only for rich individual investors. We believe that with the Regulation A, we will be able to democratize that process. So with that in mind, let us talk about what is the framework that is necessary to take a company public. So we call it as SNSN FTP. So visualize a hexagon with 6 edges and 6 sides. We call it as SN, SN, FT, and P in the middle. So what is this SNSN FTP framework? The first one is strategy, negotiation, then comes sales, networking, finance, and technology. These are the 6 edges of the framework of the hexagon. And right in the middle is P, which is people. These 7 things, which will, if it is executed correctly, will help you to scale your company from Regulation A campaign to becoming a public company on NASDAQ or NYSE. So first, let us talk about strategy itself. Strategy is the core of any objective, whether you are creating a for-profit company or a non-profit company. To achieve any goal, the classic definition of strategy is the direction in which you are going and what resources are you going to throw into that. So, for example, strategy is not only about what you do, it's also about what you are not going to do. For example, Steve Jobs, when he came back to Apple, one of the first things that he did was to axe almost some 140 products that had crept into it. He put a 2x2 matrix and said 2 products for the consumer, 2 products for the companies. That's it. So 4 products, that became classic 2x2 matrix of defining the product. So like that, every company has to be very clear about what is its strategy. A strategy from the perspective of hiring great employees, bringing in the best of the customers, and saying no to some of the worst customers as well, because like all customers may not be your best customers. And finally, bringing in the right kind of investors. So if you can get those 3 blocks and identify who should be on your side, who should not be, then you will be able to build a beautiful organization. There is this old proverb which says, if you chase 2 rabbits, you will catch neither one of them. So you need to figure out which is the rabbit that you are going to go after, so that you put the right strategy, right energy before you move on. Every employee should know in your company, why are they waking up on a Monday morning and being excited to come in and work with you, or now that work from home is kind of a new norm. If they are working from home, can we create that exciting journey? That is part of the core strategy. That's number 1. Number 2 is about negotiation. You might think like, why is negotiation so important in building a startup? Trust me, everything is a negotiation. Whether you are hiring an employee, whether you are working with a customer, whether you are working with a government agency, everything is negotiation. If you have a child or a partner or a wife or a spouse, anything, right? Everything is technically a negotiation. Give and take will happen. So there are various skills where there are hundreds of videos. Harvard has one of those programs on negotiation. I recommend you guys to watch it. great lessons that we learned when we were taking our previous company to NASDAQ was we were negotiating with investors, lawyers, accountants, and so on and so forth. So the skills that like startup founders need to learn is, apart from strategy, the next thing is negotiation. It is so critical, and unfortunately nobody tells or teaches. So only when you are going through the you think you have won in a negotiation, but actually you have lost if you have negotiated with a smarter negotiator than you are. So it is very critical to learn negotiation along with strategy. Third comes sales and marketing. Marketing is a larger framework, but sales is the core part of it. How do you sell it to your customers and employees and investors, right? As founders, a lot of founders think that, oh, sales is a like bad thing, etc., etc. But every great company figures out how to sell. You may not directly sell it. You may use technology to sell, or like CRMs and everything else. Question is, how do you sell? There are two kinds of models. One is the old style of funnel, but companies like HubSpot are suggesting a new model wherein every lead that you get should lead to 4 more leads, and 4 more leads to more customers, and so on and so forth. So if you want to if you want to get $1 million sales to be done, you better know the strategies and the lessons that you need to know how to make that happen. Success in especially crowdfunding, equity crowdfunding, and the Reg A depends on how good are you in terms of sales and marketing. Are we touching the heart and soul of people whom we are making the presentation to, right? So while we are building the awareness campaign and conversion, we need to understand what is the chemical aspect of the touching the heart. That is what will make a sales campaign work. So when I was building my previous company, we had to figure out how to scale to $50 million sales, and we ramped it up so fast, bringing in that too, like we were selling into multi-billion-dollar kind of companies, and we had to figure out what works and what doesn't work. Same thing applies in any company which is going through a Reg A process. Whether somebody is investing a $1,000 or a multi-million-dollar check, for those both of them, there are a variety of skills that you need to learn to raise successfully that kind of money. The fourth part, after strategy, negotiation, sales, is the networking. Networking is very critical. For example, like we initially reached out to our partners at Dalmore. Eaton has been a super connector. He has helped us, connect multiple people. Same thing applies to Dealmaker and various other partners that we have brought in. Everybody adds to each other. I don't know whether you guys have heard of a number called Dunbar's number. You can have 150 direct relationships, and you need to leverage on that. So the power of the network will be directly proportional to the quality of the people that you are bringing in on a regular basis. So in order to be successful in terms of sales or in terms of raising capital, it is all about having great network. It's not about the how, it's about the who, right? So you need to be able to bring in great people into the network, and they will bring in better people, and then like it becomes a flywheel kind of. The more value that you bring to the table, more people will bring value to you as well. The fifth aspect of the framework is finance. Many startup founders don't understand the critical nature of bringing in high caliber CFOs, etc. In order to like take your company from startup mode to a NASDAQ company, one of the critical roles is to have the right quality finance team. Whether like, are they capable of handling FINRA or SEC, NASDAQ itself, and so on and so forth. those conversations are so highly skilled. You should not throw in teams which are not comfortable with that. As a founder, you also should know how to read a 10K, how to read a financial statement, whether it is income statement, balance sheet, cash flow, etc., right? If you are not directly in knowledge of it, at least you should know the basics, so that like if a investor or a potential employee asks you a question, you don't want to be seen as guy who doesn't know, right? So in order to do that, you need to spend time and learn those things in your journey from Reg A to NASDAQ. Finance is really, really critical. Then comes the sixth skill that is necessary in the journey from your Reg A to NASDAQ is the embracing of the technology. Technology is eating the world. Mark Anderson of Anderson Horowitz made the statement, software will eat the world. What is happening is every aspect of business is being eaten by the software. So like you need to be aware of the technology at every level, whether it is right from your website to emails to digital campaigns and CRM and social listening and things like that. And you should be not only like on par with the technology, you should be ahead of the technology, so that innovation will not come and kill. Think of Nokia in 2007. They had 95% of the cell phone market share. 2008, when Steve Jobs announced the Apple iPhone, one of the comments that was made by the team at Nokia was, hey, they don't have any market share because they control 95%. Nokia controlled 95%. In just few years from then on, Nokia had to go through bankruptcy because nobody wanted to buy their product because it was not in tune to the market. Same thing will apply to anybody who is doing a journey from Reg A to NASDAQ. If your product is not technically advanced and you're not keeping abreast with all the other developments that are happening in your space, technology will disrupt. So you need to be on top of the technology in every aspect of your industry. Not only your industry, you need to be aware of who else is jumping in. Apple was not the competition of Nokia at that time. It was Motorola. But where is it today? Same applies to all our businesses as well. So be aware of the technology and the drive, the speed with which it can come and take over a business. It is just incredible. So as you progress from Regulation A to a NASDAQ kind of listing, you need to be aware of the technology advances that are happening. And finally, in our framework, we defined what we call as people. Whether it is strategy, negotiation, sales, networking, finance, technology, all of these finally boils down to the quality of the people. I think it was Steve Jobs who made the statement. The difference between a company of super programmers and average is 30:1. Meaning, if you have one great programmer, he or she will be equivalent to 30 average ones. Imagine that, like if it is happening at one. But in the last few years, during my journey of taking a company to NASDAQ and after that, what I have learned is 30:1 is actually 100:1. If you have a great programmer, great finance person, great marketing person, one is equal to 100 of them, right? Once you let that sink into you, if you have one great person is equal to having 100 average. So for example, like we experimented ourselves in Realpha, wherein we found some of the greatest guys in different parts of the world, and we have seen consistently that one good one is equal to 100 average. So as you like make your journey towards getting listed on NASDAQ, what you need to do is, how do you become a talent magnet so that you can attract better and better people? So there is that saying, right? Like you got to hire slowly but fire fast. If you find somebody which is not going to work, move on very quickly. Do not hold on to wrong people. But once you find your talented team, you really care for them, reward them, empower them, energize them. That way, they will be, thinking about, how to make the mission a success. As like sophisticated companies are now moving into, crowdfunding and, like equity, etc., it becomes an imperative that we bring in better and better quality people into our companies. Only then one will be able to transition from a Regulation A offering to a NASDAQ offering. The speed of that, the transition is just enormous. And any company can now raise up to 75 million. And with that, one will be able to get onto NASDAQ very easily, right? Crowdfunding over the last decade or so, half a decade or so, has transitioned from like doing almost little things like giving away some t-shirts and reduced price and all those things. They were nice. Now it has become a mainstream, like a movement kind of, wherein you are giving access to people who never had access to equity in the companies that are disrupting an industry. What we believe with this framework of how to scale a company from nothing to NASDAQ. By the way, that was the title of my book, Nothing to NASDAQ. Probably the next one will be Reg A to NASDAQ kind of book. How do we make sure that we attract the right people, the brightest talent, and then do those other 6: strategy, negotiation, sales, networking, finance, and technology. These 6, along with the right people, teams that you build, will help you to go to NASDAQ in the fastest way possible. Thank you very much for listening to my talk. If you have any questions, shoot me an email or like connect with me on LinkedIn, Giri Devanur, giri.devanur@realpha.com. Thank you all.
Almost 10 years ago, a novel idea enabled by digital technology offered a new kind of accommodation for travelers.
Realpha's mission is to empower people to invest in real people, real assets, and real moments. The whole tagline, invest in real, really stems from kind of this current moment in time where you have people investing in extremely intangible assets, cryptocurrency and meme stocks.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. Normal, ordinary folks have now access to all the same information as institutional organized capital.
But they're not investing in real assets. Property and real estate is something that people have aspired to own since the beginning of time. And there's this new model, Airbnb and short-term rentals, that's completely disrupting that.
The short-term rental market is a $1.2 trillion global industry. And what we're seeing is the demand is outpacing the supply.
Real estate has been a slow adopter of technology. What we are doing is bringing in futuristic technologies today to a market which is saturated with old technologies.
So we'd like you to join our community and invest with us as a shareholder.
Come and join us at the ground floor in our journey of democratizing real estate asset investment around the world.
Until recently, only millionaires with connections were allowed to invest in growing companies and startups. But not anymore. The Jumpstart Our Business Startups Act made it possible for everyone to invest in the next e-commerce company, travel service, entertainment startup, or transportation disruptor. At Title3Funds.com, we revere startups for their innovation, vision, and unflinching drive to succeed. They shape the world around us and influence our communities on a daily basis. They dream big. They make calculated decisions. They turn ideas into opportunities. Now, no matter how much or how little money you have, you can invest in businesses that you believe in. At Title3Funds.com, we offer a unique approach to equity crowdfunding. We focus on quality over quantity, thoroughly screening to find businesses we believe in, vetting company financials, goals, and future plans to provide curated, highly investable companies. As an investor, you'll be able to research growing companies and startups that align with your passions. Join us today.
Good morning, everyone, and welcome to this panel. I'm very excited to be here today. It's been a rough week, but I'm glad that we're all here today to have this very, very important conversation. My name is Ruth Hedges, and I am one of the original gangsters, the OGs of Equity Crowdfunding. In a decade ago, actually, I went to Congress with a group of people with the original draft called the Startup Exemption of Title III 4A6 and got it passed through Congress. I've spent the past decade trying to educate people around the world, service providers, funding portals, lawyers, accountants, just about everyone. I produced the Global Crowdfunding Convention for 6 years in Las Vegas, and people came from 25 countries. So I'm very excited that Startup Starter is continuing my work to help bring information to the public about how important this type of raising capital is. Today with us on this call, we have Calvin Cooper, Cherie Warwick, and Sylvia Ma. So why don't we go through, Sylvia, why don't you start and introduce yourself?
Wonderful. Thank you so much, Ruth, for walking us through your journey. It's so impressive. So wonderful to be part of this panel. So I'm Dr. Sylvia Ma, and I'm one of the founding partners at Ad Astra Ventures. We're a VC fund and firm that is run by 3 venture partners. So it's not a bunch of LPs, 3 venture partners, Allison Longpatine, Vidya Dinamani, and myself. We started this about 3 years ago when we realized that some of our portfolios did not have enough women on the leadership team. I personally have had 65 plus companies in my portfolio, ranging the last 12 years. I only invest in female-led businesses and founders of color, period. It's a better business decision, in my opinion. That's what this panel is all about. So about 3 years ago, Ad Astra was formed because my partners said, wow, Sylvia's doing this, but we don't have any female founders in our portfolio. Why is that? And so we really looked introspectively and said, what's the bias that we have as female founders, female funders and investors on the ecosystem, and what actually allows founders to actually succeed in their fundraising, and what are the biases out there that does not allow them to succeed? So over the last 12 years also, I've run different accelerators, founded Stella Labs, which is a business accelerator for female entrepreneurs. I've started Stella Angels, which is an angel group for women angel investors to invest in women founders. And also on the investment committee of Next Wave Impact Fund, which was a global fund of women, about 88 LPs and 12 investment committee members. And we only invested in impact-driven companies with some diversity in the leadership team. So I've been in the industry for a while, super excited to be here with our panelists to talk about inequities. And I'll pass it on to you, Ruth, to introduce the next person.
Wonderful. And sitting next to you is Jose Barrera, the CEO of Startup Starter and the co-producer of this week of Equity Crowdfunding. Tell us about yourself and why you guys decided to do this.
Good morning. Well, tough act to follow. Hedges, hands, okay. Yeah, my name is Jose Barrera. I'm the CEO of Startup Starter and the co-founder. Why we started this, we're an online business education platform. There's a lot of education in the world. But there isn't just anything just for business where I can go get started on everything that I need. There's a lot of guru platforms that will sell you a package that's very expensive for 2 weeks, but not anything you can just go to continuous learning over time. I come from the military. I've been in the ground with many different companies, and from someone with my background, I'm an immigrant from Colombia at 13 years old. It's just a different game to play, right? You don't have the same opportunities. And for me, it's worked out, but it hasn't been an easy journey. So we always wanted to make it, okay, how do we take this kind of game of playing in tech and having to network and meet people and learn? And, it's so taken for granted by a lot of people, and it's so accepted that it should be difficult. Like, I've sat with the head of many large VC funds, and they literally tell me, like, yeah, I like my founders to struggle and go through this. And that's just the way people see it. I've had a startup that failed before, and to me, it failed because we just didn't have access to knowledge or people to tell us. Now, of course, we have a lot more education, but our goal is to continue that and make education affordable for all. So actually, our model is retail. We don't want it so expensive. We want to make sure that, hey, can we make this affordable? That's why for this event, it's free for everyone. The last time that we did a conference was also free, and it was education, no code. So our goal is to democratize entrepreneurship and truly make it affordable for everyone, no matter where you are.
Awesome. Thank you so much. And Cherie, please introduce yourself.
Good morning, Ruth and everybody here. My name is Cherie of the 10K Project. We are the largest community of Black investors who actively fund Black-owned businesses through the Equity Crowdfunding model. We have a little under 2,000 investors, and I'm here today to talk with everyone with regards to this very important topic.
Awesome. Calvin Cooper.
Good morning, everyone. Thanks so much for being with us today. I'm Calvin. I'm the co-founder and CEO of Rove, and we expand access and opportunity for everyone to invest in and own the places we live, work, and play. You can think of Rove kind of like the Robinhood for real estate, or like a Reddit, but with an invest button, where people come together, build communities, follow sponsors and property owners, back projects that inspire them. But essentially, we believe that everyone should have access and opportunity to build wealth in our communities, because why should rich people be the only ones to own the properties that define our cities? And so that's what we're addressing. And this is an important topic today that we're tackling around access to capital. It's so important, something that I've studied over the past 10 years, published research around this topic. But venture capital has had an outsized impact on our economy over the past several decades. If you think about the fact that venture capital represents a fraction of a % of our GDP, but venture-backed companies account for about 2/3 of the public market cap of companies in our public markets. It's astronomical how much wealth is being created. But as we all know, women, minority-owned founders are disproportionately not raising capital and having access to these opportunities. So excited to be with you here today to talk about it.
Awesome. So we're going to talk about, we're all aware of these problems. Unfortunately, the general public is not aware of how the level of access to capital is so unequal for women and minorities. America is the land of equal opportunity, and it's not delivering on its promise for the 90% that finds themselves on the wrong side of the ever-widening wealth gap. In fact, the United States has a level of wealth inequality between the rich and poor that is larger than any other major developed country. And that's pretty stunning. According to the National Bureau of Economic Research, the richest 5% of Americans own 2/3 of all the wealth in the United States. So that means the rest of us own, 95% of us own 1/3. Inequality has also cost the United States economy $23 trillion over the last 30 years. Give money to a rich person and they'll hoard it in an offshore tax haven. Give money to a working class person and they'll spend it on things they need. They'll invest money in a startup and they can change the world. So my question is, when it's so obvious that inequality is not working for the majority of Americans, and especially underrepresented people, why does it continue to get worse? Let's go down the panel and let everyone give us their thoughts on this. I'll start with Calvin, and I'll go the other way this time. Still, Calvin, why don't you give us your thoughts about this?
Yeah, I mean, so there are many issues, but first, I don't know. So one, I don't really agree with the premise that rich people are just gonna hoard money in a tax havens. There's a lot that happens when smart people come together and put money to work, investing in commercialization. So I really like to focus more on lifting the ceiling and raising the floor, not necessarily thinking that. Those two are mutually exclusive. And so I think there are many issues. One, there's systemic issues. A good analogy we just saw play out with Big Brother. Some of you all may watch the show. It's a reality TV show that's been airing for 21 years, right? And in those years, a Black person had never won Big Brother. And for those who aren't familiar, it's very democratic, right? You vote people in and out of the out of the house. It's supposed to be a meritocracy. Everybody can compete weekly to get veto rights and other privileges. But there are no rules. There weren't rules that Black people couldn't win this show, right? Nobody was like, Black people can't win Big Brother. But in this meritocracy that's also democratic, a Black person never won, right? So what is that? There's something at play there that's systemic. And how did we overcome that? This year, there were 6 people in an alliance that came together. In the show, you can build alliances. And they said, we're going to work together. We're going to pool our resources, which are our votes and our ingenuity and creativity and our ability to compete in these challenges. And we're going to make sure that we all make it and succeed. And then at the end, we will have our first Black winner, which we did, Xavier, of Big Brother. And so the lesson there, it's kind of a great analogy for what's happening in the market with inequality and how to overcome it. One, just because on the surface it's a meritocracy and democratic doesn't mean that the outcomes will be equitable and fair. And two, how do we overcome it? By pooling our resources and coming together. And that's what is so important about this crowdfunding movement is it allows more of us. So the alliance in Big Brother was called the Cookout. So crowdfunding allows more of us to build our own cookouts so that we can succeed.
Okay. Cherie?
Okay, so I have so much to say, but I'm going to distill it into 4 major things. Number one is, and I'm going to speak from a Black person's point of view with regards to this thing. It is that we have had a lot of disappointments in this country. We built Black Wall Street, it was burned down. We try to march for freedom, dogs are sicked on us. We try to do something in the 80s to build our Black banks. The rules are not applied to us properly. So a part of it is that some of us are like, every time we try something, it never works out. So why should we think 2021 is going to be any different? And that's a belief on our end that only I think we internally can fix. So number 2 is that change comes from the ground up as well. Within our community, I'll just speak about our community specifically. A lot of us are expecting our leaders from the Congressional Black Caucus to come and save us. We're expecting LeBron and Beyonce and Jay-Z to come and save us. I don't believe that. I believe that change really does need to come from the ground up. The third thing is there are a lot of programs that are out there that can assist us. However, most of us don't know about these programs, or if we know about them, we don't leverage them appropriately. So I do think that there is a lot of education and access to information that we need. And that cannot, unfortunately, come from the top down. That needs to come from people being on the streets with others, whether it's the, StreamYard streets, the YouTube streets, et cetera, or, our physical locations, telling each other about these types of opportunities and helping each other navigate these systems. And then, of course, we do need alliances as well with, other ethnicities, in order to help lift all boats. I like what Calvin said about, raising the floor, because I do think that that is important as well. So that's my comment with regards to that.
Thank you. So, Jose.
Yeah. For me, I agree with everything you guys have said. And to me, it's economics. I think if anything, last year proved us that no matter what wrench you throw into the system, you can't stop economics. And unregulated capitalism is going to continue this way, no matter what. The rich will get richer, the poor will stay poor. If you have more money to lobby people, they're going to listen to you. If you don't, then they're not. And this has proven the same for years. I mean, the decline of societies at this scale is predictable realistically, and it has happened so many different times. So it's just simply a machine that if you can't stop it, you have to find a way around it. To me, is things like what Calvin is doing is just phenomenal, because I think that's the solution. If you can't change the game, then you have to play by the rules. How do you come together to actually, be able to have a chance, right? If we understand, okay, well, if this is how it is, and no matter what we try, just trying to complain or trying to just have our voices heard, we cannot truly change anything, then okay, then how do we play by the games, by the rules of the game and actually do something? And that's why I think doing, what Calvin is doing, Alpha, what we're trying to do, actually trying to help people have a chance is imperative, right? And of course, coming together, if we don't come together, then it's not going to change, because people like people that feel like us, that look like us, right? So I don't think that necessarily is that there's discrimination perhaps because it's intended. It's just something that people just intuitively do. So if you're not going to be hurt by other people, then the best thing we can do is come together, right? And create the solutions and actually, okay, let's play by the rules of the game, but let's do it in a way that it plays to our advantage, that can actually help us out. So that's my thought.
Silva?
Yeah, thanks, Jose, so much. I had to say that it's like a Colombiano and a Venezolana sitting next to each other. I didn't know that, so that's awesome. I just had to say that. I've been wanting to say that. So as an immigrant as well, and as a woman, I'm going to take that gender lens perspective. And, having communities come together that are like-minded is so valuable, right? We've seen over the last 2 years, the intersectionality of race and gender has come to the surface. So of course, rising tide lifts all boats, but also realizing that there is this intersectionality, that sometimes that pendulum goes one way and then the other way, but the democratization of different platforms and different biases or VC or angel groups or equity crowdfunding, those are the things that kind of allow us to break through, right? Break through the noise, or break through whatever bias or whatever data is already out there. So just taking the gender lens investor piece is that probably everybody knows 2% of venture capital funding goes to women. And of course, below 1% goes to Black women and Latina women. Now, to change that, it's not just one VC, it's not just having one woman at the table. That actually increases the amount of funding going to female founders, but it even makes it a huge difference when there's 2, when there's 3, when there's a community of VCs and investors who are talking to each other, who are sharing deals. That network, we've talked about that already, of that network that we didn't have before. Now we're creating the new jungle gym. It's not a ladder, it's that jungle gym. So that one VC that finally made it like 10 years ago, she's making an impact on the community. We already talked about, that community feel, that when a woman gains capital or she activates her wealth, she impacts her community in multiple different ways. So I think that that's something that, whenever I speak to an aspiring female angel investor who might have been a lawyer for a long time, she's never been asked, how do you activate your wealth? She's like, what? oh, stock market. I'm like, well, what about startups? What about equity crowdfunding? What about a startup that you know that you've actually mentored along the way? Oh, I can. I'm like, yes, you can. So that wealth conversation is something that she's never had because she's like, oh, it's my husband. Even if she's educated, right? Even if she's, and I mean, we're not even touching onto the women who are not lawyers, right? Who have like just, been, pedal to the metal and created, let's say, entrepreneurial success stories. And they don't even know that they can invest in somebody else. They do it, but they're like, oh, I'm an investor. What else can I do? Right. Like they light up, right? And that's the exciting part of building this new jungle gym, democratizing things, because those that did not ever have that opportunity to even talk about it, they understand now that they have the power of the purse. They can buy and invest in startups. That's what I'm seeing. And it takes one woman at a time, one intersectional woman of like being the woman who, like for me, I'm Latina, I'm Italian. My husband is a Chi-Mexican. I have 3 children, special needs child, and I'm a PhD scientist who became an investor, like completely like where have I come from, right? But empowering other people to really rise up and activate their capital, activate their networks, and activate other founders who are need that funding and need that support. So and I'm done.
Awesome.
Thanks, Ruth.
So we're taking a different approach to this. Of all of the Hispanic-owned businesses in the United States, only 3% of them do more than $1 million. Of all the women-owned businesses in the United States, 80% of them do less than $100,000. That means that none of these groups are ever going to be in line for venture capital. They're never going to be considered for access to capital from angels. We need to spend time helping them grow and scale their businesses, because it's unfair that all of this business, we're trillions and trillions and trillions of dollar economy in this country, that such a small percentage go to women and minorities. So what we're doing at Rise Up Crowdfunding is we're working with corporations and organizations, and we are going to help them raise capital so that they can be more, so that they can qualify for the big contracts, the supply diversity contracts. That's what we're doing at Rise Up Crowdfunding. But we're also requiring that the companies that raise capital on our platform, that they pay a living wage, because this is the other problem we're not talking about. The idea that people are going to have money to crowdfund with and then own a piece of a great company or own property when they're not even making a living wage is never going to happen. Generational wealth has also changed. So 5 years ago, the majority of people that had generational wealth got it because they inherited it. Today, it's now if you invested in a startup. Well, who's investing in startups? Wealthy people, unless they're crowdfunding. Last year, when the government was handing out all this money, did they say, if you don't need to invest all of it, did they tell any of us, hey, go look into equity crowdfunding, go help support a startup and create jobs? Nobody ever said that. So it's going to take a public, private, and government effort. We're all going to have to get into the ocean and push this boat. It's not going to happen with just an individual effort on our part. When the government sends out all that money, they need to have that. I mean, this is a law that was signed into law by the President of the United States. And I don't know how many of you have ever read the Jobs Act, but in the Jobs Act, it says that the SBA is required to educate. And they're not doing a good job of it. SCORE, SBDC, I mean, federally funded colleges and universities should all have a course in equity crowdfunding. There's just so many ways that we could be pushing this much more aggressively. And unfortunately, we're not. But I'm really happy that you guys are all doing your part, because it is going to take a village. So our next question is, let's talk about women. Women launch 1,000 new companies every day. Female-owned businesses employ 9 million people. They generate $1.6 trillion a year, and they grow 5 times the national average. Our future depends on their ability to access capital using equity crowdfunding. In 2019, female-owned founded companies raised 3%, as we talked before, venture, despite owning 38% of the businesses in this country. Black women founders accounted for only 0.02% of venture funding. In 2019, startups with female CEOs accounted for 13.5% of all VC investments. So then why do women only receive 3% of venture capital and minority women even less? Why do you think that's a thing? I mean, we have women are launching businesses 1,000, like there's so much innovation and creativity being developed and revenue by women-owned businesses. Why are they not being considered for venture funding? Cherie, you want to go first?
Yes, please. So I've spoken with quite a few entrepreneurs, both genders, and there's a couple of things that's happening in these meetings with these venture capitalists and some of the well-known and established private investors. Number one is that they are being told that we haven't seen a Black person build a billion-dollar business before. And when you study venture capitalists and how they invest, they don't like to be the first ones to ever try to do something. So with Black women, they're getting this a lot. And I imagine with other women, they're getting this a lot too. That, we've never seen anyone do it before, so we don't want to be the first to venture on this. But, once one of you does it, then all of a sudden the money will start raining down. And sometimes it's not one, sometimes it's more than one. There are some unfair practices as well. I spoke with another entrepreneur who told me that he went in and he spoke with a VC. He has revenue coming into his company. I know this was about women, but this is, I think, the same across the board. He has revenue coming into his company as a minority-owned business, but they decided to fund another company by a white male who does not have any revenues because they trust that other entrepreneur more than they trusted him, even though he has a revenue generating product. So what I'm saying is that some of the rules that we're being told are not being practiced for us. I will say, as somebody who writes business plans and helps companies raise capital, that if our counterparts need to speak to 10 people in order to get the funding, we as women and minorities need to speak to 30 to 50. It's not fair, but one of the things that I try to do as I'm talking to people is prepare them for the unfairness and prepare them for it's going to take longer. You're going to have to produce more due diligence documents. You're just going to have to do more in order to get the funding that you're looking for and to be prepared for that. And as women, I know you said you have, 5 kids, 3 kids, you have a lot going on, but your time is limited. So are you going to spend 5 additional, 5 times your time trying to get capital, or are you just going to say, you know what, screw it, I'm just going to bootstrap it? And these are the conversations I think that women are having. And, we need to fight on the front of equity with these VCs and angel investors. We also need to start building communities of women who want to actively fund other female businesses. And we need to prepare our female entrepreneurs for the whole capital raising process. So that is, what I wanted to say with regards to that.
Awesome. Calvin?
Yeah, so I think about it like conversion rates a lot of times. Yeah, absolutely. Being Black, gay, founder, maybe my conversion rate might be a little lower than somebody who's a straight white male who went to Yale, right? But I really don't like to think about my struggle is harder than the next person's struggle kind of mindset, because then, it just becomes too much to overcome. And what I noticed when I was in venture is that the vast majority of companies you talk to, you've got to turn down And sometimes it's not about revenue. Like, in my time in venture, not once did a founder ask me like how venture capitalists make money and succeed. And that's regardless of ethnicity or gender or anything. But oftentimes people are just like, I want to pitch you and get money, right? With no regard for, is it a good fit for this firm, for this partner, for this investment strategy? And there are many different ways to raise money, and capital is a commodity, to be honest. There's so much capital out there. And if you have a fundable business and you pitch 100 people with the means and interest to fund what you do, you will raise the money. That's it. So, let's not live too much in the gaps. Let's live in the gains, because we live in America. This is like still the greatest country on earth to start a business and be an entrepreneur. People come here every day. Man, when I talk to immigrants, I'm so inspired. What they go through just to get to where we are born is just insane. And if you think about the ability to take an idea and a pitch deck and raise $10 million like we did on a dream, it's just amazing. No time in history was that possible. And so I think, anybody watching, I wouldn't go too deep into like what is my gender, ethnicity, these barriers that might cause me not to.
But Calvin, I really have to interrupt you because I think you're missing the point of the question. Why do women only receive 3% of venture capital and minority women receive less? That's a fact. That's not something
it's
like
a fact.
hypothetical.
I know it's a fact. What I'm trying to say is, let's overcome it. Let's not live in the gap. And the way to overcome that is to understand the other reasons why. So a lot of times people aren't given access to the same knowledge of what what venture capitalists are investing in. And so if you live in the game, we would skate to where the puck is going. There are sectors where there isn't a disparity gap yet, because the playbook's being written right now. There's no pattern match to match like in crypto or DeFi. And so if you skate to that room, that's where the next disparity gap is being created, and we should be there. And that's kind of the freedom of not thinking about just living in the gaps and living in the gains, is skating to where the puck is going.
Silva?
I love that. I'm always take an abundance mindset. Love that you said that, Calvin. And I love also the piece of understanding that the entrepreneurs, we are all kind of mentors and advisors. I already know that, right? Of so many entrepreneurs, allowing them to understand how do they neutralize bias in the room. So I know, Ruth, that those numbers are horrible, right? We need to do something about it now, right? Yeah. And there's a lot of women who are doing it. It just takes time. I know when I did my TEDx talk, my coach said, because I said, I want to get to even 50% representation of women on the entrepreneur side and 50% representation of investors investing in companies on the investor side. He goes, you're never going to get there in your lifetime. Now think about that when you do your TED talk. I'm like, whoa, wait, it's going to happen, right? He goes, well, maybe it doesn't. I'm like, whoa, like, wow. So I really had to think about this. So of course, pattern recognition is one thing, right? Of nobody is really seeing that successful Black founder making so much revenue. That pattern recognition of who's come in and they can answer the right questions. You brought up also, Calvin, of where they come from, universities, also pattern recognition. All of that plays a part in the equation of the venture capital showing up and having all of those biases. Now, what an entrepreneur can do in the room, and this is all based on science because I am a scientist, I love data, it's promotion versus prevention focused questions. So even if you just take that data set of in venture capitalists ask more prevention focused questions to women, as opposed to men. Promotion means like, how big is your market? Prevention is how are you going to prevent the downside of your business? Do you see how those are very two different questions? If the entrepreneur is aware of those questions, she or he can answer in a promotion focused way or go down the rabbit hole and answer in a prevention focused way. Now, people have done research on how much is that gap. I love the gap and the gains, right? If you as an entrepreneur answer in a promotion focused way, if you receive whatever question that you receive, actually in the whole scheme of things, you can gain $80,000 more of funding by just the questions the answers that you give based on the questions that you receive. You see how that changes those micro conversations in the room. Now I know, Ruth, you want to go macro, so I'll go macro as well. I'm going macro and micro.
Okay.
And then the macro piece is at Astra Ventures, and of course myself in the last 12 years, I really want to get more women investors writing checks, period. That's what's going to help. We know also data-driven, a McKinsey report says that female investors invest 2 times as much in a female entrepreneur than any other entrepreneur. Now, so how do we change this? How do we increase that macro number? Get more women to invest. And then we think about crowdfunding. So crowdfunding is like revolutionary for women because they said, oh, I can have a smaller check size. I can write a smaller check. I can actually invest in that entrepreneur. It democratizes how you feel about investing in that startup. And you start there, and then you go into, let's say a startup founder that you go through an SPV, that's a special purpose vehicle, or an angel group or anything like that. So it's that those levels that come up little by little by little to make that macro change. So that's my 2 cents. I don't know if you had anything to add.
It's a combination of everything. So
yeah.
I think I can address everyone here. I think the women investing, it's key. Realistically, it has been a male game for such a long time. Women owning business and really taking charge is very new in the history of humanity. So it takes women to truly change this because, as I said before, people like people that look like us, that feel like us, and trying to pitch to a male, it's just a different conversation, right? Men are, look, for the past week, I've been going to bed at 3 a.m, waking up at 6 a.m, right? I'm military trained. To me, this is like almost fun. Like I can do that, right? I cannot expect that of my wife, but as a male, it's like, okay, you're just encouraged to fight. You're just going to keep on doing it. You're going to hustle more. That's why like males tend to like get more promotions because they also just go and ask. They try to just like negotiate. So if it's just an unfair game to have, if you're consistently going to have to play against men. So if having women is going to actually change the rules for women, which is very much key. Second part is knowledge. So to address Calvin, it's when you're in VC, it's just a different game, and you see it from a different perspective. But if you're not in it, and if you don't know what people want, if you don't know how to approach them, if you don't know these companies, if you don't know how to play the game, it's just such a difficult journey, right? When you were just in a company that has revenue, I see it all the time. Like anytime that we put a deck together, it's disheartening to us. I don't want to just keep on doing this all the time. And we just, thankfully, every time we do something, or we try to think about getting money, the company just grows by itself, and we were able to skip it altogether. But that's just usually the way that it goes. It's like, okay, if, I've seen companies that get funded based on an idea because the founder is trusted. Oh, he's done it before, or it's a good sector. You went to the right school. The algorithm is going to play better in your favor than it's going to play against somebody else because you're doing something. Oh, it's revolutionary. It's really cool, but I don't know you. You didn't go to a great school. It's just different, right? So part of it is knowledge. If you know the rules, then you can play the game a lot better. And part of it is, just women changes the game for women so that now it's not as difficult. Women will just be more understanding, and they'll be able to see that, and they don't have the same rules as men will have to say, okay, yeah, you're worthy of a check. So that's my 2 cents on it.
I wanted
Oh,
can I just add one thing, Charisse? I wanted to grab what you said and what you said a little bit. Is that one thing is that we've talked about trust a lot. I always say trust is the most valuable currency in the startup space. So as women, we are very much more relational than transactional. Right. So sometimes people say, well, the relational place, oh, you're much more nicer, you're relational, you're very nurturing and all that stuff. Or you say, I'm relational and I can build better trust.
Right.
Aha, that's changing the game, right? I love that piece, right? I talk to my entrepreneurs all the time about that. So that's just something to kind of flip it at a micro level. I think that Charisse, you kind of alluded to that a little bit. So I wanted to know how you felt about that, because that trust piece is super, super important. And us as women, we have strengths that historically have been kind of undervalued. Hey, flip it. Say, hey, that is actually a value. Let me lean into that so that I can meet with that investor who is values aligned and who, let's say, invests in zebras. There's a lot of investors that are not VCs. I mean, they're VCs, but they're not. They're more zebra VCs. And go after them, right? Go after them, talk to them. And then they'll be like, yes, write a check. So Charisse, I would love to know about what you are thinking about.
Yeah, look, I absolutely agree with you. I think that every entrepreneur has their strengths, and you got to lean into those strengths, whether you're an immigrant, whether you're female, whether you're a parent, anything like that. The other thing, and this is an anecdotal thing, I'd love to see some real stats on this, but Shark Tank, Kevin O'Leary has been saying for the past few years now that, it was several years after Shark Tank had its run and things like that, that he did an analysis of his portfolio, and he discovered that the businesses that were the most successful were female-led businesses. He said that it wasn't the top business, but he never lost money from a female-led business. All of his female-led businesses actually gave him a return. And one of the things he said, and I think women can lean into this as well if you're talking to the right person, but one of the things that Kevin said was females tend to, going back to relationships, they tend to be more collaborative in their decision making. So they tend not to go for the straight home run, but they'll often hit those doubles and triples, if you're thinking the baseball analogy. And because of that, they tend to be the better risk. So again, I think that there's probably some research done on this as well with regards to female-led businesses, but leaning in with that way for that transactional person, you're able to turn it around as well, where they're able to think, oh, well, that's interesting. Let me, look into this a little bit more. So I wanted to include that as well.
Thank you. So I appreciate what you guys are all saying. And I completely agree with it, but we were not really addressing the fact that 3% of all the women-owned businesses in this country have gotten venture capital, and what's going to happen to make it? I mean, even 4% or 5% or 10%. What are we talking about here? Are we going to wait decades before this enormous amount of capital is finally invested in women-owned businesses and minority-owned businesses?
No, I think
we need to look at different
buckets.
How to change this. That's what I'm trying to get to. Is how do we? There is definitely a bias, like you said. Like Jose said, what college did you go to? Who do you know? Who knows you? All these kind of things factor in to how you get in front of these VCs. Most people don't have those relationships. So we're still back to where we started in the beginning of this conversation, which is how do women increase their chances and minority women increase their chances of getting
I think those that have that knowledge, those that get to the top of whatever they're doing, have that responsibility, right? To me, that was key. Once I started doing this, when I was 18, 19, 20 years old, I was a skateboarder. I wanted to do business, but I had no idea how this was going to play out. And even the first startup, it was just like, okay, just jump off the plane and try to figure out on the way down with no idea. So I think once people get to the top, you have to just educate people, hey, like how tough it was for you, like firsthand what it is. So, if you can invest, but also tell people, educate, do your part to make sure that, hey, this is how the game is played. This is what you need to know in order to get there. Yes, it is unfair, and it's unfair because XYZ, but this is how we're going to fix it, right? And if all of us do our part and all of us help, like, that's going to do a lot. That's how I believe we can address that, and how we can change that.
Okay. I want to get to our next question. So let's look at equity crowdfunding, because the numbers are completely different. The top 10% of the current Reg CF offerings, founding team, 40.5% were women, 24.3% were minorities, and 59.5% were either women or minorities. So clearly women have an advantage using equity crowdfunding. How can we get more women to know about it and be prepared to use it? Sheree, you want to take a stab at this since this is what you do?
Sure. So I think it's education on the entrepreneur side as well as the investor side. And what we noticed is that at one point we thought about being a portal. And Ruth, it's very interesting what you're saying about the SBA's mandate to educate the community overall about crowdfunding. I think that in order for us to get more entrepreneurs into crowdfunding, and in order to get more people into crowdfunding, there needs to be people or groups or organizations out there that can and do go into these communities in order to educate. So we ended up pulling our portal application because the SEC has the rule that if you're a portal, you cannot educate, right? You can't dip into both ponds. I think that what I like about this whole week and groups of us coming together and creating these coalitions is we all do need each other in order to really see the cream rise to the top and in order to help more companies get funded. And I do just want to go back, Ruth, and say for the VC thing, one of the things that my great-grandmother and my community really focuses on is sometimes you got to go find a new well and dig a new well. I'm personally a fan of, if the VCs don't want to give us more than 3%, let's find another group of people that can fund our businesses and stop chasing the VCs to the point where they see, oh, wow, they're doing that over there, then they're going to be chasing us. So I wanted to go back to that as well. But I hope that answered your first question.
Yes, thank you. So let's talk about investing, because that's the other part of this, right? So you have deal flow. We need to encourage more people to use equity crowdfunding, create deal flow, but we also need to get the public to be aware that they can actually be investors. So equity crowdfunding will take off when people start thinking of money as something to invest rather than something to spend. And this goes back to my point about last year, because everyone got these checks and they thought it was just to go on a big spending spree or pay their bills, which for people that needed to use it to pay their bills, obviously that was extremely important capital for them. But how can we change people's mindsets about this? How can we get people, the general public, who control trillions and trillions of dollars, how can we get them to understand they can now be investors Calvin, why don't you take a stab at this, since you're obviously have a platform that wants to encourage people to do that?
Yeah, I mean, absolutely. I think we got to think about this like consumer technology, like productize everything. When you think about creating experiences that enable people to invest and own, we compete not with private equity or venture capital. We compete with Robinhood and Coinbase for dollars, and we compete with Twitter and Reddit for investor attention, because that's where people are going and following influencers, having conversations about wealth creation, about anything that inspires them, and they're hopping into Robinhood and Coinbase and trading, and overnight, over a decade, there's now a $2 trillion industry. right? And so the key lesson there is there was a perspective around technology, product development, product-driven growth. And what we see in the equity crowdfunding space right now, it's often private equity that's tech-enabled, right? And so to move from the E-Trade, MySpace days of investing using these tools to the Robinhood, Instagram days, we have to have a product-driven growth perspective. And what that means is the user experience needs to be seamless. The barrier to entry needs to be $1 and a click of a button. And so we're not there yet. And so once we create that experience that feels like what people are used to, that's entertaining, that's easy to use, and that the barrier to entry is $1, the industry will explode. Just look at what happened with decentralized finance. It's a $100 and something billion market already, and that's been just 24 months. And so it's because it's digitally native, globally native, and it comes from a product-driven growth perspective.
Okay.
Yeah,
Okay, you want to say something?
Yeah, I love that, Cap. To me, that's simply it. I don't think the industry is there just yet. So even from our perspective, putting this together, we started with the platforms because that's what we worked with for the longest time. And to us, the platforms, they do a good job at trying to get a lot of people, but there isn't necessarily a lot of quality or just the greatest user experience. To me, is to compete. How can we get this to be something that I want to pull out my phone in the morning and be like, okay, there is like stickiness. I have a reason to check my phone. And then just the image. If you're competing with a ton of things on Facebook and Instagram and everything's just fighting for your attention, you have to be able to compete. It has to be something attractive to people. It has to be something that feels modern, that looks like, okay, this is something I want to play with. That was for us. Branding this thing was so important. And being able to get people that, will make it interesting. So it's a combination of things. The user experience is key. Absolutely. It has to be able to compete with everything else in the market for people to come into it. Because once that's there, just like Calvin said, I think if you look at Coinbase and all these companies, once you have quality and technology, the user experience is amazing, and then you have just the brand and design, this is extremely promising. I think from 5 to 10 years looking back, we're going to see a huge change in the industry.
I wanted to add to that just 2 seconds is that your branding is amazing. So thank you. Isn't it amazing? This week has been awesome. I'm going to take a view of, I understand the Coinbase. I'm, a user of all that. I love customer experiences. I find from the angel investment side of women who have wealth, who might have maybe had written their first check as an angel for some reason, or they haven't written at all. Going back to trust and building communities of like-minded people who can actually talk about it. I know that's very like archaic, maybe 20 years ago, but for women specifically, because they've never talked about it. They don't have their sisters who they're going to go out and go shopping someplace else and get their little Gucci bag or something else. But instead of buying that, they should be talking about startups. So a lot of things are happening in the community space. Even right now, we had our first bank, a woman-owned a bank in Chicago launch just in the last 6 months. That's the first, right? There's groups that talk about fundraising. They talk about how do we become more investors in this democratized space. Some women just don't understand it, right? Especially, let's say, women who, let's say, are my age. I'm going to date myself, 47 to 50. They have been in this transitional, generational, piece that they're not comfortable maybe with technology, right? But they need to talk to somebody. And as soon as they talk to somebody, they have a group that they can talk about startups and why this is so important. They actually are those customers that Calvin, you talk about, that one click, do this and do that. So I think it's a combination of great customer experience on that platform that's super seamless, but then also getting this whole funnel of women. Of course, I'm taking just that gender approach. The women who need that trust, they need to trust the platform, trust other women who are doing it alongside them. So I encourage anybody who's out there, even if you have a little group of like 4 women that you can get together and have their Thursday night wine and talk about startups and invest, that's amazing, right? So let's do more of that.
Yeah, I have been at this since the dot-com days, helping companies raise capital. And there are massive amounts of organizations and institutions that have the ear of lots of people in this country. And they're not talking about this. They're not, the problem isn't that millions of people show up at any of the funding portals and don't like the technology. That's not the problem. The problem is they're not even showing up at the funding portals because they don't even know what a funding portal is or equity crowdfunding. My opinion is that the industry has done a terrible job of building equity crowdfunding as a thing. People don't even know what it is. Absolutely. I mean, I was in Las Vegas last week and I was at the United States Hispanic Chamber's National Conference and nobody knew anything about equity crowdfunding. I mean, we have to work better. We have to be the CES. We have to be the Consumer Electronics Show and have 150,000 people show up at an equity crowdfunding convention and have it be the top of mind, just like the way crypto's exploded. And until we do that, all of the technology in the world isn't going to matter because there's not going to be an audience for that technology. So I really feel like the industry needs to play in the same sandbox together. Funding portals should not feel like they're competing against each other. We should all be helping, supporting each other. There's more than enough deal flow in the world, in this country. And then there's billions of people who can invest because they can invest from anywhere in the world. We haven't even, because we obviously only have an hour and we have 4 minutes left of this panel, but we haven't even tapped into the fact that there's billions of people in other countries who can be investors. And how do we get in front of all of those people? Because they have money and they love investing in American companies. So, there's so much to talk about this, but I think we really have to change the way the industry collaborates before we can expect anyone else to help us.
Awesome. So that's our plan, realistically. So we felt that putting this together, it was 50% of the companies are like, wow, this is amazing. We need this desperately. Let's do it. The other 50% were very competitive and they just didn't want to share. And for us, like you said, CES, that's our goal. Next year, we want to do this completely live and make it big and really take a whole year to get the word out, to truly get out. Because I think this is an amazing industry. There's potential to truly like lift up the middle class. Everything that I said about this, it's there. We just need to work together to make it happen. So,
yes. Yes. So does anyone have any final words? We want to go around everybody like take 50. We have 3 minutes left, so take 35 seconds each.
I'll just say thank you so much, everybody. We are the10kproject.com if you want to learn more about us. And we do have a lot of equity crowdfunding education on our YouTube page. So the10kproject.com.
Awesome. Calvin?
Yeah, you're amazing. Thanks for being here today. And everybody here has the capacity to build the next $10 company. Just do it and overcome all the challenges. They are there, they are real, but they cannot stop us. We must do it. And so let's build the future together.
Yes. Silva?
Love that. I would say that thank you again for creating a platform that we can come together, right? As a venture capitalist coming in, I also do a lot of equity crowdfunding and help entrepreneurs get their stuff put together. I say the entrepreneurs and investors dare to dream of a world that we are so collaborative and so supporting of entrepreneurs and that early stage idea, and just keep on doing the good fight. Keep on fighting it. It's a good fight to do. So
I just want to say thank you to all of you guys. It's been a pleasure speaking to each one of you guys. You guys are all like creating incredible stuff. Ruth, you're a legend to be speaking to. My God. Yeah. So, and everybody else, I mean, just if you're seeing Calvin Cooper and your work, Ruth Hedges, just look up who they are, what they're doing, and the answer's already there. We just got to come together, work together, and make this happen.
Thank you. Thank you so much for producing this event and carrying the mantle that I did for 6 years. I'm now working with the Coca-Cola Company at Rise Up Crowdfunding. We have a wait list. Please, everyone, sign up and connect with me on LinkedIn. Love to see and talk with everyone in the space who's out there, changing the way companies get funded and the way generational wealth is built by letting all of us become investors. So God bless you all and have a great rest of your day.
Thank you as well.
Thanks.
Bye.
Bye.
Bye-bye, everyone.
Are you an everyday person who loves our community but feels like you can't make an impact simply because you don't have a lot of money? Are you interested in building wealth? To build wealth in our community, we must first build up our Black entrepreneurs. One of the most underestimated investment opportunities is the Black business owner. In traditional markets, most of us are unable to invest in early-stage companies like wealthy families do. Wealthy people buy shares early in a business and participate in the profits if and when the company gains traction. As early investors, they make most of the investment returns. Now, we can do the same. At the 10K Project, we have created an ecosystem where everyday people can invest in Black-owned businesses. Here's how it works. Entrepreneurs from various industries come to our community and pitch their business ideas to us. This is done through what we call a Bet on Black pitch.
Good morning.
Investors within the community can listen to the pitch, and each individual person decides if he or she wants to fund that company. And product and service providers can add themselves to our expert directory. Examples include attorneys, accountants, web developers, construction professionals, and others. Individuals with consumer products are also encouraged to add themselves to the directory. If a business or community member is looking for your products or services, they are encouraged to search the directory and reach out to you directly. This is how we circulate the Black dollar longer in our community and how we build wealth together. We want to invite you to become a member of the 10K Project. As a member, you can attend our Bet on Black pitches, enter your business information into our expert directory, access our expert directory to find Black-owned businesses, receive Equity Crowdfunding investor training and resources, learn more about alternative investments during our members-only wealth-building webinars, participate in peer-to-peer wealth-building conversations, and enjoy exclusive content within our Knowledge Center. We have the power to create jobs, profit from our own innovation, circulate the Black dollar in the community through group economics, elevate Black business growth, and build generational wealth. If you want to make a major impact as an investor, then become a member of the 10K Project and join our movement.
Until recently, only millionaires with connections were allowed to invest in growing companies and startups. But not anymore. The Jumpstart Our Business Startups Act made it possible for everyone to invest in the next e-commerce company, travel service, entertainment startup, or transportation disruptor. At Title3Funds.com, we revere startups for their innovation, vision, and unflinching drive to succeed. They shape the world around us and influence our communities on a daily basis. They dream big. They make calculated decisions. They turn ideas into opportunities. Now, no matter how much or how little money you have, you can invest in businesses that you believe in. At Title3Funds.com, we offer a unique approach to equity crowdfunding. We focus on quality over quantity, thoroughly screening to find businesses we believe in, vetting company financials, goals, and future plans to provide curated, highly investable companies. As an investor, you'll be able to research growing companies and startups that align with your passions. Join us today.
Good morning, everyone. My name is Ruth Hedges, and I'm one of the OGs and pioneers of Equity Crowdfunding and the CEO and creator of Rise Up Crowdfunding in collaboration with the Coca-Cola Company. Rise Up Crowdfunding is a coalition of leaders across industries and organizations who are committed to ensuring that diverse entrepreneurs get access to capital to help them scale, drive growth within the supply diversity industry. We are heading into a world where underrepresented groups are a larger percentage of the American population than ever before. As this number grows, the need to generate wealth within these communities has become necessary for the future of the country. We know if small businesses had more access to capital, more could be done to grow the current batch of small and diverse businesses eligible to apply for supply diversity contracts and uplift the communities where these businesses are located through job creation, increased wages, tax revenue, and generational wealth. We are the first funding portal focused on this, and we are proud to collaborate with the Coca-Cola Company, the Women's Presidents Organization, the National Veterans Business Development Council, and IWIC Foundation for Women, and many more organizations and corporations. So how did this industry get started? It all began for me when I read an article by Sherwood Neese. I called him up and said, "I think you are my brother from another mother." Everything he said in this article reflected my own thoughts on the problem and the solution. The recession had already started in 2009, and businesses were dying to access capital. But the banks were all getting rescued and had no money to lend. And the VCs and angel investors had much fewer funds to invest, so startups and small businesses were in dire straits. In his article, he wrote and asked the question about why we all can't be investors and bring trillions of dollars sitting in our hands of the general public to help with this problem by opening up some of the accredited investor rules to include all of us. In subsequent conversations with him, it became apparent that it would take an act of Congress to make these changes, and so we decided to do just that. The first draft of Title III 4A6, now called Reg CF, was called the Startup Exemption. It was written by Sherwood and Jason Best with input from me and our tribe of people like Karen Kerrigan of the Small Business Entrepreneurship Council, who became a champion for our cause to legitimize debt and equity crowdfunding. Our tribe of committed people to these ideas was growing every week. We finalized it in a Chinese restaurant in San Francisco, and then off we went with this 22-page idea with the help of funds from people like Whoopi Goldberg. We went to DC and met with Congress people, made lots of phone calls, and after 2 years and the help of people like Steve Case, the U.S. Chamber of Commerce, our bill was finally voted on in the Jobs Act of 2012. It passed with yes votes from over 375 Congress people and 2/3 of the Senate. Then, on April 5th, 2012, President Obama signed into law, along with the rest of the bills, opening up investment to all of us. Since then, I have been at the forefront of advancing equity crowdfunding for the past decade, and Forbes called me the Queen of Crowdfunding. After the signing of the Jobs Act, I launched the first global crowdfunding convention as an educational event, a gathering place, and flagship event for all people who are passionate in the industry, particularly those driven to innovate, to share what they'd learned with the public as the equity crowdfunding industry continued its exponential growth. It became the leading crowdfunding conference where the world learns crowdfunding. More than 4,000 people attended from 25 countries, and we had a great influence on bringing equity crowdfunding to lots of countries where it's now legal there too. Today more than ever, the world needs to have the ability to fund what really matters. Equity crowdfunding can have a profound impact on people's lives, on innovation, job creation, and on replacing funds lost from social programs and now from the pandemic, but only if you understand the techniques necessary for success. So what is equity crowdfunding? The technical description describes crowdfunding as a collective effort of individuals who network and pool their resources via the internet to support efforts or companies initiated by other people or organizations. Equity crowdfunding, also known as crowd investing or investment crowdfunding, is a method of raising capital used by startups and early-stage companies. Essentially, equity crowdfunding offers the company's stock to the general public in exchange for capital. Each investor is entitled to a stake in the company proportional to their investment. We all know that crowdfunding has been used in support of a wide variety of activities, including disaster relief, support of artists by fans, political campaigns, startup funding for films, games, fashion, technology, manufacturing, proof of concept, scientific research, book publishing, real estate, college tuition, and even the Tesla Museum, and so much more. But now we can all own equity in these companies using that same process and rules in the Jobs Act. These are very difficult times, and small businesses are confronting a pandemic and recession as we have never lived through before. We all know that small businesses are the engine of our economy, so it's critical that we provide them with as many options as possible to have enough money to maintain their survival. Since 2015, equity crowdfunding has been that solution. The world of equity crowdfunding is an exciting way for small businesses to access trillions of dollars of capital from the general public from all over the world. It is really important that we continue to meet and bring people together in forums like this to ensure that more people know how to use it and how to provide funding for it. Equity crowdfunding transforms Main Street, job creation, supporting innovation and proof of concept along the way. It can also help close the wealth disparity gap in America. The Jobs Act democratized investing in the United States, connecting 99.7% of businesses who did not have access to this type of capital formation with 91% of households considered non-accredited investors, who also did not have access to this type of investment. The world is ours to change if we work together and use equity crowdfunding so everyone can have an opportunity to create their dream, a job, a better life, without a gatekeeper determining their destiny. That is what crowdfunding can do. Think about every store and shop in your hometown. In most cases, its existence was determined by creditworthiness, assets of the owner, or collateral, and a group of gatekeepers at a bank or access to angels or VCs. Imagine all of the necessary and important businesses that have never seen the light of day because of this unfair process. With trillions of dollars sitting on the sidelines, imagine all the jobs that we will now have a chance of being created. Investing in private companies, unlike investing in large public companies on stock exchanges, has been around for a long time. But these investments have until now, with the passage of the Jobs Act, been available by law only to the rich, people who are considered accredited investors. The new equity crowdfunding legislation takes friends and family financing and provides infrastructure, technology, and an ecosystem to regulate and expand the process. Businesses won't get funded until the crowd decides they are worthy of funding. Customers will become investors with a desire to share knowledge and experience to help the entrepreneur and their investment success. This is a transformational concept. You will not automatically shop at big box stores, franchises, etc. when you own equity in local shops, restaurants, hotels, etc. You will also go see movies, buy clothes, games, fashion, technology, all kinds of products from companies you own equity in. And you will be a big advocate and help spread the word to everyone you know. The impact of the coronavirus pandemic has created an economic crisis for small businesses that are the heart and soul of our economy. And many are in need of access to capital to manage this crisis. You'll learn a lot over the next 5 days from some amazingly brilliant people. But the most important lessons I hope you'll take away from this event is never give up, never lose your resolve, have faith in the power you bring to your own destiny, and the power of a great crowd. And remember, a company is only as good as its people. Funding may get your engine started, but it's the people from your crowd that determine your direction that you end up going. Equity crowdfunding showcases the best of our humanity, and it demonstrates the potential to bring together people from all backgrounds and beliefs to work for our common good. Where it flourishes, communities are strengthened, robust job creation and economic growth and generational wealth are the results. Thank you to Startup Starter for producing this event and continuing my work in the equity crowdfunding conference business, and for joining us today. Please join the waitlist at riseupcrowdfunding.com and help bring the change we all want to see in the world finally happen. Thank you.
Welcome to Going Public. On this season of Going Public, we've uncovered 3 American companies
You guys have something your competitors don't.
that are putting it all on the line.
This only happens if you get money. No turning back now.
They need to raise serious capital
It's go time for everybody.
to take their companies to the next level.
That's a thing to watch for.
We went from 0 to 1 million users. This has been a huge hit.
Yes! We've decided to bypass the venture capitalists and the institutional investors.
To partner with and reward our customers.
We're not into making the richest people in the world even richer.
We are coming directly to retail investors with our Regulation A Plus offering.
Giving you the chance to get in on the ground floor.
You want to go fast?
Yeah.
You'll see firsthand what it takes to get their companies ready.
You ready to do this?
There's a lot of work to do. Get our audit done. Get our Reg A application into the SEC.
We believe we set the record from date of filing to date of qualification.
With the help of mentors who've been there.
Working with you on messaging is something I'm really excited about. Taking complicated concepts and turning them into a t-shirt.
The right celebrity partner will change the face of your brand overnight.
What has been Proven's PR strategy? It sounds like we need one.
Then it's time to pitch.
I'm a little nervous.
Are you?
Yes!
Everybody likes to talk about AI, but this is truly unique.
The way that math works out, we think that's going to achieve billion-dollar valuation. You're a hell of a salesman.
And make their case to investors like you.
What can we do with 10 to 25 million when in our past 10 years we've only had 2?
Will Proven's custom skincare tech revolutionize the $155 billion beauty market?
Click to invest.
Will Treble beat the streaming competition and save music for the masses?
Click to invest.
Will Hammett's commitment to quality craftsmanship beat fast fashion?
Click to invest.
It's their journey, but ultimately your decision.
They think we're going to be the next Spotify.
Going Public premieres on entrepreneur.com
October 19th.
Hey, Chris, how you doing today?
Good, Julian. How are you?
I'm doing well. I'm doing well. I guess we can give a bit of an intro here for the viewers, sort of get them acquainted with ourselves. Myself, I'm Julian. I'm here on behalf of Issuance. Issuance is a fintech platform enabling companies to raise capital from the general public via the Reg A securities exemption. And I'm joined by Chris Anthony, co-founder and co-CEO of Aptera Motors. A pretty notable electric vehicle pioneer who's doing just that. Chris, I see you got one of the cars behind you right now.
Thanks, Julian. Yeah, we're in our shop here in beautiful, sunny San Diego, California, getting a lot of work done. This vehicle right behind me, the white one, is called Soul, and then the one over my shoulder even further is Luna. That's how we describe our colors. We have Noir, Soul, and Luna. One's black, one's white, one's silver.
That's awesome.
Those are our color choices right now. But I'm Chris Anthony. I'm co-CEO of Aptera. I've got a background in finance. Came out of college and started a brokerage firm. Did a lot of direct offerings and IPO work. Took several companies public. Have had a string of my own companies, companies that I've sold off, companies that I've taken public through traditional means. Flux Power, my lithium battery company, we took that public to the NASDAQ about 18 months ago. And now Aptera, we've embarked on a grand journey through crowdfunding to get the vehicles behind me into production. We already have over 13,000 orders for these vehicles and over 10,000 investors that have supported us through crowdfunding platforms. So I'm happy to be here and happy to discuss Aptera and our future.
That's awesome. And I'm glad to have you here. Absolutely. Looking forward to the conversation. And yeah, those are some pretty good looking cars. Anything different about the different models besides the colors, or as far as the differentiation between the different lines you guys have right now?
Yeah, Aptera is offering a base vehicle that is front wheel drive that gets you 250 miles of range and gives you free solar charging from the sun every day for $25,900. That's before federal or state incentives, of which we're seeing a lot coming down the pipe, including a $7,500 rebate from the federal government, which will hopefully be in place soon. That makes us very affordable to a lot of people, we hope.
Absolutely.
You can upgrade the drivetrain from just front wheel drive to all wheel drive. That moves you from a 5.5 second 0 to 60 time down to 3.5 second 0 to 60 time, which is just blazing fast. And you can upgrade the solar. The stock package comes with about 22 miles of solar charging capability a day. You can upgrade that to over 40 miles per day of solar charging capability. That adds the hood solar panel and the rear hatch solar panel. And you can upgrade the battery pack. So the standard vehicle comes with a 250-mile range battery pack. You can upgrade it to a 400, 600, or 1,000-mile range battery pack. And there's other niceties like a camping feature. There's a tent that goes over. You see the one behind me has the hatch open. You can actually put a tent over that and sleep 2 people comfortably with their dog in the Aptera. So you can go adventuring and you can travel 300 miles to your favorite camping spot, and you can let your Aptera charge while you're there, and you can actually come home with more power than you left with. So very interesting to have an adventure vehicle that can create its own fuel while you're out adventuring versus having to find a fuel source while you're out adventuring. We also have a premium audio kit and a pet kit, so you can get your dog in the boot of the Aptera. So lots of fun things on our website, aptera.us.
Yeah, I've had a lot of fun checking out the website, and also the awesome communities of fans, and I guess some of them probably investors as well, who've taken up to following the company and pretty much supporting everything you guys do. I've really seen you've developed quite a following. What do you think has drawn so many people to be excited about the company?
Yeah, we just launched our vehicle earlier this year. We have over, I think it's 120,000 social media followers now between our different channels. We have over 50,000 people on our newsletter list, which no one signs up for newsletters anymore. So I don't know how that's really possible.
Amazing.
I haven't signed up for a newsletter in a long time, but it's pretty amazing to see our click rates when we send out information. People really are hungry for updates. And I think it's attributable to our mission because, we're a company focused on efficiency. It has such a trickle down effect, to improving the environment, to saving you money, to saving you time. There's a lot of great attributes from a vehicle platform that focuses on efficiency first versus styling or any other constraints. So, I think people see the Aptera's unique shape and they're immediately drawn to, wow, what is that? And they start asking questions. And I think we've done a great job at providing a lot of online fodder for people to go down the rabbit hole on who we are and what we're about and how we're trying to accomplish our mission. So.
Yeah, absolutely. I think that's done a lot to get people really fired up. Definitely, let's see a lot of people talking about the brand these days, which is really great to see. Would you mind taking us back to the beginning? Like, where did the idea come from for Aptera? What led you to launch the company, and sort of what is the process of the story been so far?
Yeah, I was a stockbroker in California doing direct public offerings and stuff. When the economy started to slow down in 2001, I found myself with some more free time, so I started wakeboarding here on San Diego Bay. And I had a former life as a competitive whitewater kayaker and had built my own kayak. So I had some experience with composite structures and hydrodynamics. With the Atlanta whitewater course creation back for the '84 Olympics, and then on to when computational tools started to take over, and you could really do analysis on that. I started a boat company because of my passion for wakeboarding, and I thought, hey, I built smaller kayaks. I could probably build a big wakeboard boat, maybe naively. But I did learn computational fluid dynamics because I wanted to build a better wakeboard boat, and I built a company around it. And when I started seeing what other boat companies were doing, the composite methods they were using to build their boats were terribly archaic and not environmentally friendly at all. So they basically built boats like shower tubs, open mold, styrene emissions, solvent emissions, hand spraying stuff. It just seemed very 1950s technology, not what I would think of today's technologies. So I found that the America's Cup yacht racing team from New Zealand was using a composite process called resin infusion, where everything was done under bag, everything was laid up dry. It was a very scientific process. Then you flowed resin through the part, and it was no emissions. It was just this dream process where it's like, that's how people should be building boats, not hand chopping glass into a big mold like this. So I got really interested in that, and I wanted to, took the America's Cup guys like 6 months to make one boat. I was like, well, there's no business model on that. How do I get it so we can make 6 boats a day, not one boat every 6 months? So I set about that with my boat company Epic, and along the way, through a mutual friend, I met Steve Fambro. He was playing with composites to build this uber efficient electric vehicle. And our friend said, hey, Chris is playing with composites for his boat company. You guys should meet up. And so I met Steve, and he described what he was doing. And he described the kind of shape that he was after. And because I have a background in fluid dynamics, I immediately got the aerodynamics of this equation. It's kind of the same. Fluids flow in much the same way, except water's 1,000 times more viscous. But when Steve talked me through the cambered body and how it defeats ground effect and how that could, yield extreme efficiency, I immediately got it. And I said I wanted to help. So he and I held hands and formed Aptera back in 2006, and we're off to the races. So we had a bit of a hiccup, and that we raised a lot of money to start. The EV world was very nascent. Supply chains were difficult. It was difficult to raise money. Crowdfunding wasn't available to us, so we had to raise money in traditional methods. And we ended up hiring a management team from Detroit to come help us grow the company at the board's behest. And I found that things were just moving in a direction that I didn't agree with. So I moved on to start my lithium battery company. Steve moved on to start the world's largest advanced hydroponics farm over in Abu Dhabi. And we led, a different kind of life for the last 9 years. Unfortunately, that management team that they brought in did not find success. They couldn't get a Department of Energy loan to help them into production. So the company was liquidated in 2011. And it sat fallow till a couple of years ago when Steve and I were able to reacquire it and reform the company. So luckily, under a new cap table and with a new vision and an EV supply chain that is fully formed and easier to get, batteries and high voltage connectors and high voltage AC compressors. There's a world of EV supply chain now that just wasn't available to us a decade ago. So we think it's a much better time. The solar technology that we've been able to couple with Aptera's vision, is ripe for the picking now, whereas cells were only 15% efficient a decade ago, so it would be much harder to make a reality like this happen. So it's been an interesting last decade, but it's certainly interesting last 2 years we had a year of development, and then we launched the vehicle earlier this year, and the support has just been overwhelming. People really liking what we're doing. When we restarted the company, we really, the vehicle design is based on the math equation of how to reduce energy to transport things from point A to point B. So that math equation, could have yielded something that the public just didn't want. We were determined to build the most efficient vehicle platform out there, regardless really of how it looked or how it felt. And we ended up with this super lightweight, three-wheeled platform, thing that looks so different from anything else out there. And we kind of crossed our fingers and just hoped that people would support that vision if we brought it to life. I think, with the careful hand of Jason Hill, our industrial designer, to help wrap our very interesting aesthetic into something that's also appealing from an industrial design perspective, has the people to feel comfort that this is a vehicle that could meet a lot of their daily needs. So that's why we have over 13,000 orders for the vehicle, and it keeps growing every day. And we have over almost 10,000 investors. So a bit scary to think that that many people could come after you with pitchforks if you don't deliver these vehicles on time. That's quite proud to contend with, but we're excited and humbled that so many people have opened up their wallets and their hearts to Aptera.
Yeah, no, absolutely. And it sounds like a lot of folks are really excited about getting a chance to drive one of these things as well. So I know, myself included, definitely looking forward to my chance to drive one of these bad boys. Could you tell us when you first drove the car, like what was your takeaway, or what was the feeling like of actually putting this thing on the road?
Yeah, this newest version, the first one we built was the all-wheel drive version. So the first thing was, holy crap, this thing is quick. I drive a very nice electric vehicle, and it is super quick. One of the quickest around. And the first Aptera we built was quicker than that.
Wow.
So we're kind of blown away by, it's a lightweight chassis. And we had a smaller battery pack in to test with in the beginning. So it was just blazingly fast. But after you get over that initial perception, it's interesting how aerodynamics play into kind of road quality and kind of noise, vibration, harshness issues that you see in other vehicles. Most vehicles on the road today use more than 60% of their fuel just pushing air out of the way. And when you're using that much energy to push air out of the way, that means that energy is doing stuff. It's making noises. It's causing high pressure zones. It's, doing a lot of weird stuff. And they do a lot of tricks in modern automotive to try to reduce that so you don't hear that in the interior. But inevitably, some of it's coming through, especially if you're in like an SUV. But in the Aptera, it is so streamlined that you just don't hear any. It's like a whisper when you drive it. It's a really interesting and serene feeling when you really get out on the open road with the Aptera the first time. To give you an idea, cool. If you're driving at highway speeds and you stick both hands out the window, the pressure that you feel against your hands is about the total drag of the Aptera at highway speeds. Our vehicle is less drag than the side view mirrors on an F-150 pickup truck.
Wow, entirely.
Yeah.
That's amazing. That's really, really cool. I guess that's one of the coolest things about starting from scratch and basically building something from the ground up is you're going to get an experience and an end result that feels completely different than just iterating on a concept that's already been done time and time again and trying to improve something. You guys really started from the ground floor. So pretty cool that you're giving investors the same opportunity to join, early in and sort of access things at an earlier stage. What led you to pursue or to explore Reg A and Reg CF as fundraising methods? I'm sure companies like Aptera have a pretty wide variety of possible options for financing both equity and debt available to them these days. So what sort of do you like about the equity crowdfunding world, or what made you interested in it at the initial phases?
Yeah, because I have experience in the IPO secondary world, venture capital world. When we were starting to reform Aptera, I really didn't think that we fit the mold of traditional financing. Our business model is an order of magnitude less capital intense than other automotive aspirations would be, but it's still capital intensive. And selling this kind of model to the VC crowd, it's just a difficult one. They want bigger payback, quicker, kind of the biotech build an app model is what really fits with a lot of the VC community. So if you have, an esoteric, outside the box, certainly very unique product like we have, it's just a tough sell. I think we've got a lot of momentum now, but thinking back a year and a half ago, gosh, with no prototypes and no pre-orders and no following, really, it's really hard to think that we could have gone the traditional route. So crowdfunding is this amazing tool that I didn't have when I started my boat company or my lithium battery company. My boat company was building really cool products, these wakeboard boats that were super glitzy, and we're making really good margin on it. So it was a really good business model. It was a sexy thing to sell, but we didn't have the ability to go to the crowd and say, this is a really cool thing that you should support. We could only go to VC. So it was all about, the profit model, and gosh, the marine industry is treacherous. It's very cyclical. VCs didn't want to jump into that. The lithium battery company, lithium is going to power our future. We were doing a lot of cool stuff in grid storage and EV battery packs and logistics equipment and robotics, but it's a tough sell to the VC crowd when it's a commoditized product like that. We felt with Aptera that the product was so visually appealing, and we already had a mild following, that if we could get some early brand ambassadors as investors, then they would carry our story, and we would start to gain more and more momentum and hopefully get a social following. And I think we played that game very well. We started with WeFunder and, got a good bit of traction with the small, $100 to $500 investor crowd. I think our average investment was $330 for those rounds. And then we were able to step up into a Reg A plus. And now our average investment is over $5,000. And, we've gained thousands and thousands of investors just over the last couple of months. So, every one of those investors, especially the early ones, got in at a really good valuation. We've been able to step function our valuation over the last year very nicely. So those people that invested early on, they'll make out like bandits as we start to pursue public options and they start to get liquidity. So I think really having people in that start at the ideation phase and can stay with your company all the way to the IPO phase, probably makes them lifetime Aptera buyers and drivers. So
right, yeah, and having those customers and fans who are also vested owners in the company who sort of have a vested interest, obviously to promote and to support is the really great facet of raising capital this way as well. So what is the capital being raised in Aptera's current Reg A mean for the company? Where is this capital going to be put to use, and sort of what is the plan from here?
Yeah, right now we've these vehicles behind us are called our alpha vehicles. We finished our beta design probably 6 weeks ago, and now we're building those beta vehicles. We thought there'd be another 2 iterations before we had a production intent vehicle, but now we think there may be only 1 iteration before we have a production intent vehicle. We're hoping that in the next 6 months, we have a production intent vehicle ready to start scaling production with. COVID and supply chain issues have made life very difficult to execute on some of that stuff. Just being able to hop on a plane and go visit a vendor that could be a supplier for a significant component for the Aptera has been made difficult by COVID. And there's places that we just can't go to meet people. So we think and we hope that we can be at rate production in 2022 and deliver a substantial amount of vehicles in 2022, and then hopefully roll into 2023 and deliver even more vehicles. Obviously, with 13,000 vehicles already on order, and that accelerating as we become probably more tangible and we get more press and more people start to talk about our solar electric vehicle vision, it will have to scale production even more. So we have a 20,000 unit a year production plan, and we hope to kind of duplicate that plan in other parts of the country: San Diego, San Francisco, Texas, Georgia, Virginia, the UK, Norway, Australia. put kind of small production plants all over the world closer to our customers.
Nice.
So we can more easily service the vehicles, and so people can come see their Aptera built, and they can get kind of an ownership delivery experience from the get-go.
That's awesome. Yeah, and I imagine also that distribution network, or rather the production network, could sort of serve as a way to bootstrap distribution to avoid too much carbon emissions in the actual delivery process as well. People could pick up the car near them and sort of have a point of contact with the company itself. So that's really cool. That's awesome to hear. Longer term in capital markets, having taken a company public before, what do you say sort of are the signs that it's the right time for that? And if those signs appear again, what will you be looking for to know how that process will go for your next company or for Aptera?
For Aptera, we know that we have a lot of public interest, and I think the public markets are a good tool to leverage capital for future growth. It seems that the electric vehicle segment is pretty hot right now. So we think that the time for us is near term, for a public option. We think in the next 12 to 18 months, we'll have a public strategy that we've been able to execute. We're already talking to several parties on how to make that happen. It may be an S1 filing, it may be a merger, it may be a SPAC.
A lot of options these days. Yeah,
a lot of interesting options. With a crowd of already 10,000 investors now, I think it makes the process so much easier, and you're going to get much more visibility on the offering to start. So hopefully it's much easier to get it underwritten, or get a pipe into the offering, or whatever else we might need to make happen. So
that's awesome. That's a really good point. That's something I feel like I don't hear talked about as much with the Reg A world. Is if you are a company that's sort of at that stage and has the fundamentals necessary to undergo an IPO, let's say, having those investors baked in can serve as a benefit down the road on the next steps of that process. But honestly, I think one of the most impressive things about the Aptera Reg A story to me is just the sheer quantity of investors and how fast they piled in, right? How fast people came to the table to support.
The first $20 million segment of the round, which we have kind of a rolling round with our Reg A Plus, we had a marketing plan that we had aspired to start the second week of the campaign. We just kind of wanted to get underneath us the first week, and then we were going to start maybe doing some marketing the second week. We just never made it to the second week because we filled the $20 million round the first week. So
it was a record, I think.
It was pretty amazing to see how fast that happened. And we had private investors coming into the round, and we didn't want the dilution at the low valuation that we had there. So we wanted to basically raise the price, which means you have to amend your Reg A offering, which takes some time. So we had to shut down the offering to raise the price. But as soon as we announced that we were closing the round, we didn't just want to shut it off on people, and if they had expected it to be open for a long time. So we announced, I guess, 4 days before it was closing, that it was closing, and then even more money piled in because we announced that it was closing. So it was an amazing time to see how many people had kind of pent up investment potential for us, and were willing to open their wallets.
That's awesome. Yeah, I think the exciting part now is sort of with this traction and having sort of set. I presume that's some kind of a record, doing $20 million in a week. Where do we go from here? It's pretty exciting.
In the Reg A market do that. So I think we'll make a plaque or something, maybe.
Absolutely, it's sort of a deal trophy. But definitely very, very excited to see where things go from here. For viewers right now, if they want to learn some more about the offering, and they want to explore the deal itself and the deal terms, as well as potentially invest, where can they go to do that?
Yeah, aptera.us, aptera.us. I'll get you to our website. You can learn about our vehicle. There's an investor link at the top. Just click that. Or invest.aptera.us. I'll take you right to the investment portal and get you some more information. You can review our offering circular and the deal terms, and you click on to invest, and 30 seconds later, you own a piece of Aptera.
That's awesome. It's really great to be able to do that. It's really cool to see the see the impact of technology and that sort of access we're able to provide to investors. So glad to be here with you guys today, and awesome to be moving forward with this one. I see we just got a QR code up on the screen as well for people who want to scan and check out the offering.
Well, I appreciate you letting us share our story.
Mm-hmm. Yeah, absolutely. Well, thanks for joining me. I think we're running a little short on time. We're sort of coming up against the end of this session here. But thank you for the time, Chris. Always a pleasure. I look forward to our next conversation as well.
Thanks, everybody. Enjoy the conference. It's a shame that today's transportation industry is so inefficient. You put gasoline in a vehicle, you burn it, and you only get about 25% of the energy out of that gasoline. The rest is just up in smoke, literally. We started with horse and buggy four-wheel technology over 100 years ago. And now we've evolved that four-wheel technology into big SUVs and sedans. The automotive landscape of today is far too concerned with risk and would never think about stepping, outside of the box to make a composite vehicle that's super lightweight and aerodynamic, because it's so much different than what's available on the market today.
When we first started the company and we're looking at the shape and going through MATLAB calculations of different vehicles and saying, well, what kind of vehicle could we use as a base vehicle? And we sort of asked ourselves a rhetorical question. What would it be like if you made the drag go to zero in terms of the equation? Why, then your range would go way, way up.
We see losses in heat, we see losses in friction, we see losses in aerodynamics and weight. Everything to us is an engineering challenge to make things more aerodynamic, lightweight, so they use less energy.
So then I asked the next question. I said, well, what does that shape look like? Surely there must be a shape that mathematically would equal zero for drag, or close to it, close enough. And that's how we discovered this shape and began working with it and refining it.
We think that energy should be used to turn your wheels. That starts with aerodynamics, because in a typical vehicle you use over 60% of your fuel just pushing the air out of the way at highway speeds. So if you could take that aerodynamic drag down to zero, you'd instantly get 60% better fuel economy. With Aptera, we did just that. More aerodynamics, lighter weight, efficient powertrain, gets you further with less energy.
A 1,000-mile range vehicle seemed absolutely absurd. It was an insane claim, but it's all science. It's all numbers, really.
You can charge the Aptera with a regular 110-volt outlet, the same outlet that you charge your cell phone on. And overnight, you can get 150 miles of range. That's unlike any other vehicle out there. One of our best new design features is our Never Charge solar package. It allows you to charge over 40 miles a day free from the sun, and allows for most daily driving needs to never have to plug in to go anywhere.
40 miles doesn't sound like a lot, but it's the equivalent of parking your car and having it magically fill up with 2 gallons of gas overnight. It's the fact that you can park it at work or wherever and go back to it with more energy in the tank than when you left it. Freedom in the sense of being able to go long distances, go without having to think about it, go without having to worry about if it's charged or not. Have it charge itself without having to pay a dime to drive it every day. I mean, that's a kind of freedom I think a lot of people love.
You don't need super large charging infrastructure to keep your Aptera going on a large trip. When you stop at a roadside charger, you can charge for 10 minutes and realistically be back on the road, unlike other electric vehicles where you may have to stop for more than an hour. So the efficiency of Aptera really opens up a lot of possibilities for owners to use their vehicles in different ways than they currently do. We have a strong focus on composite technologies and AI generative design because it lowers the overall weight of the vehicle while making it one of the strongest offerings on the road today.
When you think about vehicle safety, you think about strength. Is this thing going to protect me?
Our composite monocoque chassis is built a lot like a Formula One vehicle and is very strong.
The structure surrounding you is going to be safer or stronger than virtually anything that's out there because the strength of the composites compared to steel, for example, is superior.
We take passenger safety very seriously, and it's one of our top priorities. The Aptera drastically lowers the materials needed to build your transportation device.
These bodies, instead of having 200 or 300 parts to the body, they have 4 parts to the main structure. And that makes it much easier to build, track, and assemble.
The electric vehicle world of today is much more advanced than it was 10 years ago. We're leveraging every bit of new battery technology, drivetrain technology, composite technology that's available to make things more efficient for your transportation needs. Aptera is actually Greek for wingless flight.
People look at it, they tap for you to roll down the window, and they want to ask you what it is.
Amazed and shocked when they see the Aptera.
It's not designed to get attention, it just gets attention because of what it is. You tell them how efficient it is, and it just blows their mind. The first thing that's going to strike you as different is the integration of the solar cells into the body and the dash and other places, every square inch of where sunlight hits that vehicle, in a way to harvest it and make use of it without making it look like some high school eco-marathon project.
When driving, the vehicle dynamics are very stable. The acceleration is brisk. The one notable thing is it's very, very quiet.
Before I drove the Aptera, I had dreams about driving it, and the first time I did, it was virtually as I imagined it would be.
Aerodynamics comes with the benefit of being a lot quieter. You don't hear the wind buffeting noise at high speeds like you would in any other vehicle available today.
The first feeling while driving it is the feeling of spaciousness, because you think it's just a normal sized vehicle, or maybe some people might even think that it's smaller on the inside or a cram. But it felt like a football field, that I had between my elbow and the door. And I just had all of this space, and it was comfortable.
The all-wheel drive Aptera handles great in snow, ice, or inclement conditions. We have torque vectoring to each wheel that dynamically responds within 1/32 of a revolution. So we can infinitely tweak the stability of the vehicle at any time and tackle almost any adverse condition you can imagine.
And with all of this glass, I could see everything, and it was an amazing experience.
The Aptera service network will be unique in that most of the time we'll come to you to fix your problems. But if you have an Aptera in a remote location where service agents might not be, we will help you repair your vehicle on site. We'll ship you parts within 24 hours. We'll give you all the build and service information we have and really help facilitate you in keeping your vehicle on the road. We think this right to repair mindset can really help keep more Aptera on the road longer and make our customers happy. Hopefully my children will grow up in a world where they never have to put gasoline in a vehicle again. My son already knows how to put the charger into my electric vehicle. My daughter already knows what a battery is.
I think ensuring that electric vehicles aren't sort of a compliance move by the OEMs, or that they're not a thing that only rich people can afford with very expensive electric vehicles, but ensuring that there's a mainstream path to make electric vehicles there for everyone is the legacy that we'd like to leave to our kids, because that's the kind of world we want them to grow up in.
I would say we're an audacious group that is really tackling the problems of energy efficiency in transportation. There's nothing more unique than Aptera, a vehicle focused on efficiency solely over styling, and it's really the most efficient way to get from point A to point B.
We started Aptera to build the best electric car in the world.
I think a lot of people have latched onto Aptera because it's an amazing solution to a lot of today's energy use problems. And it's also just cool engineering. You're far less efficient on a bicycle than you are in an Aptera. So next time you think of bicycling down to your local grocery store, you might as well hop in the Aptera to make that same trip.
Good morning. Thank you so much for joining us. I'm Darren Marble. I'm the co-founder and CEO of Issuance. I'm also an executive producer of the upcoming series Going Public. I'm honored to be a co-host of Equity Crowdfunding Week. And today I'm going to talk a little bit about some of the trends we're seeing in the equity crowdfunding industry and where I think this industry is headed. So I want to start with a question. The question is, what is the best kept secret in the equity crowdfunding industry? And the answer is that the hardest part is actually raising capital. So yes, the irony of this industry is that even though it is the online capital raising industry, the hardest thing for companies to do is successfully raise capital and market their deal. So I want to talk for a minute about who succeeds. What kind of companies have historically had success raising capital in the equity crowdfunding industry? They basically fit a handful of descriptions. There's really only a couple ways it's happened historically over the last 6 years. The first is companies that have a built-in audience of paying customers. So we were fortunate enough to work with Wink, which is a $100 million wine subscription company, but they had over 1 million paying customers. So that kind of company is really an inherently good fit for equity crowdfunding because their customers, of course, are their most obvious investors. So companies like Wink, consumer packaged goods, retail marketing, subscription businesses, direct to consumer, hundreds of thousands or even 1 million paying customers, those are good fits. Companies that have a cult following are also what we would call bullseye fits. Aptera Motors has just crossed $25 million in commitments. We've also worked with High Times, which is a legacy cannabis brand. Now they have dispensaries. They've raised over $30 million from 30,000 individual investors. They've got a brand that's been around for decades, so they have a cult following. Then you've got more recently influencers like Seville Lavingia and Arlen Hamilton of Backstage Capital. They were able to raise $5 million in a matter of weeks in their Reg CF or regulation crowdfunding campaigns by marketing the investment opportunity to their followers on social media, really Twitter, maybe a little bit of LinkedIn. We've also recently seen companies that have institutional lead investors have success in the online capital raising industry. Gage Cannabis was able to raise $50 million in a very successful Reg A offering, and they had a $20 or $25 million institutional lead. And lastly, companies that are willing to spend a lot of money, hundreds of thousands, even low millions of dollars, buying ads for their investment campaign. So if you look at this holistically, the truth is that only a very small segment of companies are true natural fits for equity crowdfunding. And if you don't fit the profile of one of these types of businesses, you're going to struggle potentially. And so you need some kind of cheat, you need some kind of help, you need some way to effectively market the deal so that you don't end up spending hundreds of thousands of dollars in audit and legal costs only to fail in your marketing campaign. So I want to talk for a few minutes now about some of the trends we're seeing. What are some of the cutting edge strategies that issuers are using to successfully raise capital online that might not fit the buckets of some of those companies we just showed on the previous slide? Financial publishers. This is one of the hottest trends in the space right now. Financial publishers are third-party organizations that have an audience of built-in subscribers. So self-directed retail investors that are paying the publisher some kind of fee to access that publisher's information product, which in most cases takes the form of a newsletter. So the newsletter is the information product. The retail investors pay the publisher $50, $500, even $3,000 annually to access that product. And if the publisher picks your deal and touts your deal, whether it's a Reg CF or Reg A plus offering as the deal of the month, you can raise potentially millions of dollars. So this is a very hot trend. However, it's become increasingly challenging and not troublesome, but there's just no guarantee that you can actually get picked up by a publisher. So the publishers that are operating in the Reg CF and Reg A plus space are inundated with deal flow. And so banking on this strategy is probably not a good one. But if you can get featured by a publisher, it's actually very strategic. The publishers are not compensated by the issuers. Very important point to make. So they are technically independent and therefore unbiased. if the publishers were ever taking compensation, they were being paid by the issuer, whether that is cash or stock compensation, the publisher would be required by law to disclose that compensation. It's called a 17B disclaimer. But most of the publishers in this industry right now do not take compensation. Therefore, they are independent and unbiased. And honestly, that's why this method works. Some of the publishers that are most active in the industry are Palm Beach Ventures, Money Maps, Legacy Research, Agora, Angels and Entrepreneurs, and others. And if you're on the receiving end of a promo, you could raise anywhere from $500,000 to $30 million. So this is a very strategic pathway to raising capital if you can attract a financial publisher that wants to do a big write-up for your deal and then sends it to their thousands of paid subscribers. Another trend, and this is a very recent one, there is a startup in Silicon Valley called Stonks. Great name, of course, and the founder is a very successful serial entrepreneur, was able to raise capital for Stonks from some very notable venture capital firms, maybe most notably A16. And Stonks is a platform for live streamed demo days. So, YC demo day for everyone. And they bill it as first access to competitive invite-only deals. And they want to help companies raise capital 10 times faster in a matter of days instead of weeks or usually months, because the fundraising process is so brutal. Now, at the moment, Stonks appears to only be featuring or hosting Reg D deals. So these are your traditional private placements, which, because they're being marketed online, these are called 506C offerings. So it's a private placement that is being solicited or marketed by the issuer and Stonks. And so the companies that are raising capital through this live stream platform have to verify the accreditation of their investors. But I wanted to highlight it because this company is on the cutting edge of this trend. In fact, they're pioneering it, and I believe that it is likely they will parlay their platform to Reg CF as well as Reg A Plus offerings. And one last trend that we're pioneering, which is really docu-series storytelling. So I wanted to share this quote: "Storytelling is the most powerful way to put ideas into the world." That was a statement made by a very famous storytelling professor at USC, Robert McKee. And we are big believers in the power of storytelling. And yet there hasn't been a lot of in-depth storytelling in the history of the industry. So we want to bring it to life. So a quick overview of the Going Public series. This is really a groundbreaking show where we follow founders on their capital raising journey. And for the first time ever, viewers of this show can click to invest in featured deals while they watch. You can click to invest in featured deals while you watch. And we've got a picture of our incredible young host, Lauren Simmons. Lauren was the youngest ever female trader on the floor of the New York Stock Exchange and just the second Black female trader in their history. And every company in the Going Public series is using the Reg A Plus securities registration exemption to raise capital. And you probably know, but just in case, if you don't, Reg A Plus allows issuers to raise up to $75 million, gives all of these featured companies the ability to generally solicit or broadly market their investment, and anyone over the age of 18 globally, of course, can legally invest in featured offerings. We estimate that there's been about $3 billion of capital raised by over 1,000 companies since this securities registration exemption went into effect in the United States in mid-2015. And so every company in the show is using this capital raising tool. This is a streaming series. Season 1 of Going Public will stream on entrepreneur.com. This is a first of its kind show, and because it's streaming, everybody, of course, is on a device from which they can click to invest. Entrepreneur is actually a brand that's been around for a long time, for 40 years. They still have a legacy magazine that goes out 10 times a year. That's Entrepreneur Magazine. But their digital property, entrepreneur.com, is quite impressive and robust in terms of its viewership and monthly visitors. Today, they have about 20 million monthly unique visitors, and we're forecasting that this series will do somewhere between 1.5 to 2 million unique viewers per episode. It's actually a fairly accredited audience. So granted, anyone over 18 globally can invest in deals they see in this series. We wanted to consciously work with a platform that had an audience that was slightly older, had more disposable income, and Entrepreneur has that audience in spades. The average age of their audience is 40. It's a 60-40 male-female audience. very high average household income, made up primarily of C-level executives, entrepreneurs, business owners, franchisees, franchisors. These are casual investors. These are people that have money to invest. This show is really not designed for a 21-year-old Robinhood options trader. No offense if that's you. We welcome you to watch this show and enjoy, but we're consciously targeting a slightly older audience, millennial and Gen Z. And we have a comp for this series. Entrepreneur has a series called Elevator Pitch that's in its 7th season of production, does incredibly well. So if you look at these stats, their last season did about 33 million views, and they have a nearly 80% completion rate, which means that almost 1.5 million people are watching the entire 22-minute episode of Elevator Pitch from start to finish. I talked to you about Lauren Simmons, our host. She's absolutely incredible. We're excited to share with you a trailer for season 1 of Going Public. And again, thank you so much for listening. I'm Darren Marble, and you can find me on Twitter at Darren Marble or connect with me on LinkedIn. Thank you.
Welcome to Going Public. On this season of Going Public, we've uncovered 3 American companies
You guys have something your competitors don't.
that are putting it all on the line.
This only happens if you get money.
No turning back now.
They need to raise serious capital
It's go time for everybody.
to take their companies to the next level.
That's a thing to watch for.
We went from 0 to 1 million users. This has been a huge hit.
Yes! We've decided to bypass the venture capitalists and the institutional investors.
To partner with and reward our customers.
We're not into making the richest people in the world even richer.
We are coming directly to retail investors with our Regulation A+ offering.
Giving you the chance to get in on the ground floor.
You want to go fast?
Yeah.
You'll see firsthand what it takes to get their companies ready.
You ready to do this? There's a lot of work to do. Get our audit done. Get our Reg A application into the SEC.
We believe we set the record from date of filing to date of qualification.
With the help of mentors who've been there.
Working with you on messaging is something I'm really excited about. Taking complicated concepts and turning them into a t-shirt.
The right celebrity partner will change the face of your brand overnight.
What has been Proven's PR strategy? It sounds like we need one.
Then it's time to pitch.
I'm a little nervous.
Are you?
Yes!
Everybody likes to talk about AI, but this is truly unique.
The way that math works out, we think that's going to achieve billion-dollar valuation. You're a hell of a salesman.
And make their case to investors like you.
What can we do with 10 to 25 million when in our past 10 years we've only had 2?
Will Proven's custom skincare tech revolutionize the $155 billion beauty market?
Click to invest.
Will Treble beat the streaming competition and save music for the masses?
Click to invest.
Will Hammett's commitment to quality craftsmanship beat fast fashion?
Click to invest.
It's their journey, but ultimately your decision.
They think we're going to be the next Spotify.
Going Public premieres on entrepreneur.com
October 19th.
Welcome back, everyone, to another session at 2021 Equity Crowdfunding Week. My name is Laurel Scott. I am the COO and co-founder of Startup Starter, and I'm here with the wonderful, the beautiful Christy Curry, Chief Marketing Officer of Realpha. Amazing sponsorship. Thank you so much. We have our coffee here, and we have the amazing Blackwater from our Blackwater sponsor of the conference. Alkaline pH 8+ balance. Balance, love, and kindness. Thank you, Blackwater, for sponsoring this conference. So many cool things.
Yeah.
Yeah.
A lot happening.
Yeah. So tell everyone about yourself and
Yeah.
kind of give yourself an introduction to everyone.
Yeah. So, hi guys. My name is Christy Curry. I'm the Chief Marketing Officer at Realpha. And basically what Realpha is for like Robinhood, but for investing in Airbnb properties. That would be our tweet pitch. That's the simplest way to explain it. We have an amazing team. We built an amazing team. We're based in the Midwest in Columbus, Ohio currently. And, you know, my background, I've always been in the startup space. I launched my own med tech venture out of college. I went to Miami University in the the amazing Altman Institute for Entrepreneurship. And, for about a year and a half out of college, I worked to launch my own venture. I worked with nonprofits, children's hospitals, and then I actually moved on to work for a corporate innovation firm where I got to work directly with startups and corporations, helping, these big corporations who were being disrupted work with the disruptors within their industry. So that was, really fun being the middleman in that situation, but really got a lot of strategic experience there. Helping startups learn to tell their stories, kind of the art of the pitch, explaining complex technology in a way, that is compelling, whether it's a B2B or a B2C company. And ultimately, I actually followed our CFO now from that company over to Realpha a few weeks after he joined. And so now I've taken on the role of Chief Marketing Officer, and we're really excited about everything that's happening.
Yeah, I mean, we're so excited for you guys to be here. They brought their entire team here. We also had the CEO, founder of Realpha, Jerry Devenor. Do I always take it right?
Yeah, Gary.
Gary, right?
Yeah.
So we've had them here. Their entire team is here in the official house for Equity Crowdfunding Week, and so
That's a good time.
we're telling your story. There's so many cool things happening in the real estate space right now, especially in the equity crowdfunding realm, right? So tell the people kind of a little bit more about Realpha, specifically the setup and how you guys established.
Yeah. So, I mean, our focus has really been in the Airbnb space, and that's really what differentiates us. And we kind of exist to empower people to invest in real assets again. We have this moment in time where you have, we say it in the commercial that everyone's seen airing, but this past year especially, there's so much out there and so much following the crowd when it comes to investments. Right. We're so empowered with our phones. But at the same time, these younger generations not investing in their own homes, not investing in these real assets. And it's one of the most powerful, industries of all time. Billionaires have a third of their wealth invested in real estate, and there's a reason for that. So Airbnb has created this new industry, not only within hospitality, but within real estate. And as this industry emerges and becomes more consolidated, there's this moment in time where you can actually give people back the power to own these assets that are going into their neighborhoods, that are going across the world, and have a stake in them. And so that's really why we exist. So essentially what we do is we use technology to identify the most lucrative properties for Airbnb. So we're a tech-driven company. We have been since day one. And that's first and foremost. And then what we do is we allow people to buy fractional shares in those properties. So we maintain 51% ownership, and that's what allows us to allow anyone, regardless of if you're accredited or not, to invest in our properties and generate wealth through real estate. And, it's always been, it's about real assets, but it's also about real moments. And that's been our mission since day one. So you're not just blindly investing in a property. You get access to go and stay at it, on top of getting the quarterly dividends from the Airbnb revenue, on top of having your equity appreciate as the property appreciates. So really it's, kind of both the, it's the pride of ownership, but also the wealth generation that comes along with it.
It's funny because, so for me, I bought my house when I was 30, not to give away my age too much, but I bought my house when I was 30, and the whole process of buying a home is two years. You need your taxes, you need all these things, right? But this is really giving people opportunity not to have to go through all that, but own equity, own part of the actual real estate market, own multiple properties because of the way that you guys have it set up. So you guys are making it to where they can actually add that appreciation, go and buy another house, and they're a part of that because they're investing into the crowdfunding space with you guys. So we talked a little bit about culture, right? So we talked right before we came on. We talked a little bit about our age and the team and what that looked like. And so talk to me a little bit about your team and what that looks like and how you guys are really helping in that space.
Yeah. So our team, we were founded in November. The reason we've been able to scale so quickly to the point that we're at today, we've crossed so many barriers that, most startups, it takes them 5 years to accomplish. And it really is because of this influx of all these cultures and all these different minds and empowering people to have the autonomy to make their own decisions and not feel constrained by, putting boxes on what you can or can't do. And it sounds like we're saying, we're the classic startup, it's like,
Right.
what are you not? But really, we move fast, we embrace new people. Everyone on my team pretty much is younger than me. And I give all these little people this autonomy to make these crazy decisions. But when you get all these people in a room and you're throwing around ideas, it's exciting. And we don't say no to really anything. If you can get up there and you can pitch your idea and you can justify it, sure, let's try it. Let's see what happens. And that's how we've gotten to the point that we are today, is by empowering the people within our team. And, the result of that is they know they're working towards empowering people to invest in these properties, to have their own wealth generation opportunities, to create real moments for themselves and their families. So it's really it's all rooted in our mission, and, nothing is a crazy idea.
Yeah.
It's an exciting place to be right now.
And I love the fact that you guys are doing that, because we got to look at like getting those ideas from them is good. And they're in such a younger generation, because they're actually a foothold and a stepping stone to the future of real estate, the future of equity crowdfunding, the future of investing. So having them put together the ideas is great. And startups are like, we do the same thing. So there's no bad idea. It's get in the room. Let's all box in. Let's talk about like, what's the next step? What are the cool ideas? And no one's idea, there's no top down, right? It's like, let's all just come together. I love that. So what made you like get into working with Realpha and your background itself?
Yeah. So, it's actually funny. When I was in college, we had to write these vision statements. One of my mentors, past professor, had us write these 5-year vision statements. Now I have everyone on my team do that as well. But a few months ago, for some reason, I was like, I should go back and read that. And in this vision statement, I always knew I wanted to do something bigger. I wanted to do something that had an impact. I was going to be in the startup space. I literally wrote, by the time I'm 25, I want to be the CMO of a high growth, high impact startup. And I didn't mean high impact in the sense of, or high growth in the sense of, of a super capitalism type of point of view, but I wanted to be a part of something that was having an impact and create a brand that people resonated with and was truly doing something disruptive. And then I guess, subconsciously I've been working towards that. Everything fell into place, and I definitely took a chance. We were at a very different point when I joined, but it's amazing to see what's happened. And I think it's all attributed to the best people coming together, having great leadership. Gary Devonor, our founder, is an amazing leader. So that's really what led me here, just kind of the pursuit of impact and being open to anything and to taking chances and, not being afraid. And that's why I empower my team to do the same thing. Don't be afraid to voice your opinion. Don't put boxes around yourself, and, see what happens. Because, a lot of time on these startups teams, you want people who challenge you. You don't just want people who go with the flow and say yes to everything. And that's, I've never been that person. So I think that's kind of how I ended up here.
Yeah. She's 24 years old. Her goal was 25. You did it. You're
1 year to spare.
You're already 1 year to spare, and then you're in grad school, right? Yeah. So
I don't sleep.
Hats off. Yeah, I mean,
sleep.
it's hard to sleep. The time goes by so fast these days. So Gary, right? So Gary has previously taken a company in NASDAQ, and so he's just created another foothold in another space, another industry. So talk to us a little bit about him. Although he's not here, talk to us a little bit more about him in his past.
So Gary, like I said, he's a very visionary leader, but at the same time, he's that rare combination of an extreme techie, like so technologically advanced, so with it, so visionary and tactical when it comes to technology, but then he's also just such an amazing articulate leader. So he has this approach that I think is extremely rare, and I think that has contributed a lot to our success. So he, Gary's someone, he came to the US with $65 in his pocket.
Yeah, we heard that this morning.
His first job at a tech company, he has always taken chances, and he went to Columbia University as well. He studied master's in technology management. He's had multiple exits, all in the technology space. And the last company, he took it to NASDAQ in under 4 years, a technology services company. He's built, 1,000+ people teams, and he's really, really amazing. And basically this company is very different. It was a personal reason that he started it. You know, like he said, he was an immigrant. He never had access to invest in real estate. He didn't have the know-how. It was completely out of his, you know, purview. And then he got a call from a friend when he was kind of in this chapter in his life where he's like, what's going to be my next thing? And she says, hey, I want to buy an investment property. I've heard how lucrative Airbnb properties can be. It's a $400,000 property. And the banks want 25% down. How can I possibly pay that? And basically what she was saying, like, Gary, can you please, you know, loan me the money?
Right.
Or find a solution. So he's solution oriented. He immediately wanted to solve the problem. And that's, you know, that's how we ended up here. And he started with a technology first solution, and it's grown into this, you know, amazing brand.
Yeah, I mean, and anyone can take their own ideas to the next level, regardless of what your background is. Again, he came here with $65 in his pocket, and he's able to create this amazing company, take companies to exit. So why reggae, right?
Yeah.
Why the reggae space, and why equity crowdfunding for this one?
So, and that's the question early on we got asked constantly. You know, Gary, he took his last company to NASDAQ. If he wanted to raise $75 million for us to acquire these properties, he could. It would be much easier, like, quite honestly, than doing it this way. But the reason we're doing this because our mission is to democratize who can invest in real estate. And that's not just the people who are going to be our consumer, who are going to come in and invest in individual properties. It's also who can be a shareholder in the company. So we saw this opportunity to, you know, we have to build up our inventory. We have to build up the supply because we're going to have way too much demand. We know that. How do you allow people to participate in that as a shareholder? You know, the most powerful thing in 2021, I think, is community and people feeling like in these companies, and that's why equity crowdfunding is so great, to feel like they're a part of your company. They see themselves within your brand, your offering. They feel connected to it. So if you can have those people as your shareholders, as opposed to, you know, focusing solely on venture capital or solely on the 1% to fund you, that is like unparalleled. The sky is the limit at that point. And that's why it's so important to us to do this raise and to not only focus on institutional investors within it, but really focus on retail. You know, a lot of people running these Reg A's, it's uncharted territory. It's the Wild West. No one knows how to do it. So you have to have a combination of institutional capital because they want to, you know, retail wants to see validation from them, and, you know, institutional capital wants to see validation from retail investors. So we kind of have this multi-tiered strategy, but it's really solely focused on making the retail investor successful.
Yeah, I mean, and it's crazy because the retail investors spend a lot of time utilizing Airbnb, right?
Oh, exactly.
They're always on it.
Yeah.
And I mean, I go out of town, I look at Airbnb, I look at other you know, vacation rental sites. Even in the midst of us putting this and getting the house for 2021 Equity Crowdfunding Week. So why specifically Airbnb? Like, why was Airbnb the one to put it on?
Yeah. So, well, Airbnb, that's another good point about the Reg A. What we see is shareholders, these retail investors, will become our syndicate members, and syndicate members will become guests, or guests will become investors, or shareholders or syndicate members. It's this virtuous cycle. So but the reason, you know, our business model is focused on Airbnb is because, you know, there are so many other offerings out there focused on, you know, you can invest in month-to-month rental properties. You know, you can invest in these slight hybrids of REITs, or, you know, invest in multifamily developments that, you know, maybe or maybe have not broken ground yet. But Airbnb it's focused on the people, it's focused on community, and it's an emerging industry. But what we see is in terms of returns, and it comes back to returns, you know, these people are our shareholders, they're investing in these properties. It's 70% plus or higher than what you could get for a long-term rental. So we'll see, you know, a property in Dallas, for example, we saw $1,500 is his estimate of what we could get as a long-term rental. Well, in July, we saw $3,000 plus from the Airbnb rental revenue. But that all comes back to technology and using the technology to buy the best properties so that you remove subjectivity and people have confidence in the properties they're investing in.
Yeah, and you talked about a little bit about this and bringing this is all about the people for you guys, right? This is a huge piece. Like the idea, even like at your age and at your team's age, and I'm still young, let's say I'm young. When we think about property ownership, we've always thought about like, oh, I have to go to college, I have to do this, I have to do that, and okay, then I'll have a family, then I'll buy a house, all of those things. I think this really allows our generation, my generation, your generation, to really take a step back and say, I can have a piece and own a piece of real estate early on in my life, right, to help create that generational wealth, to help create financial prosperity, and it just goes on to where we are in the world now, especially in the U.S. So
it's a sense of pride, and we don't want to take away that sense of pride from this ownership. You know, people value travel, they value new experiences, but they really value the pride in ownership. So we are doing some interesting things. So if you're a Reg A shareholder, we're actually giving you access to go and stay at all of the properties that we're ever going to own. We'll give you ReAlpha rewards or credit. And additionally, we're actually taking 2% of the 75 million that we're raising and we're matching it. So $1.5 million for us to create real estate assets for people in underrepresented communities within the real estate industry and sponsor them to become syndicate members. And additionally, give people who want to start contracting businesses, want to start a painting company, want to learn a trade, want to be interior designers, give them the training and the education and also the seed capital and the first contracts with ReAlpha to get started. So that's what we're really excited about. You know, we want to prop up all the communities we go into, you know, just as much as we want to help people generate wealth. You know, we don't want to go into these communities and bring in, you know, these national partners, et cetera. We want to create these jobs and we want to create opportunities. And, you know, that's why we believe so much in community and the network effects.
Yeah, and I love the alignment that we have. We talked about this a little bit before and putting this together, like the alignment we have in teaching, especially around equity crowdfunding, right? Equity crowdfunding education is very important now just because when you look at with the property, in order for you to really understand how ReAlpha works and how to actually go into it, you also want to understand the equity crowdfunding space and those regulations, that how they're different than actually buying a house or being a part of buying a house on Airbnb to use. So this is great. It's great information for people to have just on the forefront. So syndicate versus Reg A investment, right? So we talked a little bit about that. Tell me your thoughts there.
Yeah, so right now the opportunity is open for people to become a Reg A investor. So we just launched this past week. So for as little as $1,000, you can invest, become a shareholder. What you're investing in is all properties that ReAlpha will own. So you're investing in the company as a shareholder right before we go into this kind of explosive growth period. And that allows us to build the inventory. So $75 million to build an inventory. Within the first year, we plan to go to 500 plus homes. Build the inventory, we'll put it on our marketplace app and open up 49% ownership in those properties for syndicate members to pick and choose the properties they want to invest in. And that is actually interesting because it'll bring in another $75 million from syndicate members once we get to that point. So, you know, this is really an amazing point in time to be investing. You know, we love to compare it. And a great way to explain equity crowdfunding is imagine getting in on the friends and family round of Airbnb, Robinhood, all of these companies. What would that look like for you? And that's what's so powerful about equity crowdfunding and all of these companies, you know, like ReAlpha launching these offerings. And we think people need to know about it.
Yeah, absolutely. You guys have cool houses too, right? You guys go in and you guys actually say, okay, let's increase the value of these homes as well when we go in there because you have these individuals who are investing in them, right? So you take that and they invest in the home and you guys redo, make some upgrades to the home and then it brings up the property value of that and you guys take that property value increase and you guys put it into another home and that person continues to get ownership in multiple homes. I think that's amazing. So what do you guys plan to do with the Reg A money specifically as you guys are currently raising it?
Yeah, so the Reg A money, so I mentioned the Reimagine Fund, 2% will be matching at the parent company level, putting it into the Reimagine Fund. But then what we can do with this Reg A money, so we will be putting it into up to 1,500 properties, which, like I said, will bring in another 75 million from syndicate members. So that can take us to $1.5 billion in assets under management, you know, in the near future. That's kind of our trajectory. So, but with this 75 million, you know, we'll go up to about 1,500 properties in that portfolio.
Yeah, exciting. So you guys have some cool stuff happening, right?
Yeah.
So tell me about that.
Yeah.
I've seen some stuff already. You guys kind of shared some.
Yeah. So like I said, we're all about crazy ideas. We think that equity crowdfunding and Reg A is something that people need to know about. especially, you've seen Wall Street bets and all of these crazy things that have happened this past year, the SPAC mania, or SPACs or pop culture. Why don't people know about Reg A? So we've gotten a little bit creative. We're releasing something soon. I would say everyone go check in on The Big Short, rewatch it, watch the scene with Margot Robbie in the bathtub, and then think about what it would be like if, Elon Musk and Margot Robbie merged in that scene to explain Reg A. That's all we'll say. And there will be an opportunity for a contest. We're going to actually be giving away a Tesla when we release this video if we reach 10 million views. So we really just want to build awareness for the entire industry, have fun doing it, and we'll see how it goes.
Well, good. Well, listen, I really appreciate you just even taking the time, bringing your team here, and meeting you guys, and all the time we've been able to spend and learning about this. You guys can learn more as well. You guys can go right in here. You can actually, you'll be able to scan a QR code throughout the rest of this. They'll be back again. You'll be able to scan their QR code, and you'll be able to go right into where you can find out more information on investing. And yeah, we're excited. Again, got a cool sponsors. You guys are an amazing sponsor, and we appreciate it. There you go on the screen. You guys will be able to go in there and scan Realpha and learn more. So visit their website. Thank you guys very much. More sessions coming up. Great day here at the Equity Crowdfunding House here in LA. We are live. Stay tuned. We'll be back.
It's your chance to be Mr. Wonderful. You can invest directly into Start Engine, the equity crowdfunding platform that lets investors fund innovative startups that make things like this jetpack, this hard seltzer, this golf hoverboard, and this electric motorbike. And now you can invest directly into Start Engine too. Go to startengine.com today and start investing. Sorry, got a jet.
Hey, what's going on in the markets today? My name is Calvin Cooper. I'm the co-founder and CEO of Rove, and I'm really excited to speak with you all today about ownership for all. There's a lot going on in the market, but our mission is to expand access and opportunity for everyone to own around the world, and we want to empower 1 billion people to own $1 trillion in global real estate and maybe Mars, because obviously when we start funding new developments in space, it's going to be on a distributed ledger, and there's so much opportunities to explore in the world. But we're addressing a major problem. There's a growing generational wealth divide. Millennials have much less net worth than previous generations, and this is driving a lot of problems in society. And this arises out of a big issue that we have two types of people in the world, renters and owners. And more millennials are getting stuck in a cycle of renting and not having access to ownership. We're spending a lot more than previous generations on rent. The average millennial is going to spend over $200,000 in lifetime rent. Gen Z is going to spend more than that. And I made the mistake of calculating how much money I spent on rent in the past decade, and the number was astronomical. It really shocked me. And so that's why we started Rove, to address this issue, to make ownership available to everyone. There's a secret. Most people don't realize that the share of rent burdened households in Columbus, those that spend over a third of their income in rent, is about the same as it is in San Francisco, especially if you're single, you need 1 or 2 bedrooms and you're living downtown, you want to live in the neighborhoods that we live, work, and play. It's a challenge everywhere in the country to pay rent and to save money, have enough money saved after paying rent and taking care of all your bills to save up for a down payment to buy a home. And this isn't just a domestic problem. This is a problem all around the world. Anywhere there's opportunity, there is an affordability crisis happening. It's like so many of our problems arise out of the previous solution to our previous problem. And so wherever we had a challenge with economic development and trying to attract high-paying jobs, oftentimes shortly thereafter, rents start going through the roof, housing prices go up, and there's affordability issues. And home ownership is getting further out of reach in spite of the pandemic. Home prices are through the roof. And while that's nice for people who are existing homeowners, this means that breaking in with your starter home is almost impossible for most of us. And so millennials don't own anything. We have $0 in that real estate wealth. In fact, we don't own much at all. We don't own our first home. So definitely not going to own our second home. So we're Airbnb. We don't own music anymore. We subscribe. I'm old enough to remember opening up a CD album cover and really enjoying that experience. But now we have access to all the music in the world at our fingertips. We have access to vacation homes all around the world that can be easily booked. We can get a car at any moment with Uber. And so our relationship with ownership and use is changing. It's expanding, in fact, and giving us more experiences. So home ownership is next. It's the next horizon where millennials are starting to value experience in a different way than previous generations. That's why you see the number of households making over $100,000 in income that's renting has doubled. And 50% no longer believe that buying a home is a good investment. And almost 20% of millennials plan on always renting and plan to never buy a home. And so it's as if that we don't care about ownership, but there's a huge narrative violation out there. The NFT market, non-fungible tokens, where people are reimagining what it means to own digital goods and trade them. And this is a huge and growing market. As you can see in the past year and a half, it's really exploded almost overnight, it seems. But what's going on here is that people are reimagining ownership in a globally native, digitally native, social way that doesn't have the same middlemen that we have come to mistrust based on everything that's happened throughout our lifetimes. We've lived through multiple financial crises. And so we're reimagining the global markets, and now that's starting to interact with ownership in a big way. And you see this happening with DeFi, decentralized finance, exploding, and reimagining lending and borrowing without middlemen and bankers. And so this is a movement. And what's that have to do with real estate? Well, to think about crypto and see what's going on and say it's just a bunch of smoke and hype would be to miss the fire within the smoke. When there's smoke, there's fire. And there's something really interesting going on. There's a financial populist movement where people are coming together and having conversation, building communities on Reddit and Twitter, and hopping into Robinhood and Coinbase and starting to trade and buy assets. And so, yes, people are investing for an ROI, but many people are investing for so much more, to live our values in the market and to create something new and create a new system that's global and that's more fair and transparent. And so it's really exciting. And that's created a multi-trillion-dollar market over the past several years. And now financial communities. People are hopping into Reddit now, and then hopping into Robinhood and investing in public equities, and that's changing the way corporate boards are thinking about strategy. Yes, they're thinking about brand, building a brand and connecting with their customers, and you've got customer advocacy to think about. But now you've got investor advocacy, where people are using their dollars and voting with their dollars and living their values through investing. And that's coming to real estate. That global ESG perspective is coming next to the world's largest and most important asset class. And so this is projected to be $1 trillion market over the next several years. But I think this is a huge underestimate of what we can actually do. This thinks about when you look at real estate crowdfunding, it's from the perspective often of real estate private equity, but tech enabled. But when we start to build new user experiences that are digitally native, that have a global perspective, that have a product-driven growth perspective, I think the market opportunity is going to be so much greater, because we're competing with TikTok and Instagram for attention, Reddit for community, because that's where investors are going to talk about their strategies and collaborate, and then hopping into Coinbase and Robinhood. So this market doesn't compete with real estate private equity, essentially. Real estate crowdfunding competes with Instagram and Twitter for attention, Coinbase and Robinhood for dollars, and places like Reddit for community. And so when we create those experiences that enable you to download an app, invest as little as $1, and invite a friend in 1 minute, to build community, to invest, no lockup periods, that's transformational. And that's what we need to take this market mainstream, to go from the E-Trade and MySpace days of this market into the Instagram Robinhood days. And that's the future. And so this is so critical. It's about more than finance. It's about literally, it's about our democracy. And so I always end on this slide, because John Adams is one of my favorite presidents. He was our second president and one of the founding fathers of this country. But he wrote that the only possible way of preserving the balance of power on the side of equal liberty and public virtue is to make land ownership easy and available to everyone in society, and that we should divide land into small quantities so that the multitude may own it. And so this has been hundreds of years in the making. And finally, we can realize that vision. But the reason why John Adams talked about this is so important, he kind of built on some previous work. But we know that when economic power and political power become disconnected, we have civil unrest. And so it is absolutely critical that we expand access and opportunity for everyone to own in our communities. And that's what we're doing at Rove. So visit our website, rhove.com, download our app, follow properties, follow sponsors that inspire you, and let's change the world. Let's empower people all around the world to invest in and own the places we live, work, and play.
The best advice that I have received is to be patient. Nothing goes according to plan. And so sometimes you just have to take a breath.
You're either playing chess or you're playing checkers. And if you want to be a good entrepreneur, you have to be playing chess.
The best advice I ever received was make something people want.
When you first start as an entrepreneur, you're scared to share your idea. The best advice that I got was, if you had your idea stolen, you'd already be halfway on your path to success. So go ahead and share it as much as possible.
The best advice I ever received is be determined and don't stop.
Connex, revolutionizing the global private capital.
CoreConX, revolutionizing the global private capital markets. There are over 450 million private companies worldwide working in a fragmented network where service providers, regulators, broker-dealers, issuance platforms, transfer agents, secondary markets, legal advisors are all affected, all working in different systems not connected. Just within the United States and Canada, 145,000 companies raise capital each year in this disorganized, inefficient, and fragmented system, full of friction, duplication of resources and information, wasted capital, etc., all at the cost of the investors. Today, a revolutionary company, CoreConX, the world's first all-in-one platform to empower the private capital markets ecosystem that currently exists, empowering companies to manage their corporate records online, empowering the broker-dealer community around the world with online investment platforms to meet their regulatory compliance, empowering the ATS operator license holders to promote and support secondary market trading, empowering existing transfer agents worldwide with one platform to service their clients throughout their customer lifecycle. This is CoreConX, the world's first infrastructure for the global private capital markets.
Aloha, and welcome to the Hawaiian Bros Ohana. Family on a mission to extract flavors of the old.
Thank you. Are you an everyday person who loves our community but feels like you can't make an impact simply because you don't have a lot of money? Are you interested in building wealth? To build wealth in our community, we must first build up our Black entrepreneurs. One of the most underestimated investment opportunities is the Black business owner. In traditional markets, most of us are unable to invest in early-stage companies like wealthy families do. Wealthy people buy shares early in a business and participate in the profits if and when the company gains traction. As early investors, they make most of the investment returns. Now, we can do the same. At the 10K Project, we have created an ecosystem where everyday people can invest in Black-owned businesses. Here's how it works. Entrepreneurs from various industries come to our community and pitch their business ideas to us. This is done through what we call a Bet on Black pitch. Investors within the community can listen to the pitch, and each individual person decides if he or she wants to fund that company. And product and service providers can add themselves to our expert directory. Examples include attorneys, accountants, web developers, construction professionals, and others. Individuals with consumer products are also encouraged to add themselves to the directory. If a business or community member is looking for your products or services, they are encouraged to search the directory and reach out to you directly. This is how we circulate the Black dollar longer in our community and how we build wealth together. We want to invite you to become a member of the 10K Project. As a member, you can attend our Bet on Black pitches, enter your business information into our expert directory, access our expert directory to find Black-owned businesses, receive Equity Crowdfunding investor training and resources, learn more about alternative investments during our members-only wealth-building webinars, participate in peer-to-peer wealth-building conversations, and enjoy exclusive content within our Knowledge Center. We have the power to create jobs, profit from our own innovation, circulate the Black dollar in the community through group economics, elevate Black business growth, and build generational wealth. If you want to make a major impact as an investor, then become a member of the 10K Project and join our movement.
Now RX Pharmacy delivers your medications in hours for the same price as your regular pharmacy. Visit nowrx.com to get started. Now RX, a better pharmacy.
Hello, my name is Jose Barrera, and I am the co-founder and CEO of Startup Starter.
And I'm Laurel Scott. I am the co-founder and COO of Startup Starter.
Startup Starter is for the people that want to start a business but don't know how. Startup Starter is for the individual that dreams of someday owning something but doesn't have the courage because he doesn't understand that he's capable of.
Startup Starter is opportunity. It's a place where you can get what you need, whether you are a kid that dropped out of high school, college. With Startup Starter, you can come and learn all the things from marketing, from finance. You can learn them at your own pace and actually become your own expert in them because we're providing you with the experts to do it. I think the pandemic really showed us a lot of and opened our eyes to a lot of the nuances out there in the world, a lot of things that we're missing.
When the pandemic hit and suddenly business is online and you have to go find the stuff, that's when really the light bulb went up, because it's like, if everything's online, and I have to navigate the whole web to figure out what I need, then you suddenly realize that why can't I go to one place? You should have just a single brand to go to that is going to take care of you, no matter what it is that you're trying to build and whatever business you're trying to create. Startup Starter is the most complete resource that we can bring to people when it comes to starting a business. It's the best-in-class education that is affordable and designed for the digital age, cinematic, and watch people that look like you, that feel like you, that are charismatic, that know their stuff, that are teaching you stuff that you actually want to know.
It's the stuff that you not only want to learn, but you need to learn. We're building the next phase of business education to make it accessible to the world.
It's been built from the ground up with people that needed help and with people that were eager and willing to help.
This started all from us saying, how can we bring people together? Because like every business has become an online business. How can we be a good online business to connect other online businesses in one place?
I've always loved helping people. I got into business not because I wanted to be in business, because people were asking me for help. That's what I like. And at the core, that's what brings me joy. I don't see it as work. I don't see it as business. It's just what I like to do. Startup Starter helps us do that at scale.
I love the idea of helping people while also being able to make a lot of money, writing your own ticket.
We're building it for the dreamers and for the everyday individual that just wants a better life.
Hello, everyone. We are back for another session. I am speaking with the wonderful Cherie Warwick, CEO at the 10K Project. We are here for a very, very important conversation, one that is dear to my heart as well. We are talking about the Black Founders Crowdfunding Opportunity. I am Laurel Scott. I am the co-founder and COO of Startup Starter, and we are excited to have you back here. Tell us a little bit more about this. We'll dive right in. I'm so excited for this conversation.
Absolutely. First of all, thanks for having me, Laurel, and this amazing week that you have talking about equity crowdfunding. So my name is Cherie, and I am with the 10K Project. We are the largest community of Black investors who actively fund Black-owned businesses through equity crowdfunding. And the idea is if 10,000 of us came together, for example, and each put in just $100 into funding and investing in business, that's $1 million. We can fund our own businesses from the ground up. We can create jobs in the community, we can profit from our own innovation, and we can work together to build Black wealth. But I will say, because this is a diverse group, that not all of our investors are Black. We have people from other ethnicities. As long as you are interested in uplifting the Black founder, then we definitely would welcome you as well as one of our investors.
Yeah, it's exciting. Again, like I said, this is very near and dear to my heart as a minority Black founder in a company. Having this conversation is so important because there is a lot of underrepresentation from the Black community that we do need to speak on, that we need to shed light on. A part of just a lot of the educational resources that are out there, to be able to bring that to our community, to be able to have conversations around it, to be able to understand how to invest back into the ideas and the dreams and everything that we want to do. So thank you for having the 10K Project, for putting this together and being such an advocate in the space.
Thank you. And the funny thing is, I didn't want to do this. I was saying it for 3 years to a group of people, like, hey, you know, instead of us trying to beg other people to fund our businesses, let's start funding our own businesses. And I kept saying, if 10,000 of us come together, we could raise $1 million, just $100 per person. And finally, my co-founder, Tawana, one day in a closed Zoom meeting, looks at me and said, you've been talking about that for 3 years. When are you going to do something about it? And I literally was like, I'm begging someone else to do this, but sometimes when God puts something on your heart, you keep saying it, and other people say, "We'll back you up if you do it." Then
Right.
that's how you end up being the co-founder of an organization.
And action, right? It's all about action. It's all about
Yeah.
change. Legislation is a big piece of that, right?
Mhm.
And so we're headed in the right path. So we
Yeah.
have a pretty quick discussion here. So I definitely want to
Sure.
dive right in just to kind of get
Sure.
started. Like, so we find that like Black entrepreneurs are the least likely to receive funding when it comes to building their dream, building their company. Can you talk to me a little bit more about how you guys address that and how you bring that to the forefront?
Sure, yeah. So the way that we address it is through equity crowdfunding or debt crowdfunding. So a couple of things that happen in our community with our businesses are a lot of times we don't necessarily have the best credit, and I'm not going to go into the reasons for that. A lot of times our homes are undervalued, so we can't just go to the bank and have that as collateral. A lot of times most of the time, we don't have the rich uncle or aunt or frat brother that we
Right.
can go and, bring 10 frat brothers together and each of them gives us $50,000 each, et cetera. However, what we do have within the community is a lot of people with a lot of heart who do have small dollars. And one of the things I say is that crowdfunding is not new to the Black community. If you think about the civil rights movement, that was all crowdfunded. Dr. King was, the person saying, this is what we're doing. We're going to the mountaintop. Who wants to come with me? And the
Absolutely.
Black church at the time, they would pass the plate around. If other people remember, the building fund is another famous example of crowdfunding. We also used to have rent parties back in the day. That's another example of crowdfunding. But now we get to do it and we get to profit from that innovation that these Black founders have as well as the community. So it ends up being a win-win-win situation because there's a third group of people we bring together, but it ends up being a win for the entire community at the end of the day.
Yeah, I mean, even with that, and so much of the community, and like you said, passing around the plate, we've also had like in the last several years this whole idea of the flower and building this flower of individuals and passing on, and someone putting in 500, and we kind of been going down that path as well. And it's crazy because like we start with 1/3 the startup funding, right, as our counterparts, which affects our ability to hire, to be able to promote, and to grow our businesses. And so how is the 10K project addressing that and shedding light around how we can do that better and to bring our counterparts to understand that there's a lot of people that have unique ideas that need to be funded, and we need to be able to have access to that capital to do so?
Yeah, so I think that the 10K project helps with companies being able, number one, to create prototypes. So a lot of times, if we're talking about, professional angel investors and VCs, they may not talk to you unless you have a prototype to show them, or they may not talk to you unless you have product market fit. Well, a lot of times with our counterparts, they will have, again, the family and friend round that they can go to raise the $100,000 so that they can get the beta version of their product and product market fit. Well, the 10K project, for example, can help with that being the family and friend round. And then when that entrepreneur, has proven themselves in whatever way that they need to, they're able to get additional funding from other places, or they could come back to the community to get additional funding as well. I also think that what we do is people not only within the 10K project become investors, but they become consumers of these products as well.
Exactly.
Products and most of products and services. So now you are able to show revenues within your business, and the community is able to help with that, share, become brand ambassadors, etc. The other thing that the community is able to do is become part of your team, and we have that all the time. So we have experts, and we know that Black people are brilliant in all areas of life and
Yes.
business, whether it's you need a software engineer, you need an accountant, you need a patent attorney, you need someone to do construction, plumbing, etc. Well, now we're able to uplift that entrepreneur with services and products that they may need in order to grow the business and get it to its next milestone. So the 10K project ends up being an ecosystem. And I think that every entrepreneur, whether or not they choose to come to the 10K project, needs what a friend of mine calls a super team. Her name is Erica. She calls it a super team in order to grow. We cannot do it by ourselves. And you can tap into organizations like the 10K project in order to not only get funding, but to build these teams in order to grow and to become the next unicorn, if that's what you choose to do.
Yeah, it's funny because now there's a lot more of investment, not enough actually, but there's investment going into, and there's a lot of focus on investing in minority owned businesses, Black businesses. I think that the pandemic showed us that, those ideas are important for us to have and to have in our communities, or even around the world. And then just with the Black Lives Matter movement, right? There's been a huge push to support the Black community here. And I put this into this to my notes here. Morgan Stanley report showed that when our businesses are poorly funded, we generate as much money as any other ethnicity. Founded business out there, VCs are not listening. Right.
Yes.
So they're not listening that we have these companies. They still don't fund Black entrepreneurs as much because many have not seen a successful company run by a Black entrepreneur to reach unicorn status. But now the Black community has another option. Now they can use their own community with equity crowdfunding.
That is correct. So that Morgan Stanley report I refer to all the time. And it is true. It was statistically proven in there as well that only about a third of VCs actively would even consider a minority, company, a minority-owned company. So I will say one thing though, with regards to Black people and how we can set ourselves apart. A lot of times we don't know. I've heard certain angel investors say, I receive pitches from Black founders, but they don't know their numbers. They don't know the ratios they should have. They don't know their competitors in the way that they need to. So I'm going to say that it's important for us as Black entrepreneurs to be able to step up to the table so that when we do get that opportunity with that right VC who is accepting and perceptive and wanting to do it, that we're able to knock it out of the park. So it is important for our entrepreneurs to be able to invest in the right people that can help you prepare your pitch, that can help you prepare to be able to answer those financial questions, that can make sure that your business is at a point where when that right person with the checkbook can write the $1 million plus check, that you are ready to accept it. Do you have, your corporation set up? Do you know what your valuation is? Can you respond to why that valuation is right for your product or service or your company, et cetera? So I just want to just wanted to say it's not always just the VCs. Now, I'm not saying there's not racism, but it's not always just them. Sometimes we need a lot more coaching as well.
Yeah, you know what it is? What I think it is that I think that for one, we do need to educate ourselves even more. We need to read more on things. We need to find the resources. We need to look for the resources. And that's a big part of why Startup Starter exists in the first place, to be able to provide those resources. And diversity for us is huge. Like, our team is made up of all colors, right? Mm-hmm. So, my co-founder is a Colombian, right? I'm Black. It's important for us to be able to bring and establish those resources for each one of our communities. And I think that what happens is when we look to establish those resources, I don't think that they're necessarily readily available for someone to say, hey, here they are for you to use, right? We have to actually go out and find them on our own.
Yes.
But then at the same time, I think what happens is because there's such a lack of it kind of like given to us to actually have right in front of our face and get help from that, I think that our Black founders and our Black entrepreneurs actually, they get scared to even go out and do it because they're like, well, I'm not going to be able to succeed anyway because I don't have the support, or our community is not being really supported. I'm going to get a no all the time. And I think that's the important piece that we have to see here, is that it's stunting our growth also because of the past that has shown that there is not a lot of support in the Black community of entrepreneurs as well as founders, and given the access to the funding to make our ideas come to life, right?
Yeah, so I would say this, that being an entrepreneur is a skill, just like being a plumber is a skill or an architect, etc. Entrepreneurship is a skill, and it's something that you have to study. If you say that you want to raise money for your business and you decide, number one is research all sorts of ways you can raise money for your business. Then when you decide on the best option, I'm a personal fan of taking not just classes where, I sit and listen to somebody talk to me, but I like group classes. I like live classes with an instructor. I like coaching one-on-one, and I'm willing to pay for those things. I'm willing to pay somebody, for example, to listen to my investor presentation and give me, critique and criticism, constructive criticism with regards to it, etc. So I think that you're right. We do need to study more, but a lot of people may not even know what to study or where to begin. I'm a huge fan of YouTube. I think that YouTube is like Google University. You put anything in there and just start listening to people. The podcast is like another great place. Just put a number, startup funding, a word, startup funding, and start listening to people. It opens your mind to what's out there, and then you'll start finding people that you like. You'll start getting more information from those individuals. And again, with the Black entrepreneur, don't be afraid once you find someone who really knows what they're talking about in an area that you need support, to open your wallet and pay for their time. Pay for their time.
And you just did, I think it's really cool because like just what we're doing is high impact for our community. And you're right, like we got to get our community more involved to say, go listen to these people, right? You recently did a podcast and an interview with Russell Simmons, who's a big advocate in the Black community of entrepreneurship and creating these generational wealth and also bridging the divide. So tell me a little bit more about that as well.
Yeah, so, that is the power of networking and your network. So we weren't looking for the interview with Russell at all, but one of our strategic partners came to us and said, hey, we're doing this NFT launch, is what Russell is doing, and you all have a great community of investors. Would you like to interview him? And the following week, we were on live streaming with Russell Simmons, and we've had since then a couple of other big names be introduced to us. So I think with any entrepreneur, whether you're Black or otherwise, there is the saying that your network equals your net worth. And that is very true. I actually changed the name. I actually changed the saying, and I tell people it's not what you know and it's not who you know, it's who knows you and who's willing to advocate for you, who's willing to bring you opportunities. Because a lot of times, the biggest opportunities that we get, the biggest checks that we get, the biggest opportunities and all of that comes from you not even looking for it. It just falls in your lap, and then you're scrambling like, okay, I'm going to figure out how to add this in too, because this is too good to pass up. So.
Yeah, I think we also need to really focus on how, as a community, we can also support each other. more, right? We have to advocate for our, not only for ourselves, but for the people who we see making the change. And I think that it's been hard because it's like, how do I give? How do I give? How do I give when I'm not able to receive as much as the other or my counterparts, right? But we have to really support ourselves, the community. I think there is a slight lack of that. I think because there's also a fear in that space, right?
So I'm going to respond with two different things. I used to be president of a referral networking group many years ago, and we ended up being the fastest growing chapter of that organization. And I discovered something very interesting. The people that gave the most referrals were not necessarily take a step back and say it this way. If I give a referral to you, Laurel, I give you a whole bunch of referrals, I may not get the biggest referrals from you. I might not get referrals from you at all, but I will get them from somebody just from doing good and putting good into the universe. So I think that a lot of times we expect a tit for tat. If I give you, a referral, you're supposed to give me a referral.
Supposed to give me.
I've noticed that in my life, it doesn't work that way. I give to you and then somebody else gives to me. And a lot of times it's bigger than I would have even thought of. So that was the first thing. And now I'm drawing a blank with the second
No, it's
thing.
okay.
It was important though. But go ahead.
Okay. If you come back to it, it's fine. I think that you made a big point right there, right? I think that a lot of times, even in our community, we're giving in order to get something back, right? We're taking. And we see that happening in social media when we're posting, like reposting all these things. We want somebody to repost for us or share our story or share our post. We want something in return. And for me, it's very much a give type of scenario, because at the end of the day, I know it's going to come back to me tenfold when I give to someone, right? And I give them something that is useful for them. And I also think there's a lack as well of asking. We cannot be afraid to ask for the referral, right? And if you don't ask, we all know the saying, closed mouths do not get fed. You got to ask someone and say, hey, this is what I need, so that they're aware, so that you come top of mind when they meet someone and say, you know what? I talked to Laurel. I talked to Cherie. I have somebody perfect for her. And that's a big piece of helping our community grow and helping our community attach to our counterparts. Through putting together Equity Crowdfunding Week, I was able to talk to not only Black CEOs, Black founders, Black executives, as well as my white counterparts, and say, hey, introduce me to someone who else is good to help build the equity crowdfunding industry. We have a few minutes. I want to go over a few of the notes that I put down as we're.
Yeah, and I figured out that other thing I wanted to mention too.
Let's do it.
Okay, so this is important. So you were talking about us coming together and helping each other. So first of all, I don't think that everybody is going to come on board with the 10K Project train or with helping within the community, et cetera. I have erased that from my mind permanently, okay? But there was a study that was done where they looked at specific countries and major social changes that happened within those countries. It was an official study. And they discovered that when you have 3.5% of the residents of that country get on board with something, the major social change begins to happen. So I calculated it, that's about 700,000 Black people getting together to say, hey, you know what? We're going to form this ecosystem in order to support Black businesses, fund Black businesses, build these super teams, et cetera.
Yes.
We don't need 40 million, 50 million people. We just need 700,000. And I know that is in the community.
It totally exists, and we can do that. And it's all about supporting each other, and getting more support from the outside of our community as well. There's a few things I want to. We're coming up on time here in a minute. There's a few things I want to share with people. To win at crowdfunding, you need a crowdfunding plan. Okay, SEC approved portals. right? An attorney who understands crowdfunding, legal compliance, right? We want to make sure we're doing everything in the right way. And you need the investors, right? So a little bit about the 10K project specifically, guys. The 10K project can help you with this and get you on the right track to understanding what you need to run a proper equity crowdfunding campaign, how to understand it, how to understand the legality behind it as well. The 10K project is the largest community of Black investors who actively fund Black-owned businesses, which is amazing. Thank you for that. Equity crowdfunding and the 10K project enable 3 groups of people to come together and win: entrepreneurs, investors, as well as the investors in the Black community, and experts to teach us all the things that we need to know, whether it's the accountants, the engineers, the construction workers, all of that, so that we can be able to properly create our business. When done properly, it will add trillions of dollars per year to the Black economy, to the Black community, and help us circulate the Black dollar even faster and longer, correct?
That is all correct. Yes.
Yeah.
Couldn't have said it better myself.
Yeah, I mean, this is amazing work. We need to talk offline, right? And figure out how we can do more together and how we can support each other. It's a pleasure meeting you with with doing this. This is great. I'm so happy to have you on. I'm so happy that we connected and we were introduced by your team.
Yes.
So yeah, any parting words that you want to give?
I just say to everybody, soak up as much knowledge as you can, select your path to success, and work the path, work the plan. That's it.
That's great. That's great. Again, I couldn't have said that better myself, right? And support each other. Now, get some Black water, right? Speaking of the Black community, let's get some Black water. Sponsor of 2021 Equity Crowdfunding Week. They are so great. They taste just like water. It's just Black. Check that out. And thank you so much for being here. Thank you. Let's continue the conversation. Let's continue to dive in and then help our community grow and all other communities around us.
Thank you
so
guys
much for joining. Yeah, thank you. Thank you so much. Thank you guys for joining. Stay tuned for your next session and stay tuned to 2021 Equity Crowdfunding Week. We have more to come.
This is where the magic happens. The Rogue Valley here in Oregon is a special place. Rugged, beautiful, home to honest, hard-working farmer types with weathered hands like these, and faces like this, and voices like mine. You can't buy these things. You have to earn them the hard way. We did it growing hemp, and I don't mean breakfast cereal either. I mean the stuff legends are made of. Under the Oregon sun, in the Emerald Triangle, where conditions are damn near perfect for growing the best hemp in the world. Our soil, our microclimate. No wonder it's called the Napa Valley of Hemp. Nothing ordinary about our seeds either. These are genetics, cooked up right here in Oregon, producing less than 0.3% THC and kicking out 15 to 20% full-spectrum cannabinoids. Plant in spring, and by October, it's field of frickin' dreams out here. Growing hemp this good takes know-how, and it takes dirt, great dirt. Last year, we harvested 110,000 pounds. This year, well over 500,000. By 2020, we'll be farming over 2,000 acres in Oregon, Colorado, and California. And if you like CBD, you're gonna love CBG. By the end of the year, we'll be one of the largest CBG producers in the US of A. Full spectrum flower, crude, distillate, isolate. Hell, we can even develop a custom profile exclusive to your brand. This plant has always had the power to change the world. Now it can, and it is. And it's happening right here at Hemptown, USA.
From the very beginning, Republica has been focused on representing underserved founders. To date, roughly 35% of funds that have been raised through the portal have gone to companies with a female founder. About another 25% has gone to companies with a minority founder.
What is so different at Republic is that we deal with individuals and their needs and their interests, and it just makes it a much more personal experience.
We have really made great strides in terms of the products that we are offering to our issuers and investors. I believe that over time we will become the marketplace for all things fundraising and investing. And that's something that really not only drives us every day, but it's a true vision that we believe in.
When this license became effective, it was to democratize investments and give everyone a chance to be part of it. So with the past being in startup land that a lot of founders were overlooked, we wanted to make sure that didn't happen again. So we really took advantage of that law and we've actually applied it. We're not just talking the talk, we've walked the walk, which has been a great thing.
So I would say that would be how I would describe our culture. It's really a big team of individuals with different backgrounds who actually just are there to get it done.
I absolutely love the Republic culture here because not only does everyone reward hard work, but everyone actually puts in so much effort and time into really making Republic the best place it can be, not only for our issuers, but also for our investors.
Welcome back to 2021 Equity Crowdfunding Week. I am proud to be sitting here with the wonderful team from Sugarfina. We have Scott Laporta. He is the CEO and co-investor. And then we have the beautiful Julie Kim. She is the Vice President of Marketing. How are you guys?
Doing great.
Good?
Fantastic. Good day.
Good day. We're here with Equity Crowdfunding Week. There's so much going on, so many great stories to tell, so many great speakers, so many great panelists that we've heard from. And I'm excited to be having this conversation with you guys.
Thanks for having us.
It's
going to be really exciting to see how things shape up over the next 3-4 months here.
Yeah, I mean, you guys have a really amazing story. So if you do not know about Sugarfina, Sugarfina's candy is amazing. If you haven't tasted it, you better stop by and get you some. But today we are actually talking about the best way to help them grow and help you guys grow in their brand by investing in Sugarfina. So tell us a little bit more about what that's been like. What has that experience been like being a part of Equity Crowdfunding, and we'll get even into what it took for you guys to get there.
Sure, it's been a really interesting experience. Gives us an opportunity to tell our story to consumers, tell our story to potential investors, and bring new folks into the Sugarfina brand, and ultimately raise capital for the growth of our company. That's why we're doing it.
I mean, it's a very unique story because, I mean, the way that you display candy is so different. And the taste, every time I brought up Sugarfina, even being a part of this conference, everyone's like, oh, their candy is really good. So I'm excited just to even hear about how it came about that you guys, took this path and just the road to you becoming, the co-investor in Sugarfina.
Sure. I mean, it is a spectacular brand, and the product is amazing. And that's really what truly interested my partners and I to invest in and buy the Sugarfina brand about 2 years ago. It's a unique consumer experience that you can't get anywhere else. We import artisanal gourmet candies from around the world 14 different countries, and we bring them into the United States, and then we reconcept them and package them and give people in North America the opportunity to enjoy all of that great confection that comes from these just premium artisanal candy makers in other countries around the world, and they get to enjoy it instantaneously. 50% of the purchases are for immediate gratification, and the other half is for gifting. We have just a bunch of beautiful gift boxes that Julie and her team create that people come in, and it's the great gift to take to the dinner party or for somebody's birthday.
And Julie, I want to talk to you about that. So these boxes are amazing, right? What is that process like for you and your team, just coming up with these concepts?
I mean, we designed the boxes based on some of our biggest seasons, and we're constantly trying to find different ways to reinvent and come up with new and exciting and engaging designs. So we're constantly coming up with new packaging, new form factors. We're also working on different collaborations, exactly. So we're also working with different brands to collaborate based on who we know our customer is and what she's interested in. So it's a long and lengthy process.
Yeah, and you pointed something out there very key, that she.
Mm-hmm.
What does that mean to you? What does that mean to Sugarfina?
So we know our customer acutely well. So we know her and what she's interested in based on our Sugarfina Rewards, which is our loyalty program. So what we know about her is that over 90% of our customers are female. The vast majority of our customers range between the ages of 25 and 45. She's an affluent customer with a high household income. And we also, through our loyalty program, have been able to identify what her areas of interest are. So we know that she loves staying on top of trends in fashion and beauty. She loves to travel. We also know that she's interested in fitness and wellness, despite the fact that she's coming to us for candy and some indulgences, but she's not binging on it. She's just, to what Scott was saying, self-treating. So we know a lot about her, and through that, we're able to bring in new innovation, new candies based on what we know that she likes, and then also design packaging based on what her areas of interest are.
There are so many scenarios within that, right?
Yeah.
So in each one of them, you need to take some little bit of candy with you.
Exactly.
That's all about creating additional consumption occasions.
Yes. And now, Scott, you decided to invest in the company. So now you're going down a different path. So Equity Crowdfunding. So tell me a little bit about the experience of Equity Crowdfunding so far.
Sure. The thing that just really resonated with me up front, and I've scaled other companies previously and have utilized institutional investors. When we took a look at Sugarfina and we saw this fabulous brand and the great product, and then we basically, the formula that Paul and Diana and I use repeatedly is we look for great brands with great products, but it is undermanaged or the capital structure is broken, or sometimes both. In this case, both. And so we invest in it, we fix the capital structure, and then I go to work immediately in rebuilding the commercial operations of the business. And we've accomplished that over the last two years. And the final part of that was actually building out a centralized operations facility in Las Vegas, Nevada. And so one of the reasons we did the crowdfunding deal was to help us fund that build out. And that gave retail investors the opportunity to invest in Sugarfina at pre-IPO valuations. And that was something that really excited me to provide that opportunity to those investors, as well as to provide some equity incentive compensation for my team. And I'd loved for them to participate as well here, like they couldn't at other places, or if we did the capital raise in a different manner. So now that we're positioned perfectly to start scaling the company, because we've got the centralized operations facility that we funded with our early stage raise. Now, as we continue to raise more money, We're investing in working capital, hint, hint, more candy, so that we can really scale dynamically our revenue base. And so that's what's happening right now. We're basically launching a new customer, whether it's an online gifting company, a gourmet grocery company, or another specialty retailer. It's happening almost every week now in our business. And so we're really excited about the fall holiday season.
And that's really cool. I mean, so an individual retail investor being able to have the opportunity to invest in something pre-IPO, that I think that's the big picture here that we didn't get to see in the idea of investing before. It was always to the larger and bigger institutions, and that you could actually invest in companies before they go IPO. So now you get individuals that can come who have a sweet tooth and invest directly into the business. So her, right, she can also invest into the company that she is most closely related to when in these cases. So one of the other things I would ask you, so why would you guys say someone should invest in this specifically? Like why Sugarfina as a candy company?
It's the perfect time because, as I mentioned, we are now in this position to scale. You know, in certain respects, the pandemic helped us out because it shut down all of our channels of business except for e-commerce, which really had explosive growth last year. But that enabled me and the team to kind of rebuild the business model of whether it was going to our other retail partners or our own stores or our gifting concierge team. So it enabled us to rework the business model, make it much more commercially productive, effective, and inevitably profitable. And so now that we've worked through that over the past 12 to 15 months, now we've got our centralized operations center. We're investing heavily in incremental sales and marketing talent and bringing new innovation. So now we have the platform to grow distribution. We're picking up the pace on innovation of new products. You see pictured here on the floor, we came out with the world's first hard seltzer infused gummy bears, never seen before. You know, collaboration partners like the Simpsons, are Homer's Donuts. You can't stop eating them, and these people reach out to us to collaborate because of that coveted consumer that Julie mentioned. Everybody would love to get their brands in front of our consumer base, and so we'll just keep playing that forward. So we're in essence becoming a serial innovator as well as a serial collaborator and bringing newness to the marketplace, which then just speeds up and makes us even more attractive to extend and grow our distribution.
Great.
So that's why I would say now's the time to invest.
Now is the time, right? And then the stores, you guys have really, really amazing looking stores. Every time I go and I see them, I'm just like, wow, it gives you like a very boutique feel. You feel very comfortable going in there. It feels personalized for the individual. I want to talk to you a little bit about experience, right? Wait, why is the Sugarfina experience different? Like, what makes it different?
I'll start, but then Julie will jump in. You know, you've hit the nail on the head. It's experiential. So when you walk into any of our stores, and we try to replicate this online as well, but the wall on the left-hand side of the store is our famous DYO wall. So you can see the two boxes that are there. There's a 3-piece and an 8-piece up there. We also have 4-piece boxes as well. So consumers walk in and pick up a box. They can put 3 cubes in it. So then they go this candy wall that has over 100 just really fantastic tasting candies from around the world, gummy bears, chocolates, etc. And then they can pick their favorite 3 or favorite 4, and then there's a gift. And walk out the store with it, and it's perfect for that.
From our boutiques to online, we offer and provide customers with simple luxuries, and they're luxuries that are for herself and to gift. Like Scott was saying, we discovered through our Sugarfina Rewards loyalty program that 50% of customers are buying for herself as an indulgence, as a nice pick-me-up. And she's gifting half the time. It's actually been really beneficial that our customer shops this way because it helps offset the business too and level set any seasonality that you might see. that with having the purchase occasions be a lot for her helps.
Yeah, when you have that such a great customer persona, right? The person who is specifically designed for it allows you to be even more creative in how you create the brand around it, how you create the experience, how you're strategically placing this for her in each area, right? Now, how do you guys, would you say you're doing gifting differently in 2021? Like you could see it here, but like how is that, like what's that thought process around?
I mean, gifting has always been something that's been a part of who the brand is and is part of the brand DNA. And so, like Scott was mentioning, you come into the store or you go online and we offer this design your own bento box experience where you're able to customize the gift, whether it's for yourself or someone else, and really pick candies that are catered to one's personal taste. And so with over 140 candies in our assortment, there really is something for everyone in every palette for every occasion. So it's really unique. We also have candy drops. So someone's able to go online and gift something to somebody. They pick what it is that they want, and then the gift recipient is able to go in and choose her selection of candies to fill and satisfy that box. So it really is this unique, personalized, and customizable gift experience. The other thing I'll mention is earlier this year, we also launched our e-gift card online. And so we're just giving another opportunity and another avenue to gift somebody.
I mean, that's great. I mean, there's so many things that have happened for the last 2 years, right? We have the pandemic. How are you guys making that different during that time? Like, how have you guys had to transition to a different experience through the pandemic?
One of that's a really good question, and you know, 2020 was a challenging year in many ways, and so one of the, you know, we're a brand and a product that makes people smile.
Yeah,
they just in there, it's an engaging brand. So it was really important to us last year to really push ourselves to bring new innovation. So we brought 3 new innovation items last year. It was a gelato inspired candy from Europe. We brought a new cookie inspired collection. We brought a new tea inspired collection, and that enabled us to keep our engagement with our consumers online as well as in the stores whenever they were open up and shutting down and opening up. And it also gave us the ability to keep engaged with our wholesale retail partners, that Sugarfina was there for them and bringing newness and bringing new sweets to the marketplace. And so then as we came out of the pandemic, or continue to come out of the pandemic, if you will, we've just picked up the pace on that innovation, and I think that just is a real treat for people to see something new coming on, and I think it gives them a feeling that we are coming out of the pandemic.
Yeah, it something sweet's always good, right? Yeah. To make you feel better about whatever it is. I mean, I've loved candy since I was a kid, and I continue to eat candy all the time. You know, it's not good for your teeth all the time, but you know, you can have some. How, as far as expansion, right? Like, what would you say that creating this location is really going to do with helping you guys expand even further with the, you know, the growth that you guys would like to?
Yep. So when we built out the operations center, we built it with the idea of being able to triple or quadruple the size of the company. And so that's the capacity that we have over there, and we've built the capability. So we have it set for a certain level, and we can add more people as we go. We've got the infrastructure to support it. So we've just hired 2 new salespeople to open up more of Canada for us. So we're expanding north of the border as quickly as we can in a more aggressive manner. It also gives us the capability to handle larger accounts. For instance, when we invested and bought the company, our largest grocer, premium grocery account, had 15 stores. We're now in one that in the Chicagoland Mariano's that has us in 35 stores. We're about to launch into another gourmet grocer that probably will take us up to close to 100 stores. So
Nice.
basically giving us the ability to play with bigger retail partners, but also to play bigger with online partners that just really demand precision and on time in full shipping. And so because once you get the green light and you're in the game, it better be on time and in full, or you got to go or not. So now we're ready for the game. And so that's what's happening to us. We've also been expanding internationally over the past 12 months. We've gone into Japan online. We're in a real premium position in a couple of retail locations in Seoul, South Korea. We've got 2 stores in Hong Kong, and now we're opening up some pop-up shops for for the holiday season in Hong Kong, and possibly expanding into the resorts in Macau. So we've got a lot of runway ahead of us. Yeah.
So you've been involved in investment for a long time now, right? What made you really want to get involved in the candy industry? Like what really sparked that?
Why not? It's candy. It's
right?
candy. No, I was in the healthy food and beverage business before, I really love the brand aesthetic and the brand essence of what we do, and I just saw, in the end, I'm a capitalist, and I saw a brilliant opportunity for myself and my partners, as well as I saw the opportunity to create this team that really understood and would get the playbook, and then be able to bring in some retail investors, because Paul and Diana we talked about this early on as a route to go, and it just made me really, really excited and fired up to be able to provide this opportunity not only for ourselves but for my teammates and investors, an opportunity that could change their lifestyle. And when we pull this off, it's not a matter of if, it's just when. So,
yeah, and you guys are doing it now.
Yeah.
It's blown up. You guys, where would you say is the best place that people would find you guys? Besides in the store, like someone wants to invest in you now, like how would you direct them?
Wants to invest in us now.
Yeah.
So we are on 2 platforms. We are on the Republic platform, and we are on the Start Engine platform. And you can link into either of them directly on, Republic sugarfina.com or startengine sugarfina.com, or you can go onto our website, and we have a link there for you. And the thing that's really nice about going on to the links, and it tells you we have this whole brand landing page that tells the whole story of the company, all of our products, our initiatives, our strategies. It introduces you to the management team, and then it gives you all of the updates. We're always posting every week, every other week, a new update of all the fun new distribution, the expansion that we've gotten. We're now, for instance, a couple of months ago, we opened up the new Resorts World Las Vegas opened up, and we built out a store there, which is doing really well. But that also gave us the opportunity that we now have 2 of our best-selling products, basically Champagne Bears and Tequila Grapefruit Sours, which both have real alcohol in them. It gets cooked off during the process, but it tastes like the Champagne Bears, our #1 product, is made with Dom Perignon. So think about that.
Oh.
It is a luxury candy positioned for the adult, but kids can eat it too because the alcohol's cooked off. And then its sister product in those in-room mini bars in 3,700 rooms is Tequila Grapefruit Sours made with real Casamigos. So they taste good, and it's gone so well that they're asking us about expanding some more treats into the rooms. And so those are the types of things that we're doing and expanding. And to think about that, you're keeping in stock 3,700 rooms. So now we've got the ability to do that.
That's really exciting because now everyone has different flavors that they like, that they can taste, right? But not to mention, you can also, during 2021 Equity Crowdfunding Week, you can go right into the Invest Now page and check out Sugarfina even further, see what they're all about, and invest. So check that out. Now, I also want to ask you, so as an issuer yourselves, What is some advice that you would give to other issuers?
Well, I've got a couple of thoughts. I'm sure Julie might have an idea too. You know, as I said, it's a great opportunity to tell your story. And when you get so excited about it, like we do, you want to tell the story. You need an audience. So I would encourage folks as they're going to launch, work with whatever platform they're working with, and make sure you have a real strong, well thought marketing strategy and detailed story. What story do you want to tell that resonates with folks, and also have a strong execution plan. Don't wait to figure it out until after you go live. Get a good, strong plan linked up front, and I think that will enable you to have even better success.
Yeah, I think from the marketing side, it's really important to continuously and frequently engage with the investor audience. And so we are constantly updating with PR updates and just press that we've gotten coverage in, updating the audience on new innovation and what's just launched, the distribution expansions that Scott had mentioned. So I think that constant engagement to let the audience know what's happening in the company and to share with them that beyond just an investor audience, the greater pickup from just the general public that they can see and experience and get to know where Sugarfina is being featured. Like even most recently, we were featured in Food and Wine magazine, in the Food Network, Travel and Leisure, from all of our bridal collections to our Halloween collection. And so just keeping everybody abreast of what's going on is really exciting too.
Yeah. What would you say, Julie, is the most exciting part about being with Sugarfina and joining the Sugarfina team? What excited you?
I think it's a couple things. So I think it is the team, and Scott in particular is so open to allowing the marketing team to try new things, whether it is new collaborations, new product development. And so we're not handcuffed from a marketing standpoint and a product standpoint, where if we think that there's a trend that we're hearing buzz about, that the leadership is really open to that. I think also hearing from the consumer side and the customer side about how much they're enjoying it, and the media attention that we're getting from social media to just traditional media outlets is really exciting. So I think all of those are a really fun reasons to be part of the company.
She didn't mention that she gets to taste new candy every day.
All the time, right? I literally through this entire time setting up, I said, bring me some candy, bring me some candy, bring me some candy.
He's not lying.
The whole time. But I would love to talk about a little bit about these different boxes. Like one of the things I love about just when I initially was introduced to Sugarfina and the brand itself is the packaging. Like tell me a little bit about like what goes into that for you.
I mean, it really is an experience, and it, from our traditional bento boxes, like our 3-piece bento box, to our 8-piece that is in our core Sugarfina blue, it's iconic, and people know it and know the brand when they get it. And so that is a staple day in and day out that customers go to. Then we constantly are innovating and providing new packaging for every season. And so we have our holiday advent calendar that is this year's Santa's Workshop. That is one of our best-selling
I love this.
Our best-selling holiday item. So there's 24 different taster packs inside, so customers are able to just treat themselves with a new candy every single day as they count down to Christmas. So really, really fun and engaging.
We already ate that one.
Oh, they didn't leave me any. See, I've been asking.
It's just a really fun Santa's Workshop scenario in there. So this is great. A great opportunity for a parent to gift to their children, all the way up to teenagers. Love to do this. Sit there and open up one every day before they do their homework or so forth. And when we in the 2019, just as we were buying the company, the brand sold about 20,000 of these.
Wow.
Last year in 2020, we did about 36,000 of these, and we're in position this year and we to sell around 55,000 of these.
Sounds like candy is in hot demand.
And then what was really interesting about this, with the success of this advent calendar, if you will, and having a little taste of 4 or 5 candies. One of the things that with the innovation team, we have run a real stage-gated innovation process where we ideate, create, curate, and then we figure out how we're gonna sell it. But the team led by Julie came up with ways to take this advent calendar to other occasions. So we now have one for Valentine's Day, and the third one is or we can't talk about it yet.
Can't talk about it
Can't
yet.
talk about
But
it
we're
yet.
working on it for next year.
Sounds like some new things are brewing.
Yeah.
Wow, different flavors in the back. Yeah. Check all of these products out. So, what would be one thing that you would want to leave with everyone from 2021 Equity Crowdfunding Week this year? Like what's next for you guys? We talked a little bit about it, but like, what's one thing you would tell everybody?
I would say from a pure investment thesis from our standpoint is all of the hard work that we've put into it over the past 2 years is really about to start to be paying dividends. And when we swing through into the fourth quarter of this year, we are swinging into profitability. And if we can scale the company the way I think we can, we will swing into a profitability position on a go-forward basis. And to me, that's really exciting because I know we can definitely dynamically scale our revenues. I've done it before. And I think the team that I have here assembled at Sugarfina, as well as with my partners and their thoughts on our strategy side of life, it's going to be a real exciting next couple of years.
Well, I've had the great opportunity to work with your team already, and it's been a really great experience. So, did you want to add anything as well?
Yeah, I think from the marketing and the development side, for 2022, we're poised to launch something new every single month next year. So we're all working on the development and designs all the way through Halloween already, 2022.
Oh, wow.
So it's going to be really exciting to see what the customer reaction is, the reaction from the investor audience, but there is so much development that's coming that we're really excited about.
Yeah, I'm even more excited for you guys as well. I can't wait to see all the new stuff. I'm so happy that you guys decided to join us, and I love hearing the story. I cannot wait until we get to see what's next for you guys. So go and check out Sugarfina. They have an amazing lineup of beautifully curated candies just for you. And make sure that you go into the Invest Now page and check out everything that they're doing now and how you can get involved in being a part of the company as well. And I really appreciate you guys for being here.
Well, thank
so
you.
Well,
Laurel, we have a little specially curated
treats.
treat bag
Oh,
for you.
Love goodies.
I mean, and it is it's
see what we got.
October, and so you must have your own witch's potion bento box with zombie brains in there.
Curated packaging. I'm ready to go for Halloween. What else? There's some more in here?
There's a few other treats in there.
Oh, see? Experience. Oh, you really did good.
So good. That is the world's first hard seltzer infused gummy.
Watermelon.
What else? See, mango bears.
There we go.
Check those out. We also have
Homer's Donuts.
Homer's Donuts.
Childhood favorite.
You growing up, if you didn't watch this, at my age group at least, you're missing out. But now you can eat it too. What do we have here? Tell them about
So
these.
good.
I heard
Little cold brew
these
cordials. We launched those
These are
last
good.
year in our coffee collection, and in another week we will be expanding that collection with some new really fun flavors.
Thank you.
Stay tuned.
Thank you guys for thinking about me. I really appreciate it.
Our pleasure.
She followed through and she brought me candy. I've always been asking for candy. Take care, guys. Look forward to the rest of 2021 Equity Crowdfunding Week. I'm gonna say it again. Look forward to the rest of 2021 Equity Crowdfunding Week. Have a good day.
Okay, hi everybody. I thought that was really unfair that I am following the presentation of all of the nice stuff, the sweet stuff, and I am going to be talking about the stuff that does not taste so good. Talking about compliance failures, and especially compliance failures in regulation CF filings. We are seeing too much of this kind of thing. We are seeing failures by issuers, by intermediaries, and those compliance failures are going to have an effect on our industry. We've already seen FINRA close down some funding portals for failures to comply with FINRA's rules. And I'm pretty sure that everybody has seen the most recent enforcement action that the SEC brought just a couple of weeks ago. That is certainly going to be the first of the compliance actions, enforcement actions by the SEC. It's not going to be the last. So I wanted to talk about why compliance matters and what we're supposed to be doing and some of the things we should be focusing on here. The rules are there for a purpose. The rules are there to protect investors, to give them the opportunity to make an informed investment decision. Now, some folks who think that the rules are too complicated. One commenter, excuse me, pointed out the fact that in the SEC's adopting release for Regulation CF, there were 20 pages of description and discussion about the disclosure requirements relating to the company's business. But when you look closer, that's not 20 pages of rules. That's 20 pages of explanations of how to comply with the rules. It's explanations of how to comply. So many of these rules are intuitive. I mean, they are things that if you were making an investment, you would want to know this thing, and that's why companies have to disclose. Investors need to know about the issuer. They just need a little bit of help in complying. Now, I will admit that the rules that apply to the intermediaries are more complex, but the intermediaries are more sophisticated. They presumably have more assistance in with respect to counsel, and so it's not unfair. And what I want to say is, I don't care if you think the rules are stupid. I mean, there's a lot of stupid rules out there, but it's in everybody's interests to comply, because otherwise there's going to be a spate of enforcement actions from regulators, possibly litigation from private investors, and a whole bunch of bad publicity. Eventually, the industry is going to turn into the timeshare industry. You're going to go into a party, a cocktail party, people ask what you do, and you say, well, I'm part of the crowdfunding industry, and they're going to start treating you like you're a used car salesman. So we need to start getting this whole industry into compliance. Thought I'd just flag some of the things that I see on a pretty regular basis and go through our current hit parade. Corporate issues. This is one of the really biggest ones, because people Issuers don't understand corporate law. In some ways, there's no reason they should. But there needs to be a focused industry focus on assisting them through the corporate issues. So, for example, is the company properly formed? Does it actually exist? And one thing I can say from our previous experience is one of the rules of Delaware is that you have to pay franchise tax on an annual basis. And round about March of every year, there's always a bunch of companies who suddenly fall off the good standing list because they haven't complied with Delaware franchise tax payments. If you do that 3 years in a row, they just cross you off the corporate list. You don't actually exist as a corporation anymore. And the results of that is that all of the people who formed the company that no longer exists now become, in effect, legally a general partnership, and they are each responsible for the other's actions. So all of the founders of a company are now liable for all of the stupid stuff that everybody else in their group is doing. And it's striking that this happens so frequently, because what will frequently happen is the guy who formed the company is no longer the guy in charge, or they've changed the website, they've changed the person who's the contact person for Delaware and for the registered agent in Delaware. And so, or even they are so busy building their company that they ignore it, and now the company doesn't exist anymore and it can't sell anything. Drilling down a little bit, are the securities that the company is selling, how do they exist? Does the certificate of incorporation provide for the existence of those securities? We had one situation where we are looking at a company who's selling preferred stock. And it's like, okay, so not seeing preferred stock on your certificate of incorporation, did you actually create these things that you have actually already sold on a registered funding portal? And they're like, yeah, of course we did. We had a board meeting. Well, you know, you've got to have a board meeting, but you've also got in that board meeting to authorize somebody to file a change to your certificate of incorporation to make sure you can sell the preferred stock that you have now actually sold to people. Luckily, we were able to fix that one. We were able to file an amendment to the certificate of incorporation. But if somebody hadn't been looking at that, there would have been a complete disaster, because nobody, you'd have sold something that doesn't exist. That's fraud. You can't get around that. If the company is an LLC, does it have an operating agreement that actually provides for crowdfunding? What we see in so many cases is LLC, when the company is being set up, somebody goes out onto the internet and it finds an operating agreement and just pulls it down. You know, that they don't understand what provisions need to go into an operating agreement, and they just pull something that they found off the internet and then try to raise funds on the basis of that. Doesn't always work. So that's corporate issues. You know, too many companies have gone out there with things that didn't exist, issued by a company that didn't exist at the time. We can look at other areas of failure in disclosure issues. Financial statements. All right, so a great thing that happened this year in March is the SEC said, okay, you can now start using special purpose vehicles. You can issue the, instead of having thousands of investors on your cap table, you could just have one SPV. But one of the requirements there is that you need to have financial statements and disclosure about the issuer, not just for the company that's issuing the shares, but also the special purpose vehicle that they're using. We're seeing, sometimes that's not happening. So financial statements missing. Another area where we're seeing some new types of failure is with respect to the recent increase in the offering amount. Used to be regulation and CF was limited to $1 million a year. Now it's $5 million a year. The old rules used to say if it's your first time using Reg CF, you don't need an audit. You can just have a review of your financial statements up to the then limit of 1.07 million. When the SEC changed the rules to permit offerings up to 5 million, they didn't change that rule. So the first-time users can use reviewed financial statements only. That only applies to offerings up to 1.07 million. If you want an audit, you need, if you want to raise 5 million, you need an audit. We're seeing discussions of financial condition. What has happened since the end of the period covered by the financial statements. That's one of the requirements of Regulation CF. We're seeing that there's not a lot of disclosure there by the companies. Remember that the rules permit you to use financial statements that could be up to something like 13 months old. People want to know what's happened to the company in those last 13 months, or whenever, however long it's been since the financials were produced. That's not being complied with properly. The cash position of the company, whether it can continue, what's your burn rate, what's your runway, how long can you survive, not being disclosed. Another area that we're seeing failures is the risk factors. Seeing a lot of absolute boilerplate risk factors. You need to tailor these to the actual condition of the company. Another area where we see a lot of failure is the securities that are issued. If you are selling safes, then you really do need to explain to the investor under what circumstances will the safes actually convert into securities. This is especially a problem where platforms use standardized safes and then the company or its lawyer try to tweak some of the provisions, and it's not properly brought to the attention of the investor that A, this is not like all of the other safes on the platform, and that there are specific provisions. So we don't see enough disclosure about the safes. Another area is the securities issue, the securities that have already been issued. We're seeing companies that are coming to the Reg CF market even. We see there's a lot in Reg A, but we're starting to see it in Reg CF, where the company's already done, maybe a round of safes and maybe a couple of rounds of convertibles and maybe some preferreds. And these are not, it's not properly explained where they convert, under what circumstances they convert, because you might have several rounds of safes, all of which convert at different times and on different terms and different prices. This makes the ability of the investor to understand what the dilution terms are really difficult. Couple of different things in the couple of minutes that I have left is some sophisticated issues that we are seeing. Co-issuers, where the success of the offering or the enterprise depends on another related company, or the proceeds are being sent to another company to use. You've got to disclose all of the information about that other company, the co-issuer. Could be that the co-issuer is not even eligible to use Regulation CF because it's a foreign issuer or it's a 40 Act. Predecessor issues. Where a new company is built on old company operations, you need the financials of the predecessor company, the old company. And now that we're seeing the increase of the offering limit to 5 million, we're seeing some acquisitions. We're going to use the proceeds of this offering to buy another company. Well, you've got to disclose something about that company, its financial statements. And then we're even seeing some structural subordination issues where the company has a subsidiary and its funds are being used for other purposes so that it's not going to be able to dividend those fees up. So just in conclusion, I'd like to say those are just some of the highlights. I could go on for hours, but I'm not going to. But please, let's fix these issues. Let's fix disclosure, fix ongoing reporting, and let's not have this thing turn into timeshares. Thank you very much.
Until recently, only millionaires with connections were allowed to invest in growing companies and startups. But not anymore. The Jumpstart Our Business Startups Act made it possible for everyone to invest in the next e-commerce company, travel service, entertainment startup, or transportation disruptor. At Title3Funds.com, we revere startups for their innovation, vision, and unflinching drive to succeed. They shape the world around us and influence our communities on a daily basis. They dream big. They make calculated decisions. They turn ideas into opportunities. Now, no matter how much or how little money you have, you can invest in businesses that you believe in. At Title3Funds.com, we offer a unique approach to equity crowdfunding. We focus on quality over quantity, thoroughly screening to find businesses we believe in, vetting company financials, goals, and future plans to provide curated, highly investable companies. As an investor, you'll be able to research growing companies and startups that align with your passions. Join us today.
Hi, if you joined us earlier in the week, I'm back and I'm happy to be here. We had a few issues last time. And so I'm going to talk to everybody about the future of investing. And I want you to know that the future of investing starts now. Ladies and gentlemen, current and future investors, or anyone over the age of 18 globally, wherever you sit listening to me today, I want you to know that the future of investing starts now. It's actually happening right now, this very moment. That's right. We're at an inflection point in the world, a tipping point, some might say, a time when everything changes and the old ways give way to new. And this time, it's crafting a major change in the age-old art of investing. By way of introduction, my name is Kim LaFleur, and up until 2015, I'd spent my entire career almost exclusively in the world of retail e-commerce. Over my career, I've worked with over 100 brands in various categories or at various stages to take their products and services direct to consumer or through other retail distribution channels. I don't come from capital markets or investment banking. While I've consulted for venture capital firms looking at e-commerce investments, I have never sat inside a VC. I'm not an attorney nor a business accountant, though over my career, I have worked with many of them. So why am I here today at Startup Starters Equity Crowdfunding Week? It's quite simple. Speaking to you about equity and early growth stage investing. When I was a younger woman, 20 years ago, early 2001 to be exact, I sat at my desk as a front-end developer turned product manager at a software as a services e-commerce company. My job as a product manager was to listen to the needs of our customers and develop a software roadmap. And our customers just happened to be many of Silicon Valley's most well-known consumer electronic companies. At one point, all of our companies were not simply requesting, but adamant that we provide a solution to sell products via a mobile phone. Never mind that while I sat at my desk thinking through this situation, I stared intently at my RIM BlackBerry phone with its tiny black and white screen and convenient thumb-sized keyboard 6 years before the first touch screen full-color iPhone was introduced. And never mind that many of the other women in my neighborhood were carrying their tech husband's old phones, likely a Motorola flip phone he used before he bought the latest and greatest phone on the market. So I hope if you're old enough to have seen, used, or can visualize one of those early mobile devices, how challenging and how much painful friction one would have to experience to shop online via a mobile phone. Mobile shopping sales in the year 2001 were not 10% of total sales. They were not even 1% of total sales. Yet fast forward 20 years through a global pandemic that forced your grandmother to learn how to purchase groceries via Instacart from what? Her mobile phone. According to Statistica, in 2021, mobile retail commerce sales as a percentage of retail e-commerce sales worldwide will reach 72.9%. And all the while, during this time, slowly but surely, the early stage investors in Amazon, PayPal, eBay, and yes, Instacart all recognized phenomenal financial gains. And the world also changed how things were done. This same change is taking place in investing right now. It's only happening faster. As our friends at King's Crowd have mentioned, in 2017, total equity crowdfunded investments totaled 17 million. In 2018, 75 million. 2019, 104 million. 2020, 205 million. And in 2021, just January through September alone, $350 million. We are 6 years, and more for some, into a movement that will change the way entrepreneurs access capital for their early stage companies. We are creating an active educational course on early stage investing, and you are all welcome to sign up, to get in early, to not miss out on a market shift, to become early adopters. There are naysayers in this industry. Many long-term capital formation companies or traditional investors who say equity crowdfunding is a bad idea, they don't like it. Retail investors will never understand what they understand about investing, or even the nuances of an early stage company. To that I say, healthcare, another vertical being disrupted with apps, cost-saving solutions, and virtual appointments, the old world of investing is being turned on its head, and inclusivity, participation, and the support of entrepreneurs and their products will rise up. During that time where e-commerce moved from desktop to mobile, a lot of friction got worked out. It wasn't that the appetite for e-commerce and mobile shopping didn't exist back then, it did. But the technologies, interfaces, and hardware to support it were still in their infancy. It was an idea. Today, that's no longer the case. On LinkedIn, you could find a business partner or a new employer. On Facebook, you can find a high school friend or a group of like-minded recreational vehicle enthusiasts. On 23andMe, you can find your father's third cousin once removed, who lives 5 blocks over in the same neighborhood. On Amazon, you can find vegan products that used to be impossible to source locally, and they can be delivered overnight, if not the same day. On Tinder or Bumble, if you're lucky, you could find the love of your life. On GoodRx, you could find an expensive healthcare prescription at the best possible price. And on YouTube, you can find entertainment or an education on almost any subject imaginable. The fact of the matter is that if you go to the right place in almost any category, you can find and get matched with whatever you're looking for. That's the power of the internet, really, the connectivity. Connecting us all with what we're interested in or looking for, and it only gets smarter in delivering more relevant results every single day. So why is it still so hard and takes so long for an entrepreneur whose finite resources and time best spent developing her products or services, and an investor who has an interest in investing in those same types of products have such a hard time finding each other? The equity crowdfunding industry is evolving and matching and helping the right people find each other. People who want to create and build products with people who want to buy consume, and share in the growth of the company. We like to call these people investimers because not only will they buy your product and invest in your company, but they will also become amazing brand ambassadors and advocates. Until May 16, 2016, everyday people couldn't invest in startups, but now they can. The Jobs Act and regulation crowdfunding made that possible. Today, entrepreneurs can file under a Reg CF exemption with the Securities Exchange Commission, gain qualification, list their offering online, and raise up to $5 million under the Reg CF plan, and up to $75 million under Reg A Plus, selling shares or units of their company to investors seeking commitment opportunities. Since 2016, 6 years of the foundation for equity crowdfunding has been laid as FINRA, the Financial Industry Regulatory Authority, securities attorneys, CPAs, compliance officers, funding portals and platforms, broker-dealers, technology providers, marketing agencies, merchant and banking services, escrow service agencies, custody and transfer agents, and investor relations experts began the work of working together and teaming up to deliver on this important regulation and ability to democratize investing. The path is being paved through companies like Title III Funds to allow entrepreneurs to list their offerings and raise capital from the crowd. If you're an entrepreneur or CEO looking to raise capital, that's a fantastic value proposition. Spend your time drafting and filing your offering, which involves explaining the people, products, and processes surrounding your business. Supply reviewed or audited financials depending on your raise amount. Arrive at a fair market valuation and deal terms to extend to your investors. And post that information online. List equity in your company for sale. I like to consider dollars spent marketing your offering as dual purpose marketing dollars, as retail investors are often your best customers and strongest advocates. I often advise CEOs and CFOs to jump into crowdfunding now and learn this important skill and add it to their business toolkit so they can predictably raise year over year from their core investors. I encourage female entrepreneurs in this regard even more strongly. The online format of the capital raising process fits nicely with skills many women have naturally as creatives and storytellers, oftentimes more so than some of their male counterparts. I hope it's not difficult for anyone to envision the picture that I'm painting, a world where, in the very near future, an Amazon or Facebook-esque marketplace, or many, will educate and attract new investors, matching them with knowledgeable and resilient entrepreneurs, creating alternative investments, as well as a culture of taking ownership in products and services that you consume daily. What we do in equity crowdfunding, the community, do daily in democratizing investments is not for the faint of heart. Bringing together the technical traditional investors alongside the often emotional aspects of the retail investor and making our way through the rules, legalities, and compliance measures has not been without its challenges. Traditional investors and venture capital groups often find excuses for why they don't like crowdfunding. They create and instill unfounded fears about the future companies who raise via the crowds. There are often things I want to tell both parties. To traditional investors, wary of retail investors in the ecosystem, I want to say, stop being part of the problem and start being part of the solution. Regulation crowdfunding brings investment opportunities to your desktop or mobile device in the same manner as it does to a retail investor. Use your knowledge for good. Become influencers and thought leaders as thought leaders and influencers in equity crowdfunding are about to experience a focal moment in time. Assist the equity crowdfunding community in meeting the needs of the general public, the everyday investor. We don't call them angels or venture capitalists yet. We know they are not you. They aspire to be you, perhaps, but they invest with more emotion, and that's okay. Because large groups of retail investors signal buyers, and buyers signal products, services, and startups that can and have the most potential to succeed. We call this the wisdom of the crowd, and specifically at Title III Funds, we call our investors adventure capitalists because they're on a mission to make an impact in their lives and choose and invest in things that will shape their future, change the world. Perhaps, as the Jobs Act implies, create jobs in areas of most demand and most need. And with cap table management tools and services, SPVs, as part of the technologies and toolkits available to entrepreneurial companies, the eons-old concerns about cap table management and other issues are no longer an excuse. To retail investors, you can and should be exploring diversification into equity crowdfunding. Trust your retail gut instinct. The same instincts you have leveraged to make e-commerce buying decisions via research and product use are great instincts. While startup investing is inherently risky, the search for outside gains can be beneficial by diversifying your crowdfunding investments. While many companies will fail and some will be successful, you will need only 1 or 2 companies in your portfolio to produce outsized gains, perhaps even the next unicorn. It's estimated that it may take 3 to 7 years for most startups to achieve true success. A few may take longer. Nevertheless, it is very possible that valuations could begin to increase even after 1 year. Further, some crowdfunding experts believe that crowdfunded investments should be considered a new asset class and may even make sense as a percentage of your IRA portfolio. Title III funds focuses solely on the Title III regulation exemption, which allows companies to raise up to $5 million annually from the crowd. It's the true bottom floor, beyond friends and family, but often the most important next stage, providing critical growth capital. We help businesses learn how to raise capital from the crowd, and we educate them and introduce them to industry-leading and compliant partners to help them do the work of creating an SEC-qualified offering. For investors, we extend these ground floor early-stage investing opportunities with no fees to the investor. We invite you to visit title3funds.com to explore opportunities, ask questions, and learn more. In closing, the current ecosystem of startups, angels, and VCs is poised for disruption. Spending hours and hours and years to get connected to the right investor is passé. The right investor is being raised on the internet and social media and learning how to do new things every day. And a culture of everything online is only pushing it forward faster and with more momentum. Ladies and gentlemen, the future of investment is happening now. Don't miss out on it. And I do want to thank Blackwater for sponsoring Equity Crowdfunding Week. Thanks so much.
Hey, Calvin, how are you, brother?
I'm excellent. How are you today?
Excellent, excellent. Nice to see you again. So, my name is Eitan Butler. I'm the chairman at Dalmore Group. We are a FINRA and SEC registered broker dealer. We're headquartered in New York. We were founded in 2005, and we specialize in helping companies raise capital online at scale through regulations A, C, F, and D. We've been fortunate to have onboarded over 150 Regulation A offerings, including a growing number of some of the more successful reggae offerings that have been done, including a number of fractional share issuers, right? What we call series issuers. And before we begin, because of the industry I'm in, it's important to mention that this is not a recommendation to purchase any securities or an endorsement of any securities offerings. I'm here with my good friend Calvin Cooper, the CEO at Rove, a new platform that empowers anyone over 18 to invest in the places they love for as little as $1 per share. Rove is on a mission to remove the barriers to ownership of commercial real estate assets, allowing investors to participate in the ownership of individual assets and building their own diversified portfolio of real estate investments. So Dalmore works with a growing number of real estate issuers, right? Many in the reggae space. And Calvin, since we met a number of months ago, you have certainly stood out to me as a really cool and smart and very righteous guy that's on a very thoughtful mission. I've really enjoyed our interaction so far, and I'm grateful to be here with you today to get deeper into you and to what your company Rove is all about. Your story is fascinating and quite inspiring to me. So you dropped out of college, right, to start a company, right, and which ended up failing, and to the point that you were, from what I understand, couch surfing, really on the verge of homelessness.
Absolutely, yeah.
In Atlanta. And then kind of all of a sudden, a number of years later, you become this venture capitalist, right? You know, what do you wish you knew back then when you were starting a company?
Well, a few things. I really appreciate you, and also want to say that I've enjoyed getting to know you and work with you and your team over the past few months, and I'm inspired by you and your story, and I appreciate being with you today. What advice I would give to myself at that time is to not take life so seriously, and enjoy the journey. So often we're caught up in the moment and the stresses of daily life that we forget that every moment is a gift, that we're blessed to be here on earth, and to just breathe the fresh air and just do the work and let it go. And so that's my biggest lesson learned, is you just got to embrace the journey. It's really about the journey we're on, and the journey, the people we're on this journey with, not so much the outcomes or the goals that we build up for ourselves.
Wow, that is that's inspiring for sure. And you know, one thing that I was thinking about is, you know, you were on this, you know, after being almost homeless, you kind of developed your career in VC. You were on this clear VC path, and then you pivoted to entrepreneurship, right? You know, why did you turn down, you know, at the time, making general partner and raising a big VC fund to start a company with, you know, with $100,000 in angel funding?
Yeah, being a VC was a dream come true. And I had the opportunity to work with such amazing founders and help to invest in their companies as they brought their ideas to life. I was enjoying the time with the partners at the firm. They had taught me the business and gave me a shot in the industry. And I fought really hard to get into the business. In fact, after dropping out of college, I returned back to Capital and finished out my degree in economics. And I minored in religion and studied philosophy. And I started to publish research. And long story short, I got a job right out of college at the Ohio Supplier Development Council, Minority Supplier Development Council, helping minority business enterprises connect to corporate members and grow and scale their companies. And so when I met the partners at NCT, I basically started working nights and weekends for free to just get my foot in the door. And eventually they're like, man, he's building all these market landscapes. We got to pay this guy, but we can't afford you. We're in between funds. And for those who don't know, in venture capital, it's the 2 and 20 model. 2% of the funds raised pay for ops. So if you don't have a fund and you're in between funds, there's no fees to support my salary. So I'm like, hey guys, just give me a shot. I just need enough to pay my rent. What I didn't tell them was everything else went on my credit cards and I deferred my student loans. So it was like a dream to be in venture capital. And when we started Rove, it was really to solve this problem of access and opportunity, especially in real estate. Just watching how hard it was for my mom to buy a house growing up, and then during the economic downturn, losing her home. This just had a special place in my heart. And so I had an investment thesis on real estate finance, and that banking as a service platforms were emerging, consumer behavior was changing, and the regulatory environment has shifted. And so now was the time for this movement to happen. And I met Brett Kaufman, and within 5 minutes of meeting me, he owns a big real estate development firm in Columbus. He said, "Hey, I love this idea. You should absolutely do this. If you start the business, I'll invest." And I said, "No, Brett, that's crazy. Let's find a CEO." He's like, "This is your baby. This is your passion. And if you don't do it, I'm out." So I slept on it and called him, and we've been running ever since. And it's an amazing. I'm glad I leaned into love and light and didn't let the path that I built up for myself to get in the way of just following what the universe had in mind.
Amen. And let me ask you a question. What did you believe when you transitioned from VC to entrepreneurship that you would say you no longer believe right now? Are there any major shifts in your worldview?
Yeah. So at first, I really didn't identify as an entrepreneur. I really saw myself as a VC or a philosopher, and it took some time to really understand how to build product and how product driven growth. And so some things that I believed in that I don't believe now would be at the 0 to 1 stage when you're building a company. Like human-centered design processes may not be as applicable. Strategic planning, like 90-day roadmaps and all that, is just way too much overhead, and you spend a lot of time coaching. And so now I would say that my biggest lesson learned is to make your 2-year plans, your 1-month plan, and ship a product, and then ship meaningful updates every single week as a technology business, and not approach it like a business development or some other perspective. You've got to be really quick and iterate and ship product out in the market.
And why Rove? I mean, you covered kind of a bit of your thesis, but as an entrepreneur, you had a lot of different directions you could take this, right? Why'd you choose Rove in your specific model and kind of how you're rolling out your product now?
Yeah, I learned a lot over the past couple of years. So we shipped our first iteration of the product 2 years ago, and we learned a lot about building a fintech solution for renters. And then last year we launched a proof of concept to enable renters to have a financial stake in the place they called home. And we learned a lot about property owners and developers and the people all across the country who want to make community ownership possible. One thing that I didn't realize when we started the business is that there are property owners in every major city that they want to do more than just collect rent checks. Some of them view real estate as their passion and their contribution to community. And when they read about Rove, they reach out and ask us, how can we make this happen? And so listening to the barriers that they had, to enabling ownership, like the administrative burden, the costs of listing with a platform in the process, caused us to realize that we just got to eliminate all of those barriers for owners. And then on the investor side, it was really clearly seeing that we don't compete with real estate equity finance or real estate private equity. We compete with Twitter and Instagram for attention, and Coinbase and Robinhood for dollars. And so that really changes how you build a product. And then we chose to skate towards where the puck is going. If you think about existing user behaviors, people are hopping into Reddit, having conversations about their values or their goals or their strategies, and then they're hopping into Robinhood or Coinbase to execute those trades or live those values. And so we decided to make this social to support that user behavior, but also because real estate is inherently social and political, and it's so important. It's not just some other financial asset. It is the place that we live. It's the place that we work. It's the place we play, where we raise our families.
Yeah, and I think that's really in line with the intention of the Jobs Act, really to democratize access to investment opportunities, in particular real estate, that really has been controlled by the top 1% for so many years. And now finally, you're able to offer opportunities to the community, to anyone over 18, right, to participate. And founders, no longer have to knock on Wall Street doors to get attention. They could take their message, their dreams out to the public, out to their own community, to give them an opportunity to broadcast their message and really raise money from anyone over 18 to become investors and participants in their vision. You've always seemed like a really spiritual guy, really thoughtful individual. And how would you describe your personal passion and really what drives you when you wake up in the morning?
So it's a journey. I would say that we're all on this journey together, seeking to be better tomorrow than we were today. And so my passion is just to, I think, if I die a stoic, I would have died well. Like if I look back on my life and say that I was a good person and contributed something positive to the world. So that motivates me to get up and move the ball forward.
Excellent. And here's an interesting question for you. What is a picture and quote from the second president and American founding father, John Adams, doing on the last slide of your pitch deck?
Yeah. People are like, why do you have that? But I'm really inspired by the founding fathers of America. They were philosophers first, and then they lived their philosophy in the real world. And we all are beneficiaries of that vision. Yes, America's imperfect in many, many, many ways, but there's never been a better time to be alive and in this place. And so that's because people got together in coffee shops and bars hundreds of years ago and read about philosophy and thought about how they could apply that on this continent and in this world. And John Adams, he wrote that in order to preserve equal liberty and public virtue on the side of the public, is that we need to make land ownership available to everyone. And so he really talked about, actually, he specifically mentioned that we should divide it into small quantities.
Right.
He talked about fractional ownership hundreds of years ago. But he was building on previous works, like James Harrington wrote about that we know there will be civil unrest when economic power and political power become disconnected. And that's why we're seeing some of the things that we're seeing today. And so it's so critical that we bring everyone into the fold. And even Aristotle wrote about the importance of private property ownership and how it leads to virtue. And so That's why we in there, is to really hit the nail on the head on why this is more than just a game or some way to make a better return. If that wouldn't inspire me, but what I'm inspired by is the impact that we can have if everybody in our society could own the places we love. Like, that would be incredible. It's so much. I mean, it's kind of like that principle where you don't. Who takes the rental car to the car wash? So you take so much better care of things that you own, and this is critical. It brings us together with our neighbors.
Wow. So now we know what James Harrington and Aristotle have to do with fractional ownership and how they've inspired you. That's certainly interesting. I haven't heard that before. So you launched a reggae offering, right? And that allows, obviously, for Rove to raise up to $75 million a year from anyone over 18. Where are you now in the reggae process?
Yeah, so just broadly where we're at as a company, our app is available in the App Store. You can download it. You can follow our partners. We call them sponsors, and find people that inspire you. You can invite your friends. You can follow properties, and so we're testing the waters on a number of properties all across the country, and we filed our preliminary offering circular a couple weeks ago. So that's available. There's links in all our footers, but don't wait. You can download the app now. People are making real estate investing a priority, and they're already setting up Rove accounts, depositing cash into their cash wallet with us, and setting funds aside so that they're ready to invest if or when we get qualification by the SEC to facilitate those transactions. So download our app, and we hope to see you there. We push meaningful updates every week. And so we also have a Discord channel. And so if you want to have a real-time conversation with us or our engineering team, we're all in there. And so we're well into the process of engaging with our Rove community.
Excellent. And so the app is up. I saw it. Very impressive. I'd encourage everyone listening to this to check that out. What are you seeing people doing on the app now? Are you kind of tracking their activities and behaviors and interest? How's that process coming along?
Yeah, that's why it's so important to push updates every week.
Yeah.
And so we'll notice things like we have an activity feed, and people will see what other people are doing and then invite a friend off of a button there. Or people are looking at properties, and so we're starting to add more functionality to showcase the properties that we're testing the waters on. And we're now seeing even some people start petitions. Let's say you don't have to even wait for us as a middleman for us to test the waters. You can proactively say, if I would really like to invest in this asset, and if Rove were to make that available, then you're pledging support for that. And so we're seeing some people start petitions. And why that's so important is that there's this YIMBY, Yes My Backyard movement in every major city, right? Really focused on the issue of housing affordability and and increasing supply to meet the demand. And it's right now more for altruistic reasons that we need more housing for more people at every price point. But the missing piece of the YIMBY movement is ownership. So imagine you're supporting new development in the community, but now you can petition for Rove to test the waters, and we'll try to partner with that owner. And so we're seeing things like that.
Very cool. And how are you finding your properties? What's your process to kind of identify different properties to list on the Rove app?
People find us. I've been really inspired by all the developers across the country and owners who've read about us and genuinely want to support this effort and just didn't know how until today. And so all of the deals that we're listing so far, people have found us. And now people are starting, and real estate owners are starting to reach out because they see the social element of this app, and they see that this could be like their Instagram or LinkedIn, but that they could then partner with us, and then we would raise capital.
And what about finding investors? I mean, how are you expanding your community? Is it kind of like word of mouth? Are you advertising? How are you building your community of potential investors and participants?
We're not doing very much advertising at all. Just a little bit to kind of A/B test messaging and stuff. But like, we're really focused on product-driven growth, so building the tools for growth into the app. And so we're going to be leaning into that over the next few months as we scale our community.
Excellent. And where do you see Rove in, like, I don't know, 3 to 5 years from now? You're kind of getting started. You're at the starting line now. Well, you've done a lot to get to the starting line, but you're kind of, you're approaching hopefully SEC qualification, which means you could at that point take your offering live, and your community can now start to, at that time, could start participating in the different assets that you're going to be featuring. Where do you see yourself a few years down the road?
Few years down the road, I believe that it won't be a big idea or even novel that you can walk down the street, visit your coffee shop, and just click a button and invest and own a piece of it, or move into an apartment building and not have to wait to become a homeowner to be a homeowner. We have a property that we just signed definitive agreements with, so we'll probably have to amend our filings soon. But like, they're specifically wanting to market this to renters. They want us to include the people who will be moving into that building first. But it's really important to those owners that that we don't just market this globally and raise all the money from people all around the world, and that people who live there actually own a piece. And I think that's not going to be a novel thing in 5 years. That's going to be so common. It'll be like, how did we never do that, right? So that's 5 years from now. But I have a more interesting answer for 10 years from now.
Share.
Oh yeah. If I had the opportunity to partner with Elon Musk, I would love to partner on a development in space. That would be incredible.
Talk to me about that for a minute. I know we only have a few minutes, but that's you don't hear that every day, Calvin.
I
So
mean,
you want to? What do you?
Well, so for us to really become a multiplanetary species, there's going to have to be economic development, right? And we have to invest in building the tourist industry of the future. So like the space stations, maybe settlements on the moon, maybe Tesla puts a factory on Mars one day. And I think it is obvious to many people who are in crypto that that the recording of land ownership in space is going to be on a blockchain. It's going to be on a distributed ledger. This is so much more efficient, and this is like the perfect use case. And so that's one piece of it. But also, like, why should millionaires be the only ones who can participate in this next frontier of real estate? I think everybody all around the world should have a stake in expanding humanity beyond this planet.
That is powerful, my friend. Well, any questions for me?
Yeah, I mean, what are you most inspired by at this moment? You've done so much in breaking into this industry, helping companies like ours navigate this space. And what inspires you? What keeps you going?
Look, I've been in this industry for quite a while, and through Reg A and Reg CF, we've been given the opportunity to be a part of entrepreneurs' missions to really fulfill their dreams and their destiny. And that really inspires me the most, is being able to talk with the next generation of entrepreneurs that have really unique plans that wouldn't necessarily be so easy for everyone to kind of, fulfill those dreams by the traditional ways of trying to get a Wall Street investment bank behind them to go and pitch a VC that invests in 1 out of every 250 deals, but who have the opportunity to take their vision and offer it out to their friends, their followers, their subscribers, like-minded individuals, and the general public. So being a part of their dreams and doing our small part and being able to help them and give them a platform to achieve their dreams is something that really excites me, and we're really grateful to be a part of.
Awesome. Well, I know you can't endorse folks, but I'd endorse Dalmore Group, and it's been awesome. It was really important to us to partner with somebody who was experienced, so that we didn't train them with our dollars. But what I didn't know is that you were such a great person. The kindness shows through in every communication. And then who would have thought that you could have a compliance team that's really responsive and can interact with the technology business? That's so important. And so you guys do a really good job.
No, I appreciate that very much. It's like hearing a good report from a school teacher about your kid. You can never hear it too much, We certainly do our best. We're at a unique time where innovation meets technology meets regulation. And like you, we always try to skate towards where the puck is going. And we take our role and our compliance role very seriously, which you have to do. And it's been a really interesting journey, and so excited to be partnered with Rove and with you, Calvin, on your mission to be a part of this, and really looking forward to hopefully soon being able to really offer this and go live and be able to help you in any way we can to achieve your objectives. So thank you so much for your time today. As always, it's amazing to be with you. Laurel and team at Startup Starter, thank you guys so much for this amazing platform, for an amazing week. I think it's been really educational for potential investors and for the industry as a whole. So all the best.
Thanks.
Almost 10 years ago, a novel idea enabled by digital technology offered a new kind of accommodation for travelers.
Realpha's mission is to empower people to invest in real people, real assets, and real moments. The whole tagline, invest in real, really stems from kind of this current moment in time where you have people investing in extremely intangible assets, cryptocurrency and meme stocks.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. Normal, ordinary folks have now access to all the same information as institutional organized capital.
But they're not investing in real assets. Property and real estate is something that people have aspired to own since the beginning of time. And there's this new model, Airbnb and short-term rentals, that's completely disrupting that.
The short-term rental market is a $1.2 trillion global industry. And what we're seeing is the demand is outpacing the supply.
Real estate has been a slow adopter of technology. What we are doing is bringing in futuristic technologies today to a market which is saturated with old technologies.
So we'd like you to join our community and invest with us as a shareholder.
Come and join us at the ground floor in our journey of democratizing real estate asset investment around the world.
From the very beginning, Republica has been focused on representing underserved founders. To date, Roughly 35% of funds that have been raised through the portal have gone to companies with a female founder. About another 25% has gone to companies with a minority founder.
What is so different at Republic is that we deal with individuals and their needs and their interests, and it just makes it a much more personal experience.
We have really made great strides in terms of the products that we are offering to our issuers and investors. I believe that over time we will become the marketplace for all things fundraising and investing. And that's something that really not only drives us every day, but it's a true vision that we believe in.
When this license became effective, it was to democratize investments and give everyone a chance to be part of it. So with the past being in startup land that a lot of founders were overlooked, we wanted to make sure that didn't happen again. So we really took advantage of that law and we've actually applied it. We're not just talking the talk, we've walked the walk, which has been a great thing.
So I would say that would be how I would describe our culture. It's really a big team of individuals with different backgrounds who actually just are there to get it done.
I absolutely love the Republic culture here because not only does everyone reward hard work, but everyone actually puts in so much effort and time into really making Republic the best place it can be, not only for our issuers, but also for our investors.
Wow, we've had a long day, and now we're back to talk about another really cool, really innovative topic that is blowing up right now. My name is Laurel Scott. I am the co-founder and COO of Startup Starter. I am happy to welcome back several teams that are making a huge stride in the real estate space. Again, we have Christy Curry, the amazing CMO of Realpha. We also have CEO and co-founder Gary Devonor from Realpha as well. We're also joined by Jesse Stein, the head of real estate, as he works with the folks over, these wonderful guys over at Nada, to talk about the analytics and insights of your market, of your home, and real estate reimagined. So this topic is going to be huge. We're going to talk about barriers of entry and the technology in the real estate space currently. So, tell me about what real estate means when we talk about it being reimagined.
Yeah. I mean, I think, the reason our tagline is invest in real is because we're reimagining what it means for people not only to invest in real estate, but for real people to take back the power within the real estate market and provide access to them. Because ultimately, these real assets lead to real wealth generation and really, real moments and real opportunities within their lives. So that's really what it means to us at Realpha, is just reimagine what real means in the investment space to, the retail investor.
Yeah, and guys, we would love to, John Green, as well as Jesse and Mauricio. Please introduce yourself. Give the people watching just a little bit more about you guys.
Sure, I'll start. I'm Jesse Stein. I'm the head of real estate at Republic. A little pissed that I didn't get cast in the Republic commercial that was on just before this, but maybe next year. Republic, for those who are unfamiliar with the company, it's a investment platform that offers opportunities across multiple asset classes, including early stage startups, real estate, music, video game investing, and crypto. And I've been with the company for a little more than a year as the head of real estate.
Yeah. Or Mauricio and John?
Yeah, John Green, and co-founder of Nada. Nada is a financial services and real estate technology company. We got to know Jesse and the team at Republic as we did an offering on the platform. So we're very much into the retail consumer space, and powered by 4,000 retail investors from a very successful seed raise on the platform.
Mauricio Delgado, co-founder of Nada as well, and chief product, strategy, finance, a lot of different hats here. But happy to be here. Having worked in Silicon Valley, worked in kind of the VC private equity, and now being on the side of the, being back as an entrepreneur and a crowd funder. I'm happy to be part of this panel, and excited future of real estate tech.
Great, and we're happy to hear from you guys, and happy you guys are here. And Gary, we've heard from you a couple of times as well, so but just give the people a little snippet of all the great things about yourself.
Hi, my name is Giri Devanur. I'm the founder of ReAlpha. ReAlpha is reimagining alpha. What we are doing is like visualize Robinhood for Airbnb property investment. That's what we are doing. We already did a $6.1 million worth of seed round, and we are doing a very large private equity deal as well as doing the Reg A plus. We got the SEC qualification last week, and we launched early this week, on Monday when you guys were having the best day of your lives.
Right. Yeah, thanks. I mean, we appreciate you. Gary was here with us earlier this week when we had all the craziness with Facebook happening, right? So let's talk about, let's break it down. So barriers to entry and the technology that's helping to transform that. We'd love to hear from everybody on that. And if you want to add something.
Yeah, I think, breaking down the different barriers to entry historically, over the course of human history and how it's evolved to have these really high barriers to entry into real estate, and how we're now in this kind of revolution as new technologies, new ways to invest, and new, creative platforms evolve, where we can provide the opportunity to people to, take back all kinds of different verticals within real estate. And I know we all, play in different versions of that. So I think, how has technology changed this landscape and, reduced those barriers to entry? Who wants to start?
Yeah, anybody, go ahead.
Anyone, go ahead.
All right, I'm a techie, so I can talk about technology, right? See, what I've learned in the last number of years when I'm studying about the technology and the impact on variety of industries, we saw the modernization of financial services and banking, insurance. Insurance was slower than other areas, but if you look at real estate as an industry is about probably 15-20 years behind in terms of technology adoption. Every aspect of real estate transaction is done by manual fax. And I mean, in fact, when we started ReAlpha, when we started buying properties, people were saying, hey, can you send me a fax? I'm like, what is a fax? I thought, it was gone long back, right? So the slow adoption of technology can be seen as one, oh, I don't want to deal with it, or embrace it and then bring the latest of the technology so that, it's like transition from fixed landlines to, moving into, 5G network directly, right? So, from rotary phone to 5G, that is the kind of transition that we can do in real estate space. So we are seeing, so many opportunities at so many levels, how new technologies can come in, take away, 20-year-old, 30-year-old processes, and then bring them to new age, next generation, millennial investors who are coming. there is a large number, like what, $20 trillion is going to be transferred from baby boomers to Gen Z. When that happens, like a lot of it will be in real estate. We believe technology will be able to solve and come to reality today, by maybe 2025 or so.
I'll just add something to that, and I agree with everything that was just said. When you talk about innovation in the real estate investment space, I think you have to look back and realize that real estate as an asset class has been democratized for decades, since the advent of the modern REIT area in the early 90s. So investors, both accredited and non-accredited investors, have had access to real estate for a very long time. But you look at the innovation in the space, and the innovation is, obviously being able to invest in specific properties online, but also in the products that people are creating. It's not just, a standard real estate product that people are bringing to market. There's some innovation around, how these properties are operated, and distinguishing, these offerings from what exists in the public market. I do think the real innovation from a technology perspective hasn't happened yet, and I think that's going to come when these investments become equally liquid to what you're able to buy on the public markets, right? We've had plenty of people mention Robinhood and crypto, and the reason why investors are attracted to those investment opportunities is the ability to trade in and out of these assets. And while, we've, as an industry, figured out a way to create products and deliver those products to investors, until there's a real liquidity mechanism, and there's plenty of people in the industry that are working on it, you're not going to see that full, technological innovation that you've seen in other asset classes, where people are buying and selling real estate, minute by minute or day by day, and treating it as, an equally accessible asset as, equities or crypto.
Yeah, you are absolutely right. Like when the REITs happened, one set of modernization started. But like we have studied the short-term rental market. It's a $1.2 trillion market globally. We haven't seen any innovation there yet. So that's what we are working on. And you mentioned about like how the trade should happen, minute by minute kind of stuff. To achieve that, we are actually working with the Dalmore Group to put together a platform wherein we can enable such kind of transactions. But we are slightly away from that. In fact, when SEC cleared our Reg A, they asked a whole lot of questions. We went through 5 comment letters over the last 5 months, and like SEC was deeply interested in the models that we have proposed.
Yeah, guys, this is great. I'm loving this dialogue already. So I do want to direct this question to the NADA team. Invest in cities like you invest in stock. Can you elaborate on that and just kind of give a snippet of why those words mean a lot?
Yeah, happy to do so. So the investment product that we launched through our partnership with Jesse and Republic Real Estate is termed City Funds. City Funds are they're really designed to be index-like thematic investment funds representing a specific city's residential real estate assets, and built in a way to really operate as an ETF-like fund mirroring the performance of that city. So think about it most simply. We have these live now. We have Austin, Dallas, and Miami. And so if you thought of real estate and you said, okay, I would like to invest in Austin, right? Because Austin has a certain connotation. There's so many things going on. City Funds is a vehicle that it's an open-ended fund that's acquiring single-family rental properties. In addition to NADA's equity investment product, we're buying equity stakes in homeowner single-family homes that are owned by homeowners. So we're accessing inventory in these large cities, and we're making it accessible to online retail investors as well as private accredited investors. And our buy box is very much built in a way that represents that market as a whole. Investors as well as private accredited investors, and our buy box is very much built in a way that represents that market as a whole. Investors as well as private accredited investors, and our buy box is very much built in a way
Do we lose them? Oh, so got him.
Yeah.
Good. And Christy, we talked about, digging deeper into the barriers of entry for this, not only for the industry itself when it comes to technology, but for the people getting into this.
Yeah, I think it depends on what, asset class within real estate, because there are so many verticals within it that you're looking at when it comes to the barriers to entry. Everyone knows REITs, but the yields haven't always been great. So you're looking at all these alternatives to REITs. You're looking at solutions like Rogue, where you can invest in the places that you live, and own equity in these multifamily developments, which historically only these large developers have been able to get into that pool. For us, we're looking at that single family home ownership. And the reason we started is, Gary got that call from a friend that I want to buy an investment property, but I don't have the liquidity for an $100,000 down payment. The short-term rental industry is interesting. Second home investment properties, you have to put down a 25% down payment. When most Americans don't have $1,000 in their bank account, how do you reduce that? And so there are great solutions out there like the hybrids of REITs, et cetera. But there's also a market for people who want to feel a connection to the properties themselves. It's just a different makeup of the kind of real estate investor, and all these different technologies that are emerging are really, really interesting. And I think the barriers to entry we focus on are that down payment. So having that liquidity, having access to the best properties, Zillow and Realtor.com, if you're looking at single family homes, you're paying 30 to 40% more above what the big guys are paying. And, our COO Manaz, the saying is you make money on the buy in real estate. So that's why it's so important for us to inject technology into that buying process. And that's step one for us. So how do you make it more efficient at scale? And then how do you fractionalize ownership and bring that down payment and take the liability off of the retail investor by maintaining the stake in the property, and kind of, allowing them to come in as the minority shareholders. So it really is so powerful. And I think there's a market for both, people who want to invest like they're investing in stocks, but also people who want to have it more as a consumer product they feel connected to, they can talk about, they can share it. Hey, mom, dad, why don't you go stay at my property in Miami?
Right.
And we've seen, just major response on that. There's just this core human want and desire to be able to say, I own real estate. Even if you're, the millennials or Gen Z who plan to rent till you're 40, you can still own something valuable and something that's exciting to you. So that's, it's really interesting, the things that we'll see emerging.
Did we lose the NADA team? Well, I Jesse, if you want to elaborate or bring any value to that as well, we'd love to hear that from you.
Yeah, no, I agree 100%. And that's a lot of what we try and do at Republic is bring offerings to the platform, that are above and beyond just the economic aspects of the real estate, right? And allow people to make an investment, whether it's based on geography or a specific property use or who the sponsor is. So we're very focused on which sponsors we work with, and working with a diversified group of sponsors because, there is that personal connection to real estate. And, in some instances, it's also a vanity investment where, everyone loves to say, hey, I own a piece of that building, right? Or I own, an apartment in Miami or a piece of an apartment in Miami. So, it's what attracted me to real estate early on in my career. And I do think, it brings a different aspect to investing, above and beyond, the IRR and the cash on cash return.
Yeah. And I was very specific when I decided to bring you guys all together because you're making a change, whether it is Republic partnering with City Funds with NADA or Realpha. You guys are specifically looking to make a change in the real estate landscape. How do you feel the technologies that are being brought to the industry now, how do you feel that those technologies are going to completely change the landscape of where we go moving forward, especially with the new generations coming and the younger generations being more interested in property ownership and owning those type of assets?
Yeah. So, what we are seeing is there are three parts to that, right? First part is how do you select the right kind of property? So when we built our AI platform, our system can analyze thousands of properties in less than a minute to pick the right kind of properties, so which humans cannot, right? You cannot analyze more than one property per, even like an hour it will take, because if you have to dig through every detail of it. So we built that system with the clarity that we should be able to analyze 1,000+ properties in a minute, right? That's number one, selection of the property. Then comes the art of how do you finance it, because as Christy was mentioning, most Americans don't have emergency funds for $1,000. Where are you going to expect regular people to bring in $100,000 or $200,000 as down payment for a investment property? That's not going to happen. That is where the true democratization of financing those properties has to happen. And the third part is, how do you market it, onboard it onto whether it is a Airbnb, that's our preferred choice, short-term rental platforms. How do you go with those and then generate a higher profitability, so that the entire financing mechanism becomes easier? And eventually the fourth part is, how do you get out of it by not making subjective decisions? See, what we have studied is people make a lot of very subjective decisions. That means oh, I like this neighborhood, so I'm going to buy it. You buy it at a premium, and then you're stuck with it, and then you can't sell it. So we have eliminated human decision making out of such kind of subjective decisions to numbers and data driven decision making. These are the four major areas where we are seeing how technology will come in handy at scale.
Yeah, I think data is an important thing to talk about when talking about real estate technology, and it's been a big driver of innovation in the industry, and not as very focused on it. So I'll let them add to it. But think of real estate, a couple decades ago, when looking for an apartment to rent or looking for a house to buy, the experience was completely different, and the market was just completely inefficient, which often brought opportunities to investors, but it also, often led to poor decisions being made on both sides of the transaction. And now you have so much transparency as far as market data goes on a real-time basis. So you can almost say, okay, this property has changed value over the course from this day to the next day based on certain factors. And having all of that information available to the entire industry, it makes the asset class just completely different than it used to be.
Yeah, so I think, adding to that, data, to the extent that, real estate represents one of the last industries that had effectively all of its data, locked up, whether it was in paper format or whether it was, in the cabinets of like brokers, or in the MLSs of, these cities, as data has become digitized, within the real estate industry. And now we have terabytes of this data that we can now, take machine learning algorithms and apply, all sorts of automated, whether it's automated decisioning or recommendations, or all it's doing is collapsing what used to be a pretty big wide bid-ask spread between kind of buyers and sellers of real estate with no transparency, and into something that's now more democratized, because now everyone has access to the same data. And I think the innovative thing about city funds is actually that, from our standpoint, we're taking the approach that we're not looking to generate alpha, so we don't need to create fancy algorithms to come up with whether how we're going to beat the market. All we're trying to do is be the market, provide investors exposure to a market that they didn't have access to before. And so, I think the opportunity there is just to take all the data that's out there, empower homeowners to release, to unlock equity that had been prior to locked up, unless they sold their entire home, and then give retail investors the opportunity to invest in that homeowner equity, and provide an index-like exposure to that specific city. So, it's one of those things that we're we definitely recognize the value of data and
Yeah, the trends in the platforms, and you guys at Reoff are taking the same approach in terms of solving a problem of eliminating the need for an expert. That's kind of the last barrier here is like, if you're a licensed XYZ person, then there's a fear factor, right? There's this, I'm the expert, if you don't use me, you're gonna make a poor decision. You can eliminate that risk and that fear and really level the playing field by democratizing data. I think that's, most simply put, that's the largest advantage technology is giving anyone in terms of real estate or any asset is data.
Yeah. And I think it's also, as, especially products like ours, you have to go back to like real estate exists because of the way that people use it. So I think you're going to see all of these emerging ecosystems continue to grow, and around these products that are funding them, there's all this technology that will be consolidated around them. So, how people use the property, what that data looks like. All IoT still has a very far way to go, and smart home devices and the use cases that they cater to and the way that different stakeholders use the output of them. And I think, just a simple example is one thing. Airbnb, we talk about it all the time. It's like the hotel industry. The hotel industry before, it was changed because it was no longer just occupancy driven. It was driven because of all these service layers added on top. So what we're seeing definitely is you're going to have all these other revenue streams coming into play within the smart home technology space, within the optimization of the efficiency of the homes and the optimization in providing a better guest experience by leveraging new platforms, the gig economy, things as simple as stocking the fridge before a guest gets there, making sure the home caters to all of their needs. Can they have their favorite music playing when they get there? So there's also opportunity, especially with platforms like ours, get very creative with what we can do. And all of those things ultimately optimize returns for the investors. So, Airbnb, the short-term rental space within real estate, you're seeing all these emerging technologies, and the players who are, investing in them and owning the properties throughout the life cycle have this opportunity to create those ecosystems. So it's a really interesting opportunity for us. The technology doesn't end with the transaction. But yeah, I think one question that would be interesting, and Nada, you guys kind of just spoke to it, is the education that might be required. What do you think consumers and retail investors especially are expecting in terms of how we make them feel comfortable about their investments? They don't want an expert directing them on what to do, but at the same time, they want the right amount of information to do the right amount of due diligence to make their own self-directed decision. So I think the way that, companies like ours provide that information and that level of education through partnerships, through content, through all of these different channels, is what will lead to more adoption of these new technologies in the space. Because right now, I think that could be a barrier to entry as people feel intimidated by it. So how do you find that, happy medium?
Yeah, it's a great point. I can, I would like to answer that in a word, and it's transparency. That's part of really, with us as a company raising, company equity. Everything's transparent. You're a private company that's going through. We personally, we've done 2 years of financial audits on we're a 3-year-old company. So that's a very transparent way. It's very exposing. You've got to have some conviction in what you're doing, and if you're making it transparent through data and public filings, that it's available for someone to make an educated decision on. And then it's about how you present it. Like for us with city funds in particular. These are open-ended blind pools. So we're addressing the blind aspect of that, right? That's a technical term in the structure. It's blind pool, but because we have data that's pulling in all the real estate information. Anytime we're making an acquisition going into the fund, it's pushing a notification to our investors so they can see what the property is, and then track it because we're tracking valuation. We're tracking valuation of the underlying assets in each fund, and we built the system to where it is fully transparent. And everyone can see the wins and everyone can see the losses. And our structure in particular is a diversified fund, so there's going to be a mix of that. That's my thought. Transparency.
And And you talked about partnerships, right? Like partnerships is a huge piece, whether you're having partnerships with the technology, whether you're having partnerships within the industry. I do want to ask for Jesse with Republic, and like, what was the idea of partnering with NADA to really hone in on the city funds and highlighting these cities for making change, and just about the partnership you guys decided to create?
So city funds was a concept that I had been thinking of for a long time, and it really goes back to watching a ton of people in New York, where I've lived my whole life, just get extremely wealthy just owning real estate, right? And these are not necessarily sophisticated investors or even knowledgeable real estate folks. Just by having access and exposure to a real estate market, you can grow wealth, and significant wealth over time. And I always wish there was a product. Hey, how come I can't buy a stock that's just giving me access to New York City real estate, right? And over time, that concept kind of got developed into what is now City Funds. And what we needed was a product that helped enable it to scale. And NADA's home share equity investment product is a perfect fit for City Funds, because what it does is allow us to make investments in owner-occupied houses and get exposure to that real estate without adding real significant property management requirement on our end, because it's owner-occupied, and also allow us to make relatively small investments into real estate and build a diversified portfolio with a lot less capital than we would need otherwise. So their product and the City Funds concept was just a perfect fit. We had met them as they raised their round for their operating company on Republic, and we talked over a matters of months and fine-tuned what the product was, and we think it's going to be a very scalable, interesting product for the market.
So,
John, go ahead.
one other thing that you mentioned about partnership, see, in real, for what we are doing is, it's not about just partnership from, like capital raise perspective, right? There are a lot of other elements, like, we are doing, we are putting about 2% of the 75 million, which is about 1.5 million, into what we are calling it as Reimagine Fund. Maybe Christy should explain a little bit about Reimagine Fund. She's very passionate about it.
Yeah, we talked about it a bit earlier today, but I think, one thing that's so important for everyone going into the real estate space and developing technology in this space is you will never remove the human capital side of this business. You simply can't, but you can innovate within it, and it'll be easier for us to do that as, the people who own the process. But what we kept coming back to is we're going into these communities, and the power of community has always been so important to us, and the network effects that it can create. How do we create jobs within these communities? It started with as simple as, I think someone suggested, and why don't we just put local artist art in our Airbnb properties and put QR codes on it so people can go to our website and connect with the artist? Can we connect the interior designer and put them on the website and, feature these people who facilitate the creation of these assets and the running of them? So 2% of the Reimagine Fund, and this is a huge problem within real estate right now, is obviously the labor force is changing. So how can we motivate people to join us? Let us give you the seed capital to get started. Start your own contracting business, whether it's veterans or people who don't want to go to a four-year college. Give them the training and the resources that they need. Give them their first contracts with Realpha. Give them the seed capital to get started. Give them the mentorship that they need. Someone who acts like a co-founder through the beginnings of the business, and just help them get off the ground. We could bring in all these national partners, but our long-term goal is to bring in, the people within the communities to be the people who create these experiences. And that leaves everyone better off in the end. And also, how do you give people true ownership over the properties that they're working for? So can we sponsor syndicate membership with this $1.5 million for people in underrepresented communities to own these assets and own shares in these properties? And I think by having that approach and constantly rethinking how you contribute to uplifting the communities around real estate and these assets, I think that creates a very virtuous and rewarding cycle. And thinking about it that way, I think can help us, achieve a lot of scale and, create a community around what we're doing. And we're really excited about it. I'm really excited about it. Gary's right.
Yeah. And I mean, what's great here is that, like, what I'm hearing is that, like, regardless of who is in this conversation, what company is doing it, that you guys, it's all about the people, right? We're making this about the people and how can we reach more people? How can we help more people, even with the Reimagined Fund, right? Reaching more people is like the key to this. And it's also a huge form of education, whether it's the analytics that NADA provides, whether it is the city funds, which partnering together for you guys is helping to democratize the entire idea of real estate in general. And I think it's great for you guys that you guys are doing this.
Hey, NADA guys, we got to work together.
Yeah. We're all for it. Hey, partners. Yeah, we'll bring Jesse along.
All right. Why not?
Yeah.
We'll film a commercial.
All right.
Yeah. I mean, these investment vehicles and platforms do create opportunities to really change and create meaningful purpose. NADA operates primarily as a consumer-focused company. We have mortgage, realty, title, insurance. We do that from a consumer-facing standpoint. And City Funds as an investment vehicle is a financing arm that allows us to, of course, democratize access to it from investing, but at the same time, we like to say we're liberating homeowners from an illiquid asset. I'll use Austin again as an example of how this is creating a consumer good from a product. You've got homeowners that love Austin. They're living there. They don't want to move. You got people that want to come in. So it's a very simple supply-demand issue. You have homeowners that have, they realize a 40% year-over-year home appreciation rate. But they can't access that unless they completely move out and sell the house. And what are they going to do? They're going to move laterally into another home or what have you. Our product is only enabled by City Funds. A retail available investment vehicle finances that we can say, hey, homeowner, you can sell a piece of your home, get cash today, use it however you need to, take advantage of the market, continue owning your home, no debt, no monthly payments. It's an actual investment. So it's able for us to serve two sides of the market. And that's it's a consumer good that we're delivering.
Yeah, for me, this has been very insightful because I wish that I knew about these different resources when buying my home. I bought a home at 30. It took me 2 years to prepare for it and all these different things I had to go through. Had I known that this is available then, even though you guys were in production for this, like it would have made it easier for me to make an informed decision just, with my investment. And now, I could do something bigger.
Yeah.
Well, listen, guys, this is really good. I really want to have you guys leave a parting word for everyone and like what's next for you guys, what's next for the partnership with Republic as well as NADA, as well as Rialpha, like where you guys are going next. And we heard a lot about it today. But yeah, please share.
Well, I'll start with the long-term vision on City Funds, and I mentioned a little bit of it earlier, but we want a complete family of dozens of different city funds that are listed on the New York Stock Exchange or NASDAQ and trade basically as ETFs of cities. And, that's what we're working towards. Obviously, there's a path we need to go down in order to get there, but hopefully that happens sooner rather than later.
Yeah, and I'll jump right on that. I don't know if we've shared, but we do have the first 3 city funds live today on the Republic platform. So I think it's been a little over 60 days, and in combination of Austin, Dallas, and Miami, we're just at $1 million raised, equity investors from online retail. So amazing traction in a short amount of time. We have some future funds coming, and as Jesse stated, we've really earmarked 30 cities as we continue to grow, as well as coupling with institutional capital to help really grow and accelerate the availability of more cities to investors. So we welcome anyone to check those out, and we're available to ask questions and be engaged.
As far as Rialpha is concerned, our mission statement is we empower people to invest in real people, real assets, real moments. So we want to do it for 1 million people around the world. Airbnb is operational in 220 countries. It's a $1.2 trillion market. So large market, global outreach. So we want to be there in all the markets, helping 1 million plus people. That's what our vision is.
Yeah, and we just launched our Reg A Plus this past week. So we're really excited for people in this community that we're building to become our shareholders and really contribute and be the catalyst for us to build that inventory of properties in 220 countries across the world. So we're really excited to be opening up the Reg A Plus. So everyone
stay tuned, right? Well, and here, Startup Starter, we're democratizing entrepreneurship, and that includes home ownership and equity into these different spaces. And so we love to even just be able to do whatever we can to help get that education out there for everyone. So whatever we can do, we love to partner with all of you guys in any way. Thank you guys for partnering with us on 2021 Equity Crowdfunding Week. For everyone listening, please check out all of these amazing organizations. They are doing some great things. They can help anyone in the communities that we live in to help build our communities. And we look forward to seeing you guys back. We look forward to seeing more of this. And check out as well as Rialpha. They currently have an active campaign as well as city funds. And so we'll look forward to seeing more of you guys. All right. Well, stay tuned. We'll be back with more, guys. Thank you so much. We'll have a great day. Chat soon.
Almost 10 years ago, a novel idea enabled by digital technology offered a new kind of accommodation for travelers.
Rialpha's mission is to empower people to invest in real people, real assets, and real moments. The whole tagline, invest in real, really stems from kind of this current moment in time where you have people investing in extremely intangible assets, cryptocurrency and meme stocks.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. Normal, ordinary folks have now access to all the same information as institutional organized capital.
But they're not investing in real assets. Property and real estate is something that people have aspired to own since the beginning of time. And there's this new model, Airbnb and short-term rentals, that's completely disrupting that.
The short-term rental market is a $1.2 trillion global industry. And what we're seeing is the demand is outpacing the supply.
Real estate has been a slow adopter of technology. What we are doing is bringing in futuristic technologies today to a market which is saturated with old technologies.
So we'd like you to join our community and invest with us as a shareholder.
Come and join us at the ground floor in our journey of democratizing real estate asset investment around the world.
You're a founder, an owner, a builder. You move fast and need your money to keep up. You need Brex. From starting up to scaling up. It's cash management, credit cards, and expense controls, all in one place. Brex is your financial operating system. It's everything you need to power the business that powers your potential. Open an account online in minutes. It's that fast. Replace your old bank account with Brex Cash. It's faster, easier, with free ACH and wire payments. And if you're selling online, there's instant payouts, where you can get the funds from your latest sales in your Brex account now, not 2 weeks from now. Then there's the Brex card. No personal guarantee, no fees, and high limits to help you pay for business purchases, big and small. Issue virtual or physical cards to your growing team, and earn top rewards on every payment. That's cash you can put back into your business. With everything working together, managing expenses is simple. Create your expense policy and let Brex do the rest. Automatic reminders and receipt matching mean you can focus on chasing the right kind of paper. And Brex integrates with the apps you already use. More time saved, full speed ahead. All the things you'd expect from the system built to keep you moving, all in one dashboard you'll actually want to use. Launch confidently, scale faster, power your potential with Brex. Sign up today at Brex.com.
Until recently, only millionaires with connections were allowed to invest in growing companies and startups. But not anymore. The Jumpstart Our Business Startups Act made it possible for everyone to invest in the next e-commerce company, travel service, entertainment startup, or transportation disruptor. At Title3Funds.com, we revere startups for their innovation, vision, and unflinching drive to succeed. They shape the world around us and influence our communities on a daily basis. They dream big. They make calculated decisions. They turn ideas into opportunities. Now, no matter how much or how little money you have, you can invest in businesses that you believe in. At Title3Funds.com, we offer a unique approach to equity crowdfunding. We focus on quality over quantity, thoroughly screening to find businesses we believe in, vetting company financials, goals, and future plans to provide curated, highly investable companies. As an investor, you'll be able to research growing companies and startups that align with your passions. Join us today.
Hey everyone, welcome to this panel on Big Companies Start Small. Hi Bruce, hi Peter Paul, how are you both doing?
Hi there.
Doing well.
Good. So this was quite a last minute change for us. It's 5 to 11 here for me in London. So we haven't had the chance to speak before the event. So I'm going to keep it kind of quite casual, and we'll just get the opportunity to discuss our various experiences of crowdfunding, all being in different jurisdictions. So to kick that off, we should do some intros. So Bruce, are you happy to go first, introduce you and Title 3 Funds? And yeah, fire away.
Happy to go first. Hi, Bruce Verga, Title 3 Funds. We are in the US. We're a Reg CF, regulation crowdfunding. We can help startups and growing companies raise up to $5 million every 12 months. We have some successes on our platform. We have almost 0 failures so far, so good. So I think we're the new guy on the block. We're up and coming, and we have an experienced team, and we're trying to knock it out of the park, as they say here in the US.
Amazing. That's amazing to hear. 100% success rate so far as well.
So far, so good, yeah.
Excellent. Well, amazing to meet you. We've been connected on LinkedIn, but it's amazing to be able to actually properly meet you virtually and talk today. Peter Paul, please go ahead.
Thanks, Hannah. Yeah, it's Peter Paul van Hoeken, founder and CEO of FrontFunder. FrontFunder is Canada's leading equity crowdfunding platform. I think it's fair to say that we've sort of pioneering this here in Canada, which has come with significant challenges. In general, I would say the UK, of course, is quite far ahead in equity crowdfunding, and the US has caught up very quickly in the last couple of years. And now here in Canada, I would say it's certainly now happening as well. And we've got some help from the regulators as well. Finally, I would say, because we had a bit of a patchwork of securities, equity crowdfunding rules with very low limits and all that. So it's quite challenging to really help companies Canada-wide and open it up for all Canadian investors. But now we're here since actually a couple of weeks ago that we now finally have harmonized crowdfunding rules. And so that's fantastic. So FrontFunder, we're operating from coast to coast, and typically in the range of 500,000 Canadian dollars to 2 million. That's sort of our sweet spots. And just really doing it here in Canada and opening it up for all investors.
Amazing. It's so great as well to be able to speak to you just after those new regulations have come in. Us all being relatively new to the space, we'll have a lot to speak about regarding regulation, which I'll come on to. But just to introduce me, I'm Hannah. I'm the founder of the Funding Crowd, which is a crowdfunding consultancy. So based in the UK, but we work with all different types of platforms. So we've worked with FrontFunder, WeFunder, but most often we work with Seeders and Crowdcube, which are based in the UK, and that's where the majority of my knowledge is. So I'll be speaking mainly from my experience working with UK-based crowdfunding platforms. So to kick off, I'm first keen to start on a bad note, and then we'll end positive. So I'm going to start with talking about the kind of the challenges that the UK is facing, that Canada is facing, the US is facing, and particularly from your perspective of starting in this space, very different from the UK perspective anyway. When Seeders and Crowdcube started, that was 10 years ago. Regulation is very different now, and I'm really interested in hearing about your particular challenges in facing this. So I started with Bruce last time. I'll go to Peter Paul first. So what have you found to be the main challenges in driving the growth of Front Funder?
Yeah, and really the challenge for us, first of all, you start obviously a new company with its challenges like all entrepreneurs, and doing that in a heavily regulated environment, and I already alluded to that, is challenging if you're pioneering, because you need to get them on board. And we've now Front Funder, we launched Front Funder mid 2015, so we've been at that for several years. But it took us a really long way to even launch the platform and to satisfy regulatory requirements with regards to fulfilling all our compliance requirements and do that online. So that's been really working with the regulators along the way to get to the stage of launching mid 2015, and then continuing to advance it and to get their comfort with further automating our entire platform and certain sort of compliance requirements, all of that. So that's been a challenge. As I said, now we're in a good space now with much higher limits. Today the limit is 1.5 million Canadian dollars, not quite the 5 million regulation crowdfunding, but it's moving in the right direction. So that's been a chance. So I would say that's now sort of out of the way. We're sort of good to go there. But what is another really a challenge, of course, if you start this and you basically bring it to Canada, you have to also sort of build the market, and we spend a lot of time to educate both sides of the marketplace. Both companies, yes, you can actually raise from whoever you want, but isn't it just angels or accredited investors? No, anyone, all retail investors, right? So there's a lot of education on the company side, same on the investor side, to explain how this works, and that they can invest in private companies, and also to gain trust and sort of their comfort with really investing online, in particular, typically on our platform, high risk companies, right? So that whole a lot of work in terms of educating both sides of the market and get that comfort to grow the market. That's been a big task here for us in Canada.
Yeah, that's such an important point. I mean, educating the market. It's still, obviously, we all talk about crowdfunding all the time, and we love talking about crowdfunding. But in the real world, while there's been this kind of retail investment boom, the opportunity to invest in private markets from as low as, in the UK, we've got £10 you can invest from. It's still a very, very new concept to so many people. And I mean, my parents, they've only just really started thinking about investing in the stock market, let alone investing in private companies. So I definitely see that education point. I definitely think I want to talk about more. Bruce, what have you found as the biggest challenges for you starting up Title III funds?
I think finding investable companies that have something going for them that you would want to recommend that your sister-in-law would put their money into, and really getting companies that need to raise enough money that are really going to make a difference. Not a company that's going to need to raise $50,000, but a company that wants to raise $2 million, $3 million, $5 million, something that's going to really make a difference, that's going to turn an investment into something down the road. I think what we're really looking to do is focus on investable companies that we think are going to have a benefit for investors down the road, as number one. And another challenge, I think, is the fact that equity crowdfunding is not even known by probably 90% of people in the United States at this point in time. So the challenge is educating the market that this type of asset class is available to them, and finding good companies down the road that will turn their money into something worth investing into.
And that's a really interesting point that I'd like to ask you more about. So as we all know, and I saw in your ad before we came on, Bruce, you talk a lot about vetting and the due diligence process that you take, which is obviously very important when we're dealing with retail investors. But there is a difference between a company that meets your requirements for a vetted company versus a company that you actually think will resonate with the crowd. So what are your thoughts on that? So assuming that they've passed the due diligence checks, you're confident that the beneficial owners and the directors aren't laundering money. You're ready to present them to the crowd, and then you're thinking about this next step, which is actually, is it going to resonate with the crowd? What kind of things do you think about there? Do you have any kind of specific questions you ask? What is your thought process?
So we have a team of people that look at and evaluate every startup that we put onto the platform. We interview them, and it takes a long time to really make sure that this is somebody that we want to put up there. So I think, you know, the product is super important, something that will resonate with the general public investor. So, you know, although we do have a semiconductor company up there, now semiconductors are a big problem in the world. So I guess that's starting to resonate. But at one point in time, I think that people just wouldn't understand what that is. So, you know, we really try to focus on finding companies that we think a large audience will understand what the product is. And, you know, the company really has to understand themselves that there's a marketing element to being on a crowdfunding platform. You don't just put them on the platform and magically people will invest in you. You know, I think that's the educating the issuer is sort of an important part of what we're doing as well.
Yeah, that's really interesting. I think so I'm on the side of helping the issuer get ready for the platform with the platform. And I've found that some companies have really exciting products. It's their brand and their consumer marketing is really strong, but they actually don't have a really engaged community that crosses over with that retail investor segment, so they don't do well on the platform, versus companies that I think, this isn't the most exciting product, but they have a really engaged community that really believe in them and they do really well. So it's so I do my own kind of due diligence before I take on clients as well, and I talk to them about how they engage with their community. And if I hear like, oh, well, we have a good Instagram following, we have a big mailing list, I next want to ask, okay, what's your engagement like on those pictures? What kind of questions, what kind of engagement at events do you have? And you really have to dig down as to whether there's a really engaged community there, before just thinking about how the product itself resonates. And I think that education with the issuers, I think, is probably the hardest, although maybe I'm a bit biased because that's the bit that I do. Peter, what are your thoughts on this kind of educating issuers, getting them ready for the platform?
Yeah, and so first of all, you know, the comment Bruce made about, and we actually did have a brief chat before this session about curation of deals, and we on FrontFunner we also refer to ourselves also as a curated marketplace, but really, but marketplace. So from a perspective of that, we want to make sure that investors can basically make informed investment decisions, because the whole idea is that if you invest certainly smaller amounts, you're not going to go through all the due diligence that a larger sophisticated investor will do, or take the time to do that. So we feel like, okay, investors should be able to rely that certain checks are done. You gave an example, like, you know, this is not the money laundering or whatever kind of exercise. We obviously check for those things, background checks, but we also check, like, is this company, you know, really ready to raise capital, and is there a solid plan, or is this team committed, and all those kind of things. So in that, and we also have to, because we are fully registered securities dealer in here in Canada. So that's how FrontFunner operates. So we also have to, but we want to, because we do believe, like, you know, creating that sort of trust and creating a curated marketplace, and so investors can make informed investment decision. That's basically our mission. And with regards to the issuer education and the challenges of the fit of companies on the platform, as you mentioned, Hannah, is indeed very, very important. We do all the things that you indeed mentioned. You can have a really strong company with a great proposition, but it's a very complex enterprise software or something, you know, it may just not resonate well on the platform, right? And then maybe if they have a really engaged community, or, you know, you can do it, but probably it's hard to expand that community once you're on the platform. So we look at the quality of the company from readiness and all that, but we also look at does for this company, does raising capital through equity crowdfunding, does that fit? Is that likely to work? And so, yeah, those are all the things we're looking at as well. And as well is as Ben Bruce, I believe, mentioned, is like, just listing on the platform and see what happens, then nothing's going to happen. So we also really spend time explaining to issues like, look, your preparation one thing, but once you go on stage on the platform, you got to perform every day basically, and you got to really work on it and engage that community. You got those investors that are sold right away and will invest, and other ones will say, okay, I'll start following. So what are we here, and what are so yeah, and we ourselves have of course raised capitals for ourselves through our own platform. So I'm also speaking from that side as an issuer based on experience. And yeah, it's hard work from start to finish for sure.
I'll just jump in real quick. We had this conversation earlier. There's the concept of a marketplace, and there are a lot of platforms out there where I think they don't want to do much curation unless there's traction, right? And whether it's a good investment or not, anybody can pretty much get on the marketplace. And the philosophy, I suppose, would be, who are you to judge a startup? You can't really be an expert in every vertical. But we try to, I don't think we're experts in verticals per se, but I think what we really do is try to make sure that it's something that we would invest in, something that we would spend our time getting behind, and something that we think is worthy of an investment on a platform, not just as a marketplace per se.
Absolutely. And I think the benefit, obviously, as you grow and as you run more campaigns, is that you get that real life test of whether a particular vertical, whether a particular community or product is working well. So with every campaign, you learn a little bit more about how to curate companies as well. And I've been running campaigns for about the last 5 years, and I learn something new every time I've done a different company. So I think we have the benefit there, and obviously the benefit of looking at kind of larger companies in the space as well, and looking on their marketplace and seeing how different verticals are doing. I'm quite keen to talk about regulation, mainly because this is something in the UK that's, we were talking about challenges earlier, there's a very big challenge at the moment. Any existing players, so Crowdcube and Seeders, but also any new players trying to enter the market, is having a very difficult time with the FCA at the moment. Understandably, there's been in the UK some horror stories recently that have kind of come out with related to equity crowdfunding campaigns, but also just retail products and various retail investment products. And so as a consequence, I would say that the regulation environment in the UK towards any products marketed towards retail investors is not just difficult, but also hostile. We've had a few kind of press releases from the FCA actively discouraging some marketing styles, some marketing messaging, and a lot of really intense kind of scrutiny from the FCA on retail investment products. So I'm interested to hear from your perspective how the regulation is in your various jurisdictions. I'm also, I think it'd be great to hear as well, Peter Paul, if you're able to summarize the change in Canadian regulation. I know it's hard to do in the time we have, but if you could start there and then just talk about kind of how that impacts you, that'd be great.
Sure, yeah. So basically the new so-called startup crowdfunding, which is a exemption, prospectus exemption, was introduced it came into effect September 21st. And what it means is that companies can basically, so Canadian companies can raise up to 1.5 million Canadian dollars per 12 months period. And the maximum investment, the investment limit per investor is $2,500, unless you go through a registered portal, so a registered dealer, and the portal deems it suitable, which FundFunder is. We operate as a registered dealer. Then the limit is $10,000. So that's basically to summarize the new rules. And the other thing is it's harmonized across Canada, and that's really a big thing here because we're blessed here in Canada. We're 13 securities regulators. We don't have a national regulator like in the US and the UK. So that harmonization was really key for us. We've been really navigating all the differences between provinces. So that's all in the past. So those are basically the rules. The rules in summary. And what was your first question? Forgot now.
So how that's kind of impacting you now. So thank you very much for that very slick summary. How do you feel like that's kind of changing things for FundFunder?
Yeah. So those rules. I mean, I would say that's really really opening it up. I wouldn't say game changer, but it is very significant. And so now this is really now moving in the right direction, and will certainly stimulate much more activity in this space, and more companies to explore this route to raise capital. And actually now I remember that the company made the beginning with regards to going dark.
Sorry, I'm still here.
Yeah.
I'm in a WeWork, and understandably, no one else is here at 11 p.m. So the lights.
Yeah,
are
it's
not...
late your time. Yeah. So maybe 11:15. Yeah. So so in terms of the sort of horror stories, Hannah, that you refer to, I think that's one of the key reasons also that the fact that the regulators have had a close look at it here in Canada, they did from the very beginning. So they've been really following us closely in every move we made, and as we move forward with the platform and started doing more deals and get more traction, and probably for the right reasons, because I think that if you just would open this up so everybody can raise money, and caveat emptor, buyer beware, and investor beware in this case, I think you see so many things go south that it would really destroy sort of the potential and reputation of this. So from our end, and also because we operate as a registered dealer, all the communication and marketing around deals on our platform is reviewed for us by us. So even if issuer wants to do an update or news update on the platform, we always look at that, like is it a reasonable representation and those kind of things. So we want to make sure that indeed that it's not sort of all sort of stories are told and perhaps even unintentionally, but may put the investor on the wrong foot and say, I invest, well, it's perhaps not really accurate information. So yeah, we do take that serious and review that information before it's published.
Great, and I think it's a really important point that you've made there. I think we're all used to it. We're all building things in crowdfunding, and regulation is often framed as kind of a hurdle to get over, which we all understand is needed. But I think that spin, that nice spin you put there, which is that it's actually to protect the reputation of crowdfunding globally, is a really good way to think about it. Because I think while in the UK it's been around for 10 years, even in that, financial services in the UK, it's still a very, very early industry, and it's just emerging in different countries and becoming legal in different countries, and we kind of have that responsibility to make sure that we're doing it right. So that's a really, really nice way to think about it. So Bruce, for you, there's been big changes with the SEC was it March, I think, where the big change kind of came in for you. So how has that changed how you've built Title III funds, and do you see anything changing as well in the future?
So we are regulated by the SEC and interface with FINRA on a regular basis. They give us quarterly reviews. They monitor our social postings and everything that we do. It's all about protecting the investor, rightfully so. So when the change came about in March, where it went from being able to raise $1,070,000 per year for each issuer to 5 million, that's sort of when we decided to launch, because we had deal flow, we had deals that they were under $1 million, and it's really not that big of an incentive for us to launch. So we waited until the 5 million went into effect, and I think we came out fast out of the gate, and we're pretty happy about those new regulations. I think that's the most important regulation change, in addition to the change on what accredited investors can put into any of these deals. At one time, it was an accredited investor could put in about $100,000 per year in total, and now there's no limits on what they can put in.
Fascinating. It's really interesting that you very much saw that change coming and decided to, as you say, be quick out of the gates when that came in.
We knew it was going to be somewhere between 3 million and 20 million, and they settled on 5 million, which it's great. $5 million is significant for these companies.
Yeah, definitely. And considering how many iterations the FCA has done for equity crowdfunding in the UK, the max is still 10 million. Now the EU Commission is going to be changing that in upcoming regulations, actually in November, I think, so not too far. Whether that would impact the UK with Brexit is up in the air. But the difference, how long equity crowdfunding has been around in North America versus in Europe, and that limit is growing quite significantly. I think that's really exciting for global equity crowdfunding as it is. So that's amazing to hear. I think we have just a few minutes left. I'm waiting in the private chat just to get that 5-minute warning, but I want to make sure we get some like good stories in there and give you an opportunity to kind of plug anything that you would like to. So I'd like to hear about a success story. Now, it doesn't have to be a particular campaign. It could just be something that you're particularly proud of that you've done. So I'm going to start with you, Peter Paul. Anything that you'd like to talk positively about?
Yeah, absolutely. Well, let me pick an example as I think it also illustrates sort of the potential and why it's so exciting that investors can participate from the very beginning. So we had a company that raised just over 3 years ago now on our platform in a plant-based protein industry, and they raised on our platform so around $500,000 $500,000, and they basically about a year and a half ago they actually went public on one of the Canadian securities exchanges, and that was a real success story in terms of when they went public and the returns for those investors that really invested through FrontFunder in this company from the very beginning. The companies are actually a very good food company, so their tickers vary, and so they generate a return for investors of really, I would say it was an outlier, and in the 30 times, 40 times at some point. So it was, of course, we had many happy investors, about 350 that invested through FrontFunder, and of course we're very happy with that because it's a success story in terms of look what the power of democratizing investing in private companies from the very beginning, rather than typically the public that has to wait until company goes public, if it ever goes public, right? So, or not already acquired by another company. So yeah, we're very proud of that example, and we have no more of those following. But it is really shows how exciting it is that investors can basically participate from the very beginning.
Yeah, I love that. I mean, that's what it's all about, really, isn't it? I think that's what we all want for our investors, and our success story. We've had a few, thankfully, come through within the UK, but one recently was Free Trade, which is our equivalent of Robinhood. If you'd invested £250 in their crowdfunding campaign on Crowdcube, you got a return of £10,000. So insane returns. Nice. Really exciting. Yeah. And Bruce, as you've already told us, you're relatively early, but any exciting campaigns that you want to shout about?
Well, that's a great story that Peter Paul just had about one of his companies going public, and we have a couple on our platform that I think that's going to happen as well, and they're gearing up toward that. So I'm not going to claim it as a success story yet, but I will next year, perhaps, when we talk
again. Watch
this
space. Yeah.
So I think though we have a founding team that's worked their butts off to get where we are today, and we're competing with companies that have been in this space for a very long time, and we're gaining traction. So I think it's the satisfaction that we're getting from our companies being successful. We have investors, we have a way of doing things that we're all together on. So I think our success story is really just our team's success story as a team. They're fantastic.
Amazing. That's amazing to hear. Well, I wish you the best of luck in continuing that. And Peter Paul, very excited for these new regulations. I look forward to Canada seeing more equity crowdfunding, and FrontFunder leading that. So I think we've got about 2 minutes left. I don't know, I think we might just get cut off. So with those 2 minutes, it'd be great just to give you an opportunity to promote anything you want to, and how can people kind of get in touch with you personally, but also with the company. So Bruce, do you want to go ahead?
Sure. So we're always looking for good companies. As I said in the beginning, we even are able to pay referral fees. So for anybody that wants to refer companies to us, we could talk about that. Our website is Title 3 Funds, number 3, as opposed to Roman numeral 3, our namesake Title 3 of the Jobs Act. So it's title3funds.com. I'm Bruce Verga. There's a form on our site that anybody can fill out to apply to be on our platform, and we'll look at all of those. So reach out.
Amazing. And Peter Paul?
Yeah, I think the easiest is to refer anyone who's interested in what we're doing with FrontFunner here in Canada to go to our website, frontfunner.com, both for companies, same as for Bruce. We're always looking for exciting, promising companies, and I'd like to have a conversation, see if we can raise capital, help raise capital through our platform, and of course for investors. And just to clarify, we're focused on the Canadian investors, so we're not registered in the US. But for Canadian investors, sign up on our platform, which is done in 30 seconds. So you can an opportunity to follow us and see what's happening and see new deals. And we look forward to seeing you on our platform.
Awesome. And finally, if anyone would like to get in touch with me, I'm Dr. Hannah Forbes on LinkedIn and thefundingcrowd.co.uk. I think that brings us nicely to 2323 for me. It was a pleasure to speak to you both. I look forward to speaking, hopefully in this event next year, but also in the meantime. And I hope everything continues to go well for you.
This is great. Thanks.
Thank you. Thanks so much. Thank you.
Take care. Bye.
Bye.
Until recently, only millionaires with connections were allowed to invest in growing companies and startups. But not anymore. The Jumpstart Our Business Startups Act made it possible for everyone to invest in the next e-commerce company, travel service, entertainment startup, or transportation disruptor. At Title3Funds.com, we revere startups for their innovation, vision, and unflinching drive to succeed. They shape the world around us and influence our communities on a daily basis. They dream big. They make calculated decisions. They turn ideas into opportunities. Now, no matter how much or how little money you have, you can invest in businesses that you believe in. At Title3Funds.com, we offer a unique approach to equity crowdfunding. We focus on quality over quantity, thoroughly screening to find businesses we believe in, vetting company financials, goals, and future plans to provide curated, highly investable companies. As an investor, you'll be able to research growing companies and startups that align with your passions. Join us today.
Hello, my name is Jose Barrera, and I am the co-founder and CEO of Startup Starter.
And I'm Laurel Scott. I am the co-founder and COO of Startup Starter.
Startup Starter is for the people that want to start a business but don't know how. Startup Starter is for the individual that dreams of someday owning something but doesn't have the courage because he doesn't understand that he's capable of.
Startup Starter is opportunity. It's a place where you can get what you need, whether you are a kid that dropped out of high school, college. With Startup Starter, you can come and learn all the things from marketing, from finance. You can learn them at your own pace and actually become your own expert in them because we're providing you with the experts to do it.
I think the pandemic really showed us a lot of, and opened our eyes to a lot of the nuances out there in the world, a lot of things that we're missing.
When the pandemic hit and suddenly business is online and you have to go find the stuff, that's when really the light bulb went up, because it's like, if everything's online and I have to navigate the whole web to figure out what I need, then you suddenly realize that why can't I go to one place? You should have just a single brand to go to that is going to take care of you, no matter what it is that you're trying to build or whatever business you're trying to create. Startup Starter is the most complete resource that we can bring to people when it comes to starting a business. It's the best-in-class education that is affordable and designed for the digital age, cinematic, and watch people that look like you, that feel like you, that are charismatic, that know their stuff, that are teaching you stuff that you actually want to know.
It's the stuff that you not only want to learn, but you need to learn. We're building the next phase of business education to make it accessible to the world.
It's been built from the ground up with people that needed help and with people that were eager and willing to help.
This started all from us saying, how can we bring people together? Because like every business is becoming an online business. How can we be a good online business to connect other online businesses in one place?
I've always loved helping people. I got into business not because I wanted to be in business, because people were asking me for help. That's what I like. And at the core, That's what brings me joy. I don't see it as work. I don't see it as business. It's just what I like to do. Startup Starter helps us do that at scale.
I love the idea of helping people while also being able to make a lot of money writing your own ticket.
We're building it for the dreamers and for the everyday individual that just wants a better life.
Welcome to Going Public. On this season of Going Public, we've uncovered 3 American companies.
You guys have something your competitors don't.
That are putting it all on the line.
This only happens if you get money.
No turning back now.
They need to raise serious capital.
It's go time for everybody.
To take their companies to the next level.
That's a thing to watch for.
We went from 0 to 1 million users. This has been a huge hit.
Yes!
We've decided to bypass the venture capitalists and the institutional investors.
To partner with and reward our customers.
We're not into making the richest people in the world even richer.
We are coming directly to retail investors with our Regulation A+ offering.
Giving you the chance to get in on the ground floor.
You want to go fast?
Yeah.
You'll see firsthand what it takes to get their companies ready.
You ready to do this? There's a lot of work to do. Get our audit done. Get our Reg A application into the SEC.
We believe we set the record from date of filing to date of qualification.
With the help of mentors who've been there.
Working with you on messaging is something I'm really excited about. Taking complicated concepts and turning them into a t-shirt.
The right celebrity partner will change the face of your brand overnight.
What has been Proven's PR strategy? It sounds like we need one.
Then it's time to pitch.
I'm a little nervous.
Are you?
Yes!
Everybody likes to talk about AI, but this is truly unique.
The way that math works out, we think that's going to achieve billion-dollar valuation. You're a hell of a salesman.
And make their case to investors like you.
What can we do with 10 to 25 million when in our past 10 years we've only had 2?
Will Proven's custom skincare tech revolutionize the $155 billion beauty market?
Click to invest.
Will Treble beat the streaming competition and save music for the masses?
Click to invest.
Will Hammond's commitment to quality craftsmanship beat fast fashion?
Click to invest.
It's their journey, but ultimately your decision.
They think we're going to be the next Spotify.
Going Public premieres on entrepreneur.com
October 19th.
Hi, welcome to our panel, everyone. I'm Aaron Mendez, co-founder and chief strategy officer of Issuance. We are a fintech platform, and our platform enables companies to raise capital online. To date, our clients have raised through the platform over $100 million. So I'm going to be moderating our panel today. And discussion around how retail investors are changing private capital markets from a unique angle, focusing on the driving forces behind Regulation A and Regulation CF investment and adoption. So let's go ahead and get started. I'd love to go around the panel and have everyone introduce themselves, starting with you, Neil. If you could tell us, what does your company do? How are you active in Regulation A and CF? And how are you connecting with retail investors today?
Sure. So I'm part of this community called Angels and Entrepreneurs. It's a community where
People look for startups to potentially invest in, and startups come to look for investors to potentially see their deals. And we've been doing that for a few years now, and it's been going quite well. We have well over 100,000 active members in our community. Majority of them are investors, and continue looking for deals and opportunities and seeing what's out there.
Well, thank you for being here today. Kevin?
Good afternoon, good evening, everyone. My name is Kevin Morris. I'm the CFO of Wavemaker Labs. We're a corporate venture studio that focuses on incubating businesses in the food and robotics space. We like to say we like to automate everything from seed to fork. We are behind a number of companies that have successfully raised Regulation A+ and Regulation CF rounds, including Miso Robotics, Paistro, it's a pizza vending machine, Graze, a commercial automated lawnmower, Bobacino, a boba vending machine, and a few others that we'll be announcing in the next few months and weeks.
Thank you. And Tony, welcome.
Hey.
Good to see
hi,
you.
everybody. Tony, Aaron, you know I love you. And Neil, I'm a member, by the way, so I get my package today. Thank you. I'm Tony Drockton. I'm the founder, and they call me the chief cheerleader of Hammett. We're a luxury handbag brand out of Hermosa Beach, California. I started that journey 13 years ago. Proud to say here we are 13 years later. We're the fastest growing luxury handbag brand in America. We're carried in over 850 retailing partners around the country, from small specialties to the Montage and Four Seasons, and the two only family-run department stores, Walmart and Dillard's. We also have two of our own retail stores here in Southern California, and a budding and growing online business, which is about half our revenue. We're in hyper growth, and that's why we've decided to go forward with the Reg A, which we just launched quietly last week. So I'm excited to be on this panel.
Amazing. Thank you, everyone. So I think a little bit of context would be helpful for this next question here. The market, and I'm talking about Reg A and Reg CF, has seen quite a bit of traction recently. And that's kind of been demonstrated in a few ways. Number one, we've seen the cap on how much companies can raise through Reg CF go up to $5 million, and the cap on Reg A offerings go up to $75 million. And I believe that in 2020 alone, over $3.2 billion was raised through Regulation A and CF offerings. Neil, start with you. From your perspective, what do you think is driving your retail to invest? What trends are you seeing in the market?
Well, from what we've seen, retail always wanted to invest in a lot of these startups. The Ubers go public, the Facebooks, the Airbnbs, the Coinbase, and the list goes on and on and on. The issue is retail couldn't get into most of these deals in the first place, so access. But with a lot of the platforms out there, access is starting to change in which they do have access. Now, the question of the quality of the deal, that varies, right? Some of the deals may be just as good. A lot of them are probably going to be worse, but you got to end up going through them and try to find the right deals. And the second thing is you don't have to be accredited. That was a big thing that was stopping a lot of these retail investors from investing in these corporations, because, they couldn't get into the deals. First off, they didn't have access. And even if they had access, they weren't accredited. So having more access, and the deal quality is, subject to anyone's opinion. And the second thing is you don't have to be accredited. So those two things have vastly changed the industry.
Kevin, what do you think is driving retail to invest, and what trends are you seeing? I know you kind of come at this from a different perspective, right? Wavemaker Labs is a fund with multiple portfolio companies that are leveraging Reg A and Reg CF. What are you seeing?
Yeah, I think on the retail side, and especially on equity crowdfunding, the limit increase to $5 million really, I think, blew up the space. I think you could raise more than $5 million in the past, but with the Reg A+, and it's a bit onerous to get that up and running. So I think crowdfunding's always kind of been in the public mind, but with the increase to $5 million, that helped. Also, frankly, I think with the pandemic, people have been sitting in front of the computers a lot more than they probably normally would have, so that certainly hasn't hurt. I think in terms of the trends we're seeing, we're obviously specialized in robotics and automation. I think we've been pleasantly surprised how well the market has reacted to our deals. Versus, with Hammett and what Tony's built, I think it's even more powerful because he's raising money for his business, but also growing his potential customer base, which I think is pretty exciting. So it's great to see success stories in two different, completely different kind of industries, where you got, Apple picking robots, raising, and then you got, a great company like Hammett, which, by the way, my wife has a few purses, so she'll be jealous that I'm.
Aren't those the ones I sent you to say that?
Yeah, exactly. Yeah. With the stack of cash in the
with the
note.
middle.
Yeah.
No, thank you for the praise. I appreciate that, and I'm glad she's on board.
Yeah, Tony, love to hear from you. What do you think is driving retail to invest, and maybe even what do you think is attracting investors to your company specifically?
Well, I think what's driving retail to invest, I'll try to compare it to my industry. So the luxury industry 20 years ago, if you wanted to buy a Louis Vuitton, a Gucci, you went to the big department stores. You saw it in the kind of magazines nobody read, but they're this thick with pictures, the Vogue, right? There's a lot of gatekeepers. And so that industry could only grow so big with those gatekeepers. 20 years later, with social networks and the ability for the consumer to connect directly with luxury brands, the expansion of these brands has been phenomenal. Some of the most profitable companies, some of the fastest growth has been in luxury over those 20 years because the gatekeepers were pushed out of the way. Most of those Bergdorfs and Barneys, they're out of business. The Vogue magazines, they're being sold for peanuts right now. So if you think about the retail purchaser in luxury 20 years ago, they had to look through a magazine or go to a gatekeeper in order to get that bag. It's just the way it goes. And also, it was very daunting to walk into one of those stores. You didn't feel welcome. Kind of feels a lot like the investment community maybe 10 years ago, right? It was a closed community. There was a lot of gatekeepers. You really weren't invited in. Let's take it up to today. With the expansion of crowdfunding, with the opaqueness becoming transparency, with the gates being closed to being wide open for access, and most importantly, the fact that private deals now have financial transparency that's been vetted, especially at the Reg A level. You can see deals, you have access to them, you're welcome in, and you can vet them pretty well. I think this is what's driving the retail investor community. And the last piece, of course, is they want in. They're seeing what's happening with the qualified investors over the last 20 years with private equity, with venture capital, and they're like, how come I can't get a piece of that? So kind of the same way luxury brands said, everybody can carry a luxury handbag if they'd like to now, as long as you know where to find us, which is Hammett.com, by the way, HAMMITT.com.
No, absolutely, no doubt. There's a lot.
What was the second part of your question, Aaron? I forgot that.
It was, what do you think is attracting investors to Hammett specifically?
That's an easy one. I've got a CEO, Andrew, with this amazing Scottish accent. Forget about it. When he speaks, everybody wants to be with Andrew. And I think besides that, we've earned it the hard way. 13 years of building the brand, consistent growth, really great retail partners. And what's been behind all that is a commitment to the highest quality product. And that's not just the bags. It's also the experience, our team, our partners. The product is the whole enchilada around Hammett. And we've only been out for a couple of weeks, but the initial investment community is our fans, people that know us. And what's really, really makes me feel happy is, right as of today, 75% of our investors are women, which is awesome. So
amazing.
I heard before with Reg A, it was more like 75% men, 25 women. I don't know if that still holds. So for us to flip that relationship shows you that women want to come running into crowdfunding. They just need companies, brands that resonate with them so that they'll invest. And I think Hammett's there.
Yeah, that's really amazing. No doubt there's definitely a lot of activity in the market today. We're seeing a lot more traction. So, as you're all probably aware, right, you know that companies are required to file an offering statement, with the Securities and Exchange Commission. And I'm wondering if you guys think that, investors are, just relying on what's in those SEC filings, when it comes to making a decision about investing, or if you think there are other reasons that are kind of influencing, why people are investing in some of these companies, and kind of you kind of pointed to one thing, Tony. We are seeing a lot of traction with brands, but Neil, what are your thoughts?
I think a lot of people, when it comes down to investing, they're looking at things that you can't really see in those documents, such as what's the team, what's their track record, how big is the total addressable market, are they doing something that's game-changing or revolutionary? Another big thing is, believe it or not, a lot of people invest in what they understand, right? Warren Buffett, I know Berkshire Hathaway does a lot more tech now, but if you think about Berkshire Hathaway, for the longest time, they just stuck to what the executive and management team knew. And yes, they're in tech now, but a lot of their new people that they brought on understand tech. Just as Tony mentioned, a lot of women end up investing in Hammett. I bet you a lot of them are customers. I could be wrong on this, but I'm going to make that assumption. And he's giving me a thumbs up.
Looks like you're right.
So it's just like, if people love a company, they like the product, they like the service, they like the team, they like the market size, they're customers, you can also get them as investors. And I think that's really powerful as well.
Kevin?
Yeah, I think certainly what we've seen is a lot of people who invest, it's a bit of an emotional buy, right? I think there's plenty that do read the 1A with a Form C, and they want to look at, your audit and, understand your balance sheet because they're CPAs. But in general, I think what we've seen is it's an emotional buy. People oftentimes don't, also from what we've seen, they don't invest right away. They'll get exposed to the deal. They want to be told a story. They want to see a narrative. So they want to see progress in the business. They want to see updates, and they kind of want to follow the journey with you. And so I think that's, what we've seen with a lot of the campaigns that I've been a part of, and we've been a part of, is they get exposed to something and maybe they haven't heard about it. In Tony's case, a lot of his customers are investors, and so or have become investors, and so they knew about the brand and wanted to have be more involved, become in theory a brand ambassador. But for a lot of our deals, people are getting exposed for the first time. Many times when hopefully Neil continues to recommend some of our companies, but they see the deal, they're in the funnel, as they say. And then what we like to do is show progress to the business and say, hey, look at what we've done at Gray's. Look at what we've done at Miso. We've signed this deal. We've signed this new team member. And, it's ultimately they are making a financial decision, but I do think it boils down to, in most cases, it's an emotional decision, something that they can get behind and they can understand and they can get excited about.
Yeah, absolutely. Tony, any additional thoughts?
Actually, I don't. I think they covered both of them. I really support both of you on what you said there. This is an emotional decision. I'll just add, as a founder, I think it's up to us founders to also make sure that in our offering, we're doing everything what's right. In other words, this is a long-term relationship you're creating. So you might get them in on emotion, but you gotta be able to give a good return to them over the long haul, because those emotions are gonna turn really quickly if you don't deliver. And I know it's not part of the question, but I think it's the answer to the long-term success of crowdfunding, which is delivering great companies that are gonna provide amazing returns for those early investors.
Yeah. Well, about 5-6 years ago, or up until about 5-6 years ago, these opportunities, weren't really available to about 90% of the U.S. population, right? And there are different reasons for that, including to protect investors, right? Do you think, Neil, that that non-accredited investors can be just as qualified to invest as accredited investors?
Sure, and I'll give you a prime example of this. All right, so Tony, what do you sell at Hammett? Handbags, right?
Right.
Luxury handbags, correct?
Correct.
Are they brand new or used?
They're brand new.
Okay. Why would someone buy from you versus going to like Nordstrom's or someplace like that? I get the cold approach, right? You may not feel invited. Sometimes they have these rooms that you have to go in to get bags, and a store with Nordstrom's labeled Chanel or something and a different one's named Louis Vuitton. But like, why would they go through you versus just going to Nordstrom's other than COVID?
Yeah. I mean, I think because we provide the highest level experience from beginning to end.
And I'm assuming pricing similar, maybe cheaper, but you're not really paying more, correct?
Our prices are the same no matter where you purchase. 850 stores, our website, everywhere.
Cool. So if you think about this, he's selling handbags, all right? Most investors, and this is changing, but most investors in venture capital are men. I'm assuming everyone agrees with this because that's what the stats show, at least in managing directors. All right? More women are becoming venture capitalists, and more people in more minorities are becoming venture capitalists. So things are starting to change. But a lot of times historically, you would go and pitch, and I would be Tony, and I'm saying, hey, you're XYZ venture firm. I got these handbags, and this is what people are going to buy. And they'll look at things like your market cap and your management team and all of this kind of stuff. But in most cases, they're not your buyer, right? Yeah. Whether they're accredited or not, they probably don't have as good of an understanding of his business as his potential customers, who in many cases are women, who are also some of his investors. And, you know, just because you're accredited doesn't mean you understand Tony's business better than the consumer. A lot of the consumers that went through the pain of going through Nordstrom's or any of these places and didn't get the service that they wanted, and a lot of their friends that see the same problem, they probably may have a better understanding of Hammett than a lot of venture capitalists. Now, I'm not saying the venture capitalists can't learn it. They're smart. They can figure it out. They've done investments in many different categories that they don't understand, and they're very successful at it, at least a large chunk of them are. So it doesn't mean that they can't do it, but I don't think it's that risky, which is the point I'm trying to make, right? It doesn't mean that the venture capitalists can't pick right deals. What I'm getting at, Tony's customers are people who understand the problem and experience it firsthand. I don't see why they can't be qualified as an investor. Yes, there's a risk, but there's a risk for accredited investors and non-accredited. It doesn't matter how much money you have, there's always a risk of losing money. And I think more so the reality is you just have to make sure the non-accredited investors can't put all their money into a deal. And they have to be, you know, with the regulation, hopefully they're not going too crazy and putting it all on one deal or putting the majority of their wealth into startups, because you can lose money.
Yeah,
well said.
That's right.
You're going to come with me on all my pitches going forward. This is great.
What are your thoughts, Kevin?
Yeah, I mean, I agree with Neil 100%. I think, you know, obviously the reason that it was only accredited is because the government, you know, was worried that people were going to, you know, ultimately, I think in extreme, get taken advantage of. But there's nothing about it, accredited or not accredited, that changes how somebody views a deal as a potential investment opportunity. So yeah, I mean, I think it was almost like a fake ceiling, right? I mean, it was a glass ceiling that needed to be broken. So
sure. How about you, Tony?
You know, I think in most cases, the retail investor is going to be savvy and make investments, like we said earlier, emotionally, but also over the long term. I think there's a conflict of incentives with just the qualified investor, especially in the private equity and venture capital space. In the end, I'm not their customer. And they're really not just investing in my company. They're actually investing the money for their investors, and they're trying to maximize their return. And that's just the way it is. And we know going in. So their job as a founder is to come to me and to really push my valuation as low as possible to get their investment in so they can get a maximum return for their real customers, which is their investors. Now, the retail investor has a completely different perspective. They're coming in and they're saying, I truly believe in this brand or this product or this pizza making machine or whatever it is. And I know it's going to be successful. So I'm going to invest money into it over the long haul. And they're not as concerned with that initial valuation being as low as possible because they don't have other investors that need to show an internal rate of return for. And I think because of that, there's a healthy tension now out there between that qualified investor community, between venture capital, private equity, and now the retail investor. Again, taking it back to my industry, that same healthy tension that happened in retail, in fashion 20 years ago, Now we see how this is transformed, right? It's changed my industry a lot, but it hasn't broken it. The great retailers got greater. The strongest brands got stronger, but it really opened it up to the individual fashionista to participate in the ecosystem. And I think that's what's really cool here. So yes, I think retail investors will become highly educated and qualified investors the more they invest over time, and the more our ecosystem gives them the tools and the information in a easily accessible way to do that.
Yeah, that's right. And to your point, Neil, there are investment limits around how much non-accredited investors can put into a deal, right? And we, from a platform perspective, we've definitely seen, that investors have, invested pretty conservatively. I think that we did an analysis internally. We kind of discovered that, on average, most people were investing around about 1% of their income and 0.25% of their net worth. So just kind of moving on here, though, what do you think investing in private companies offers retail investors over other alternative investments like crypto or NFTs or real estate even? Neil?
Yeah, so crypto in theory can provide massive returns, because if you look at some of the biggest returns over the last 5-10 years, I think crypto is pretty much at the top. I could be wrong, but I think Bitcoin or one of those coins, I don't know which one, but they provided people with the biggest ROI, I think, from a financial aspect in the last 10 years or something like that. And I could be wrong, but either way, it's a massive return when just looking at the price from where it was to where it is now. But it's a few things. So one, if you get into startups that you love, you have emotional connection. A lot of people are placing bets into crypto and to stocks, and they have no emotional connection with these companies. It's just like, hopefully I get a return. Two is, in the startup world, yes, you can also lose a lot of money and your money can go to zero. But if you pick them right, you can have massive returns. Look at the investors in Coinbase or Airbnb or, Uber or Facebook. Like, the returns have been massive. And yes, again, you could lose money too. But I think the big thing for retail investors is the potential of wealth creation is there. And the second thing is, if you're investing in companies you understand and you're emotionally connected to and you love the product or the service and you use it, that's also a win too, because you're spending money there, and hopefully the money that you're spending there makes your investment makes a portion of that back, if not multiple times more.
Kevin?
Yeah, I mean, I think one of the things that equity crowdfunding does is it allows, again, the general public to invest in an asset class that traditionally was close to them. And so, in theory, again, it's not sort of a de-risk model because you have to make single investments, but you can get to the point where you in theory could get venture capital style returns. You're getting in early, and versus the stock market, it can be kind of up and down. And I think that's what crowdfunding does, is it allows the general public to, again, there's a risk and you could lose everything, or you could be, get those kind of, in theory, triple digit returns. Maybe not that high, but
Sure.
You know what I'm trying to say.
Yeah, no, actually, that's a good point. I think we just saw recently, earlier this year, one former Reg A issuer, Flora Growth, actually IPO'd, and that company delivered profits to investors. And actually, recently, another company that also used Reg A to raise capital, which you're familiar with, Wink, which is a wine subscription platform, just last week announced their plans to go public, filing their S1. Tony, anything to add?
I think Neil and Kevin, you guys hit it on the head. I mean, the difference between a Bitcoin investment and a company, a product, a Hammond is it's palpable. So there is an emotional connection to it. It's not just about that, what is my return going to be? There is the similar levels of risk, I'd say, amongst these different assets, but there's definitely not that emotional connection. I can't imagine anybody, putting on their Bitcoin and going out for the day and walking with their arm, like, I got my Bitcoin. And It's not happening, or eating a pizza. I mean, look, I own this company. This is amazing. You need to be a part of this. And I think that's the magic of crowdfunding, is people can get in on companies and areas that they believe in. And I think Neil also hit it right. If you're going to be really successful, you got to take a Warren Buffett approach. I know I'm on all the platforms. I look at lots of investments, and I'm just like kid in a candy store. I've made 3 this year, and they're narrow, and they're in the kind of the same categories that I believe. So for me, I'm going to follow that approach. Is whatever you really are passionate about, there's probably a micro vertical right now in crowdfunding that you can get into and become really good at investing in the best of breed in that category. And hopefully it's luxury handbags.
Yeah, that's great. So shifting the conversation for a minute, and I think I'll go to you, Kevin, first this time. Shifting the conversation to issuers, what do you think prospective issuers should consider when thinking about doing a Reg A or Reg CF?
Great question. When you go into doing it, hopefully you're successful. Of course, we want that. But if you're successful, expect that you're going to want to keep doing it. You're going to want to rinse and repeat. If you have a successful raise, you're probably going to want to raise again for a few reasons. One is, I think, there's some hurdles to doing it for the first time. It's not rocket science in my mind, but it doesn't come naturally to people if you've never done it before. And so there's obviously that kind of built-in discipline that you get when you do it for the first time. But then I think once you do it and hopefully successful, you realize that it is a valuable source of capital that is, I'd say reliable from a timeline perspective, gets more reliable from a forecast perspective. And then again, I think, in the case of B2C businesses like Hammett, you can really start to see the synergies between your investors becoming customers, more loyal customers, and vice versa. So yeah, I mean, I think I don't think people should ever approach it like they're going to dip their toes into it. You should just go all in. There are obviously these kind of red flags around SEC annual reporting requirements, semi-annual reporting requirements. Yeah, you have to adhere to those, and those are important. But those become more natural to you as you do it, and frankly, they're good for your business, right? I mean, Tony, you guys, obviously went through your 2-year audit, and it's a little painful, but it's great from just a business operations perspective.
Right.
Yeah. I'm sure Andrew's, might have lost a lot of hair like I did when he did it the first time, but he's happy that you guys did it. So yeah. I think it seems a bit scary, but it's actually not that once you kind of get into it.
Yeah. And so Tony, you are a first-time issuer. Is there a reason that you decided to go down the Reg A path versus Reg CF?
There is. When distilled DSTLD, that's when I discovered crowdfunding. I've been watching it for many years. Andrew and I spoke about it 3 years ago, and we did a real self-analysis, and we just weren't ready. So I saw it as something that we'd eventually do, but we set goals of where we needed to be for us to really have a successful crowdfunding. That was when we started talking about it 3 years ago. And in between then, we did do a private equity round for a couple of $1 million. We were Portfolio Company of the Year for them the next year. It was at a valuation, which is, it's 1/10 of where we're coming out right now. So they've done quite well. And we went back to them, and we talked to some investment bankers in between about a next round. And we learned a lot in that process. But in the end, I said, you know what? I'd love to really get the Reg A off the ground. So Andrew, let's focus on it. That was a year ago. And so we got the audits done and all that. And the reason we chose to go Reg A was that, as we talked about, empowering our fans was similar to me of when we opened our first retail store and people came in and they're like, I've been buying Hammett at Dillard's and Bon Mar, I love it, but oh my gosh, a Hammett store. They're just so excited. They walked out with their bag, and if I was there, they got to meet me or they met my staff. And we noticed that it just exploded our business in Orange County where we opened the first store. We had the same thing happen with the Manhattan Beach store here. We see Reg A as the same way. It's like almost another storefront for us. It's ability for us to have a one-on-one connection with our investors, nobody in between. That private equity round was great, but those are not my investors. And they're very happy with that return, but I'm one of many. I don't have a direct relation with them. So we decided, let's go direct the same way we opened up our first store, the same way years ago we went to Hammett.com. But let's not forget that we'll probably be doing another private equity or venture capital round down the road. I think Reg A, it's not a finish line, and it's not the only way to go as you have a successful one. It's just another line on the cap table. If you do Reg A right and you have a long-term perspective, your realistic horizons, realistic valuations, realistic goals, you're going to have another round and maybe even another, and hopefully eventually a true IPO on a NASDAQ or a New York Stock Exchange. But you have to look at it over the real long haul. It's definitely not an exit, at least not for anyone here at Hammett. It's really more of an entrance for us.
Sure. Yeah. So Neil, yeah, you've probably seen this more than any of us, but there are a lot of companies that are coming to the market with new offerings and new investment opportunities. What do you think investors can do to kind of sift through the noise? And and maybe you can talk about if maybe there are some resources that you kind of rely on to follow the market at all as well.
So I look through for quite a few things. Good team that's experienced, ideally has a track record in the space, and they've done really well. Large market, because it's just as hard to build, $5-10 million business as it is to build a $100 million business. But a lot of times you can't build a bigger business because you pick too small of a market, right? So it's like the execution, the work that takes to build a small business, a large business. In many cases, especially when you're starting off, is a lot of the same work and energy, but the one that's bigger, a lot of times, is just bigger market. The third thing I look for is any competitive advantage. What's different from them versus the competitors? Why do people go to them? Sometimes it could be as silly as a brand. People love Kylie Jenner, so they're going to buy Kylie Cosmetics over some other brand, right? Then I also look for unit economics. Like, are the financials making sense? Usually they're not profitable because they're raising money, but do you see a light at the end of the tunnel on how they can be profitable as they scale up? And that brings me to the next point. I also look at scale. Is it feasible for this company to scale up? And as they scale up, does it get more efficient, more profitable? Does it become a more lucrative business? I also start looking at things like any data on churn or lifetime value of a customer. The more stickier product, the more you can get people to keep coming back and buying, the better off you are. So those are some of the things that I look for. Of course, there's many, many more factors that goes into a deal, but people should look at some of those things as well as any other major questions they may have when evaluating a business.
Yeah. So Kevin, for less experienced investors, what are some ways they can learn more about different investment opportunities and kind of dig into companies?
I think now there's kind of the major platforms out there that have quite a bit of offerings. That's always a good place to start. I do think that they can tend to be a bit crowded, and so I think partially it goes back to from a few questions ago, which was what do we think convinces people to invest? And it's there's so many different industries out there that are doing crowdfunding. So what do you know? What do you like? What do you want to learn more about? And there's something there. And I think you can look at the financials and that's useful and it's all out there and it's very transparent, but read the offering page, right? Read, there's probably a video, learn more about the company that way. Look at the team, look at the prior success. I mean, that's the great thing. There's too many opportunities now.
Sure.
Right. Yeah. But that's great too, because there's something for everyone. And if you're like, hey, I'm really interested in the wine business, or invest in the spirits business, well, there's a ton of companies doing that. If you're interested in consumer goods and luxury, well, www.hammett.com is a great place to start. Shameless plug.
I love you, Kevin. shameless, Kevin.
Tony, any thoughts to add there?
Again, they've covered up everything there. I'll do a shameless plug for King's Crowd, which King's Crowd is, I found them through Issuance. Julian turned me on. I was looking for a place where I could see valuations compared over platforms and over time. I couldn't find anything. And King's Crowd is there. I think they're almost becoming like the Bloomberg of finance in the crowdfunding space. And I know it's a place I go almost every week or every day to look at value. I like that. And second of all, narrow and deep. That's what I'd say. So Kevin, you hit it. It's like there's a space exploration platform right now, just launched 2 weeks ago. So literally, if you work for NASA or if you're working for one of the government military contractors, anyone, there's a platform for you right now. It's an amazing platform. I don't understand any of it, but it's cool, some of the stuff they're doing. So I would say figure out what your passion is and your love and focus just on that space so that you can go narrow and deep and hopefully get a great return by spreading your investments over many. That's the other thing. Don't put all your eggs into one basket, and whether it be crowdfunding or whether it be any investing. So you really want to figure out how much am I going to put in for the year, and then how many investments will that allow me to have? And no matter how emotional you're attacked, stick with that. And over the long haul, you'll probably do pretty well.
And of course, we're all familiar with Angels and Entrepreneurs Network, right? One of the leading investment research publications providing coverage to Reg A and Reg CF today. So on that note, Neil, what do you think are some of the headwinds for Regulation A and Reg CF? What are some of the friction points or areas for improvement? And what are some things that are going to help fuel the market as well?
Yeah, there's a few things that make it hard. Number one is regulation. And I'm not saying regulations is a bad thing, but you got to dot your I's and cross your T's. And a lot of people don't know how to get things up and going from a legal aspect, especially on the Reg A side. It's much more difficult than the Reg CF. But luckily, because of the size you can raise in a Reg CF now, I think that's helped a lot of companies because a lot of people aren't ready to raise a large amount that you wouldn't necessarily need for, let's say, in a Reg A. 5 million gets the companies a long way these days. The second big headwind is because there's so much competition and there's more and more noise in the space, it's harder to actually market your deal and get it in front of more people because they have so many more options, which makes it harder to raise money because you're not the only deal on the block. Like when crowdfunding first came out, it was novel, especially for startup investing, and there wasn't as many deals. So you would see, a lot of the deals get a large chunk of money. Now people have so many options. It's like a kid in a candy store. Which one do they end up picking? So you got to figure out how to stand out. And sometimes you have to spend money on marketing, and it's very expensive, especially to do things like run Facebook ads to get investors to your crowdfunding. And I'm not saying you shouldn't do that, but you got to look for more efficient ways to end up raising money, because if you go spend 10, 20% of your money just raising it, right, that's very inefficient, and you're just burning a ton of your money before you even have it. Plus, you start tacking on all the fees that the platforms add, and next thing you know, your founders are left with 70% of the money that they thought they would have had. So these are really important things for them to keep in mind, because that can affect the runway they have. Because the investor doesn't look at it as oh, you spent some of this on marketing to get the money. They just look at it as you raised $5 million. What did you do with that $5 million, and where's the results? And if you went out in the normal world to raise money and you said, hey, I'm raising $5 million, but I'm going to spend 20% of this or 30% of this to actually raise the money, you'd be like, what the heck? That's really inefficient. There's not really a return for investors for that. The way investors get a return is you put all the money into the company to grow the company bigger, not money into attracting investors, right? You attract investors by creating a good product, good service, standing out, having great economics, great traction on the revenue side. But we're seeing a lot of companies these days to try to stand out by just spending a ton of their money that they're raising on ads to raise more money, which again, I think is a wrong approach.
So Kevin, I know you have a pretty optimistic kind of view, but around the market, what are some of the headwinds and tailwinds that you see?
Yeah, I think echoing from what Neil said, I think marketing, it's kind of like, in the days of e-com 2.0, where you could scale your business on Instagram and Facebook and low costs of acquisition. It was like $30. All right, I'm going to, become a billionaire off of this. And that's changed because it's just, the space got noisy and everyone was advertising on social and search. You're seeing the same now with crowdfunding. A few years ago, you could literally raise 5 million plus on Facebook and Google alone. And now that's not the case, because go on Instagram after this call and you'll see 4 ads: invest in the future of this, invest in the future of that. So, issuers need to get more creative about how they advertise, how they promote, become more efficient on it, so they're not spending 30% of their round, 40% of their round on ads. We've been big believers in PR for all of our companies. I think that's really important. We've also, again, because I come from an e-com background, we've invested a lot up front in the right assets, shooting the right videos, making the right looking website. Our businesses are B2B, so we don't have necessarily the focus that companies like Hammett do on, we're selling an image, we're selling a brand to thousands, hundreds of thousands of potential customers. So what we've done is we've actually built in a lot of marketing and branding skills in-house and really invested up front in producing the right video, doing the right branding, making the right ad creative. And this is for companies that aren't used to doing that. If I'm selling a robotic lawnmower that's $30,000, normally a company like that's not going to maybe have the best branding or have the best website because they're selling the landscapers. They're not selling online. And so we've really focused on producing the best assets so that our ad dollars go even farther and go even longer.
Sure. So this is going to be your final question for the panel today, guys. How can people learn more about your platform or company? Neil?
Check out Angels and Entrepreneurs. Easiest one.
That was easy.
Check out for Miso Robotics, invest.misorobotics.com. And then, of course, wavemakerlabs.com. Lots of new companies coming up.
Tony, I think you said it a few times today.
I did it. So, just Tony Drockton.
Tony Drockton. All right. Well, I think that wraps it up for today, guys. I want to say thank you to everyone who tuned in for our panel today, and thank you to our amazing panelists for being here. It was great chatting with you guys. All right. Guys. Thank you so much.
Day 4 of Equity Crowdfunding Week was full of incredible insight from a very powerful lineup.
What I loved most about today is that the speakers are not just thought leaders. These are the experts who are running these campaigns day in and day out. Eitan Butler, the chairman of Dalmore Group, they've been the broker-dealer of record for more than 100 Reg A plus financings. Same thing with Sarah Hanks. CrowdCheck has filed more than 100 Form A offering circulars with the SEC. These are true leaders in the industry. They know what they're talking about, and they're speaking from experience. Even my co-founder at Issuance, Aaron Mendez, he's had to put up with me for a record-breaking 4 years straight. I don't know how he does it, but he's doing an amazing job.
Well, I am so excited for the last day, day 5 of Equity Crowdfunding Week 2021, and we know that you are going to learn how to dream bigger, invest with your heart, raise that money, and get back to business.
Don't go anywhere, because tomorrow is a very special day. We're talking about retail investors. Yes, you, the people who are actually putting the hard dollars into these deals. That's what this industry is all about. At the end of the day, retail investors have to win. So stay tuned for tomorrow, because it's going to be an amazing closeout to Equity Crowdfunding Week.
The new era of dreams is upon us. Dreams that defy the constraints of the past and change what we thought possible. Dreams of a bigger future, one that levels the playing field, brings bigger opportunities and better rules. Dreams that redefine the power of community, push the human race forward, and push us to dream bigger. That era is now. Equity Crowdfunding Week. Dare to dream bigger.